Hello cainter students, GST is one of the most important and scoring subjects. For quick revision of all the important concepts, we provided this detailed marathon. This marathon will surely help you to excel in your public exams. This marathon is taught by CA Rajshekhar sir with over 17 years of outstanding teaching experience. This rigorous 10 hours session is tailored to score 35 plus marks. And here is a glimpse of chapter by chapter coverage in this 10 hours powerful learning session. Chapter wise timestamps information is provided in the description of this video. Unlike typical marathon videos, which are either extracted from pre-recorded videos or studio recordings, our marathon provides a real classroom feel since it is recorded live during face-to-face sessions. If you like the content, then press the like button so that YouTube can recommend this to more number of students. If you are benefited from this video, then don't forget to share the same with your friends so that they'll also get benefited. Your feedback encourages us. Leave your thoughts in the comment section to help us keep improving in creating helpful content. The faculty used exclusive material in this marathon and you can download it for free. And here is the step-by-step procedure to download that free marathon material. So in an Android mobile or Android tab, install our app Masterminds Online Classes from Google Play Store. So in the home screen, click the 3 horizontal lines icon in the top left corner and select free material option. In the document tab, you will find the required folder. Open it using Acrobat Reader or some other PDF reader app, and you can download or share it, or you can even take printout of the same. Stay connected to our channel as we will soon upload the marathon videos of remaining cainter subjects as well. Hit subscribe and enable the notification bell to get instant updates on our latest video uploads. Now enjoy the marathon video. All the best.
In this particular marathon session, I just actually prepared few slides, a few charts regarding this, and it will be, I think, shared with you on the YouTube. That means the entire chapter was prepared in one, just like a summary chart. So based on that, I will have the marathon now, and it will be shared with you in the YouTube. That means you can download it from the Masterminds website. Okay, ma'am. So in this marathon session, generally, whereas with respect to our GST, total 13 chapters are there in your syllabus, ma'am. Except 2 chapters, rest of the chapters are going to be discussed in this marathon session. The chapters that are not going to discuss in this marathon session is, first one is chapter number 1, that is introduction, and second one is accounts and records. Because those two you can study on your own, and there is nothing what we can say that much important in those chapters. So therefore, except those 2 chapters, the rest of the chapters we are going to discuss, ma. So we will start from supply chapter. In this particular half-day session, we are going to complete 4 chapters, ma. That is supply, levy and collection or charge of GST, exemptions, time and value of supply. These 4 are going to be covered in this particular session. Whereas tomorrow in the morning session, we are going to complete ITC, registration, tax invoice, debit notes and credit notes. That's it. Only 3 chapters can be completed in a 4-hour session because ITC was a little bit bigger. And after that, in the afternoon session, because tomorrow will be a... so whereas with respect to this point here, that one is here. Afternoon session, we are going to discuss about payment of tax, returns, place of supply, TDS and TCS for approximately 2 to 2.5 hours. After that, in the last 1.5 hour or 1 hour, we are going to discuss the amendments that are important from the examination point of view, as well as your recent MTPs will be solved. That means at the end of the marathon session, we will solve 2 MTPs. Based on that, how much knowledge you acquired based on marathon, we can test ourselves. So this is the entire curriculum of our marathon. Today we are going to complete 4 chapters, and in the morning session 3 to 4, and rest of the chapters will be completed in the afternoon session 2 to 2.5 hours. Last 1.5 hour will be what are the important areas we need to focus, like amendments, which amendments we need to keep focus, and we will solve the latest MTPs that are released by ICAI will be there now. I think 2 MTPs are there. Those 2 MTPs will be solved in the classroom. That means then we will have the knowledge, okay, how the paper pattern will be, and whether based on the marathon we are able to solve them or not. So without any delay, I will start this particular supply chapter. Don't worry, this PDF will be shared with you. If at all, yes, this will be shared with you because I just prepared total 11 charts for this. So it will be shared with the students, I think, I don't know in which way they will reach you. They will put it as a drive link with respect to, I think they will put it as a link in YouTube video, as far as I know. It will be uploaded in the YouTube as a link to that. The PDF will be provided to you, and there you can download it. So the first one is scope of supply, whereas with respect to scope of supply, that is, what is the section that deals with this particular point, That is, section 7 deals with this particular topic here. The definition of supply is here with respect to this particular one. Okay, so the definition of supply, if at all we are able to go through that, which section deals with this particular supply definition, Section 7. So in this section 7, how many subsections are there? Already we know that there are 3 subsections, 7.1, 7 subsection 1a and 7.2. As per 7.1, how many clauses are there? 4 clauses, 7.1a, 7.1AA, 7.1b and 7.1c. So 7.1a deals with general meaning of supply. 7.1b deals with importation of service. 7.1c deals with deemed supplies, and 7 subsection 1a deals with classification, whether it is a supply of the good or a supply of service, and 7.2 deals with negative list of GST. In that, this is 7 subsection 1a. As per 7 subsection 1a, there are few conditions that are required to be satisfied. What are those conditions, First one, it should be a supply. Second one, it should be of goods and services. It should be made for a consideration, and it must be in the course or furtherance of business. If all these conditions are satisfied, then what will happen, It is a supply as per 7.1a. What are the conditions that are required to be satisfied, First one, it must be a supply. Second one, it must be of goods and services. Third one, it should be done for a consideration. Fourth one, it should happen in the course or furtherance of business. So these are the conditions that are required to be satisfied. Okay, and okay, fine. So what is the first point here, It must be a supply. The question is here, what is meant by the word supply, Sale, transfer, barter, exchange, license, lease, rentals, disposal. These are the forms of supplies. What is meant by the word sale, If the ownership is going to be transferred permanently, it is a sale. What is meant by the word transfer? If without transfer of ownership, only the possession is going to be shifted, it comes under transfer. What is the difference between barter and exchange, If 2 parties exchanges non-monetary consideration, it is called as barter. At least some part of the consideration involved therein is money. It comes under exchange. And what is meant by the word license? Permission to use the IPR. IPR means intellectual property rights like patents, copyrights, brand name, trade name, etc. Okay. Our next one is lease rentals. What is the difference between them? If at all it is a movable property, the word lease will be used. If at all it is a immovable property, the word rental will be used. What is meant by the word disposal? At the end of the lifetime, if it is sold as a scrap or a second-hand plant and machinery, it is known as disposal. These are the 8 forms of supplies. If these supplies are made, what are the things that are supplied, ma? Goods or service? The question is here, sir, what is meant by the word goods? What is meant by the word goods, ma? Goods means movable property excluding money and securities. Goods means movable property excluding money and securities. What is meant by the word movable property? If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. So goods means movable property and excluding money and securities. Money and securities are neither the goods nor the service, ma'am. Okay. But goods includes actionable claims. What is goods includes actionable claims. So what is meant by this actionable claim? The claim on which we can take legal action even though there is no security, it is known as actionable claim. So example for that, every negotiable instrument is a actionable claim. But apart from negotiable instruments, ma? Specified actionable claims. What are they? Betting, gambling, casinos, horse races, online money gaming, all these things comes under specified actionable claims, ma. These specified actionable claims are also goods. But if at all you are able to recollect your 7 subsection 2, only on specified actionable claims we are liable to pay the GST. On the rest of the actionable claims, we are not liable to pay the GST. So that is the point. So goods means movable property excluding money and securities. Service means anything other than goods including use of money. Okay, money is neither the good nor the service, but use of money comes under supply of service. Sir, what is the example for use of money? What is the example for use of money? Anybody remembers, ma'am? What is the use of interest? What is the example for use of money, ma? Interest. So interest, but in interest, only one type of interest is taxable. Rest of the interest are exempted. What are they? Interest on credit card is only taxable. Rest of the interest are exempted. Interest on credit card only taxable. Rest of the interest are exempted. I think I just... So, okay, fine. So this is a point, ma'am. Goods. So what is the point we are discussing? In 7.1a, first condition, forms of supply was completed, and second condition, goods, we are actually discussing about. Goods means every kind of movable property excluding money and securities, and it includes actionable claims also. But not every actionable claim is liable to GST, ma. Only specified actionable claims are liable to GST. Next one. What is meant by the word service? Anything other than goods is a service, including use of money. What is meant by this use of money, ma? Interest. So with respect to interest, which one is taxable, ma? Interest on credit card is taxable. All other interest incomes are exempted. All other interest incomes are exempted. And next one. These are the important points. That means we are not discussing about every point, but what is the point that is relevant for the exam. So whatever the charts that are going to provided to you, 100% exam coverage will be there in these charts. So on the second definition you need to see is here. What is the second definition we need to see here, ma? Consideration. So what is meant by the word consideration now? What is meant by the word consideration? Consideration includes monetary payment and non-monetary payment values. That means consideration can be a monetary consideration or a non-monetary consideration. Consideration can be monetary consideration or non-monetary consideration, and it excludes government subsidies. What is included then? Which type of subsidy is includable? Other than government subsidy is includable in the consideration and we are liable to pay the GST. And whereas second one is other than government subsidy includable, whereas government subsidy excludable. That means on government subsidy we are not liable to pay any GST, but whereas other than government subsidy it is includable in consideration, definitely we are liable to pay the GST. Next one. What about the deposits? Deposits only considered when applied as consideration. Here deposit means security deposit. Here deposit means security deposit. What is meant by the word security deposit, ma? As caution deposit. Well, say for I told you the example of Goli Shodas and Mastermind's caution deposit. Why you need to pay caution deposit with respect to a hostel? While at the end of the syllabus, when you are leaving the campus, you should not do any damage to the properties. If has done, those amounts will be forfeited. That's why for that sake only these caution deposits are collected. That's why caution deposit or security deposit is not a consideration unless otherwise it is adjusted for the payment. That means when security deposit was given, it is not a consideration. But when the security deposit was forfeited, in the case, then only it is a consideration, then only you are liable to pay the GST. Security deposit, when it was given, it is not a consideration. But when the security deposit was adjusted for the payment, that means security deposit was when forfeited, then only it will be treated as consideration. That is the third point, ma. So these are the important points in consideration definition. Rest of the points you can ignore because the main focus is in the examination only on these 3 points. Okay. One is consideration can be monetary consideration or non-monetary consideration. Second one, government subsidy is not a consideration. Other than government subsidy is a consideration. Next one, security deposit is not a consideration unless otherwise it is adjusted for the payment. That means deposits only considered when applied as a consideration. That is the point. Okay, ma. Whereas with respect to this is important point in the actually entire goods definition, ma, because it was the latest amendment. That is SAC means shortcut. What is this? Specified actionable claims. There are 6 specified actionable claims: lotteries, betting, gambling, horse races, casinos, online money gaming. These 6 specified actionable claims only taxable, ma. Other than that, rest of the actionable claims are exempted. That means they are neither the supply of the goods nor the supply of service. Okay, ma. What are the specified actionable claims? 6 actionable claims are treated as specified actionable claims: lotteries, betting, gambling, horse races, casinos, online money gaming. Okay, ma. These 6 specified actionable claims are only taxable. Rest of the actionable claims are neither the exempted is not the correct word, even though we uses it. Rest of the actionable claims are neither the supply of the goods nor the supply of service. Okay, ma? Right. So these are the most important points in that. Okay, that is the thing with respect to this consideration topic. Nothing is there, and after that, related persons. There are few important points. I just noted it down. Based on that, we will go. That means, okay. Now this is second point here. So we are discussing about 7.1a. What does 7.1a deals with? General meaning of supply. In that, how many conditions are there? 6 conditions. Basically acts as 4 conditions. First one, it must be a supply. Second one, it must be of goods and services. Third one, it should be done for a consideration. Fourth one, it should be in the course or furtherance of business. In that, forms of supply we just completed. Goods and services we completed. Consideration we completed. What is the last point that is there now? In the course or furtherance of business. So what is meant by the word business here? It encompasses trade, commerce, manufacture, profession, occasion. That means trade, commerce, manufacture, profession, occasion. All these activities will be termed as business activities only. What is meant by the word trade? Buying and selling of the goods. What is meant by the word commerce? If buying and selling happens in large scale, it will be treated as commerce. What is meant by the word manufacturing? Converting raw materials into finished goods, that are treated as manufacturing. What is meant by the word profession and occasion? In order to exercise a particular thing, prescribed experience, prescribed education qualification is required. It comes under profession. Without any educational qualification, if at all we are able to generate a regular flow of income, it will comes under occasion. It will comes under occasion. Okay, ma. But anyway, as per GST law, whether it is trade, commerce, manufacturing, profession, occasion, everything will be treated as business activity. Okay. And another important point is in business definition. Business includes facilities provided by the club to members. Why club to members is an important point? Because based on a case law, I told you in the classroom. Because there was a dispute between the department and one club mom. The matter went to the court, and court said that who establishes the club? Members themselves. Everybody is allowed to the club? No. Outsiders are not allowed to the club. Only the members can enjoy the privileges or benefits of the club. Therefore, technically it is a self-service. Technically it is a self-service. If at all it is a self-service, there should not be any tax liability. Na? Because in order to attract the GST, there must be always two parties. One is supplier, second one is recipient. But here there is no such concept, na? Because it is a self-service. Therefore, we are not liable to pay the GST. This was the court judgment at that time. In order to nullify the court judgment, what department has done? What department has done? In Chesnama department at that time, they created a new clause, 7.1a. They created a new clause 7.1a. As per 7.1a, club and members are deemed to be separate persons. Whatever the transactions that happens between the club and the members is deemed to be a supply. That means in order to nullify the court judgment, department comes with retrospective amendment. Department comes with retrospective amendment. For that sake, what is the clause they created, ma? 7.1a. As per 7.1a, what is the position? Club and the members are deemed to be separate persons, and whatever the transaction that happens between club and the members, definitely it is a deemed supply. In order to make it as a deemed supply, first it should be a business activity, na? That's why whatever the facilities that are provided by the club to its members is a business activity. Definitely we are liable to pay the GST if rest of the conditions are satisfied. That's why this is an important point in business definition. Next one. It covers admission to the premises like zoos and movie halls, etc. That means admission to any premises. For that, any entry fee is charged. That entry fee is also a taxable activity. It is also a business activity. Okay, ma. Like Wonderla, Ramoji Film City, a zoo, museum, movie ticket, that means movie theaters. All these things comes under this admission to premises. For admission to any premises, any entry fee is charged, then it is a business activity. Definitely we are liable to pay the GST if the rest of the conditions are satisfied. Okay. And what is the next one? It includes activities of race clubs and bookmakers. That means whatever the activities race club will do, race club will do the betting in two ways. One, it will directly conduct the betting. Second one, it will give a license to the bookmaker and that particular bookmaker will conduct the betting. If you will remember in the classroom, race club can do the betting in two ways. One, it can directly conduct the betting. Second one, it will give license to the bookmaker and bookmaker, what will he will do, ma? Bookmaker will do the betting there. When this race club has given license to the bookmaker, one electronic device will be given. What is that electronic device, ma? Totalizer, just like a pager-like instrument in Pushpa movie. Pager will be used in that Pushpa 1 movie, just like that. That particular size one will be there, ma. In that, how many number of horses betting is going on? If you win, how much amount you will get? If you lose, how much amount you need to pay? All these things will be there under this, what we can say, this particular totalizer instrument. It is electronic device and it will be given by the, what we can say, ma, race club to the bookmaker. Okay, these are the business activities, important points. What are the important points in business definition? Trade, commerce, manufacture, profession, occasion are treated as business activities. What is the second one? Whatever the facilities that are provided by the club to its members is a business activity. Admission to any premises like zoo and movie halls, etc. is a business activity. And activities by the race clubs and bookmakers are treated as business activities. Okay, ma. So these are the points with respect to that we need to remember. Now this is the point we are discussing. We are discussing about definition of supply, that is 7.1a. In that, all forms of supply we just completed. Consideration in the course or furtherance of business completed. Next, the last point in this point is it includes agreement to supply the goods or service. That means already supply happened, then also you are liable to pay the GST. If the supply is going to happen, for that any consideration is received, then also you are liable to pay the GST. Simply sale and agreement to sell, both are covered. Here, what is the point, ma? Agreement, it includes agreement to supply the goods or service. Not only when the goods or services are supplied, when you enter into an agreement to make a supply, in those cases, what is the position, ma? Definitely, you are liable to pay the GST. That is the first point. Okay. So, next point is, ma, sir, what is the primary condition here? What is the primary condition is here? In order to treat a supply under 7.1a, it must be made for a consideration. But in few cases, even though the transaction happens without consideration, but still it can be treated as a supply. That means simply what we can say for this, it is an exception to 7.1a. It is an exception to 7.1a. So supplies without consideration. What is the another name for this, ma? Deemed supplies. First point. Where they are specified? They are specified in Schedule 1 of the CGST Act. They are specified in Schedule 1 of the CGST Act. Why, sir? That means 7(1)(c). What does this supply without consideration section number, ma? 7(1)(c). As per 7(1)(c), read with Schedule 1, whatever the activities that are prescribed in Schedule 1 or deemed supplies, that was the point that is specified in 7(1)(c). 7(1)(c) does not have those activities. The activities will be there in Schedule 1. What the law will say? What 7(1)(c) will say, ma? In chapter 7(1)(c), what the 7(1)(c) will say? The activities that are prescribed in Schedule 1 or deemed supplies. That's it. So what are the activities will be there in Schedule 1? How many activities are there in Schedule 1? That means simply how many deemed supplies are there? 4. In that, what is the first one? It includes permanent transfer of business asset. So what is meant by this permanent transfer of business asset? With respect to permanent transfer of business asset, 3 conditions will be there. First one is, it must be a business asset. Second one, on that ITC was claimed. Third one, it must be permanently transferred. If all these 3 conditions are satisfied, even though the transaction happens without consideration, but still it is a deemed supply. What are the 3 conditions that are required to be satisfied, ma? First condition, it must be a business asset. Second one, on that ITC was claimed. Third one, it must be permanently transferred. If all these 3 conditions are satisfied, even though it happens without consideration, but still it is a deemed supply. What is meant by the word business asset? If the asset is used or intend to be used, in both cases, it is a deemed supply. Used means actual use. Intend to be used means passive use. Fire extinguishers that is there, passive use. They are ready to use. But in fact, we are not willing to use it. We just want to use it on a daily basis. Weekly. At least monthly once. No, only at the end of the batch. Fine. When only faculty is there. Okay, so generally, a business asset means, what is the first one? It must be used or intend to be used. In both cases, it is a business asset. And what is the second one? ITC. It must be a business asset, and on that, you must claim the ITC. That is the second one. Sir, that means, if at all ITC is not admissible, then it can't be a deemed supply. If ITC is inadmissible on a particular business asset, if that business asset is permanently transferred, is it a deemed supply? Answer is no. Why? All the 3 conditions must be satisfied. First one, it must be a business asset. Second one, on that ITC was claimed. Then only it is a deemed supply. If ITC is inadmissible, in those cases, the concept of deemed supply will not be applicable. So another question is in my mind. ITC is allowed. That means it is not a blocked credit. But we are not willing to take the ITC. In that case, if that asset is transferred permanently, is it a deemed supply? I am repeating the question once again. It is not a blocked credit. That means it is allowed. ITC is allowed on that business asset. But we are not willing to take it. Instead of that, we have taken the depreciation. There is a possibility for us in ITC chapter. We are having 2 options. On the tax amount, you can claim the ITC or you can claim the depreciation. I am willing to take the depreciation. I am not interested in taking the ITC. That asset is transferred permanently without consideration. Is it a debit supply? Answer is no. If ITC is inadmissible or ITC is admissible but we did not violate, in both cases, if the business asset is transferred permanently, it is not a deemed supply. Because as per 7.1c, these are the three conditions. All the three conditions must be satisfied. Then only it is a deemed supply. What is the first one? It must be a business asset. Second one, ITC must be claimed. And third one, it should be permanently transferred. What is meant by the word permanent transfer? Transfer can be divided into two types. One is revocable transfer. Second one is irrevocable transfer. What is meant by the word revocable transfer? During the lifetime, is it possible to get it back? Then answer is yes. Then it is a revocable transfer. During the lifetime, it is not possible to get it back. It comes under irrevocable transfer. Because sometimes something was done, it can't be undone. Those things are treated as irrevocable in our Telugu. Already I told you one sentence at that time. Gadichipoyina kalam, karigipoyina dhanam, ichina mata, jarigina klasu, virigina manasu, pagilina glass. All these things are irrevocable. We can't take them back. Okay, those are the cases. Just like that, here the transfer must be irrevocable. The transfer must be irrevocable. Then only it is a permanent transfer. If all these three conditions are satisfied, then even though it happens without consideration, but still it is a deemed supply. And what is the second point there, ma? So we completed permanent transfer of business asset. And what is the next point? It covers the transactions between related persons or distinct persons. So what is meant by this related persons, ma'am? So I just wrote the definition below this point. See, yes, wait. So this is the point with respect to related persons, ma. So many points are there in related persons, but only these are important ones. That means the important ones already I wrote there. The first one is here. It includes partners, officers, directors, and family members. And it covers employer-employee relationship. Includes entities with shared control or ownership. So this is the summary of related persons, ma. Simply partners, officers of one another's business, directors in one another's company, family members, employer-employee relation, and includes entities with shared control. That means holding and subsidiary, more than or equal to 25% of voting power, these two controlling another, and these two controlling another or controlled by another. These are the cases that are covered under related parties, ma. But from examination point of view, in related persons, only 2 points are important in your CA generally. One is same family members. Second one is employer-employee relation. So this is the point, ma. With respect to same family members, what is the story we can say, ma? With respect to same family members, what is the story we can say? When the persons can be treated as same family members? Spouse. Okay, ma. Spouse and children, whether financially dependent or not. Whereas parents, grandparents, brother, sister, when financially dependent, then only they are treated as related parties, same family members. When the persons can be treated as same family members, ma? Spouse and children, whether financially dependent or not. And parents, grandparents, brother, sister, when financially dependent, then only they are treated as related persons. See, Spouse and children, S plus C. That means simple. Spouse and children financially dependent or not. Grandparents, parents, brother, sister, only financially dependent, then only they are treated as same family members. And another important point in related persons is employer-employee relation. So with respect to employer-employee relation, whatever the services employee will do to the employer, I am not talking about employer to employee, I am talking about employee to employer, whatever the things he will do in the capacity of employee, no GST. Why ma? Because it is taxable under income tax, income from salaries. Second one, employee to employer, any other capacity GST is payable. For example, actually approached me for GST Guntur Marathon as a actually I'm working in Guntur. In my employee capacity, I'm taking the marathon in Guntur. Therefore, if at all I paid any remuneration, it is not liable to GST. But Hyderabad is not there in my agreement. Asked me to go to Hyderabad and conduct a GST marathon there also. Then it was done in the employee capacity or other than employee capacity. Other than employee capacity, in those cases, whatever the remuneration that is paid on the GST is leviable because the relationship is not employer and employee. That is the first point I wrote there. Services provided by employee to employer. In the capacity of employee, no GST. Other than employee capacity, other capacity, GST is payable. This is the first point. Now second one. What is the second one? What is the second one? Employer to employee. Previously we had a discussion now. Employee to employer. Now we are discussing about employer to employee. So employer to employee, as per the agreement, whatever the benefits employer gives to the employee, as per the agreement, no GST is payable. Whatever the benefits that are given by employer to employee, not as per the agreement, then GST is leviable. Whatever the benefits employer gives to the employee, then it comes under income from salaries. Perquisites, I think they will be called as. Whatever the benefits employer gives to the employee, as per the employment agreement, it is taxable under income tax, not under GST. That's why what I wrote, employer to employee, as per the agreement, no GST. What is the second point? Employer to employee, not as per the agreement. Then what is the next thing we need to check? What is the value of the benefits that are provided? The value is less than or equal to 50,000. No GST is payable. It is not a supply. The gifts value by employer to employee is more than 50,000. GST is payable. Okay, ma? Employee to, these are the 2 points that are only important in related persons. One is same family members. When the parties are treated as same family members, spouse and children, whether financially dependent or not, parents, grandparents, brother, sister, when financially dependent, then they are treated as related persons. And second important point is employer-employee relation. Whatever the services that is done by employee to employer, in the capacity of employee, no GST. Other capacity, GST payable. Second one, employer to employee, whatever the benefits he will give, as per the agreement, comes under salaries, no GST. Whatever the benefits he will give, not part of employment agreement, then we need to check what is the value. Value less than or equal to 50,000, no GST. Value more than 50,000, GST payable. Got the point, ma? So these are the points. So any transaction that happens between these related persons in the course of business, even though it happens without consideration, but still it is a supply. That is the point. Any transaction that happens between these related persons, even though it happens without consideration, but still it is a deemed supply. Now, what is the next point? Apart from related persons, another point is also there. Distinct persons. What is meant by this distinct persons, ma'am? Separate registrations within the same state or different states. Includes establishments of the same entity in different states. That means once you are having the separate registration, whether within the same state or in different states, these persons are known as distinct persons. That is its meaning, simple meaning. So when separate registrations are there, even though the establishments of the same entity, whether within the state or outside the state, but one separate RC was there, they are deemed to be distinct persons. That is the point you need to remember. Separate registrations within the same state or different states, but they are part of same entity, then they are known as distinct persons. So the transaction between distinct persons, definitely it is a deemed supply. That is a point one need to remember. Okay, see, this is a point I just wrote here. Within the same state, separate RC is mandatory or optional? Optional, but once taken, they are deemed to be distinct persons, then it is a DS, means deemed supply. As long as all the place of businesses are there in same state, then separate RC is optional. But once taken, they are deemed to be distinct persons. When they are deemed to be distinct persons, it is a deemed supply. Second one, between two states, simply you are having a place of businesses in different states. In those cases, what is the position, ma? Definitely separate registration mandatory or optional? Mandatory. When separate registration was taken, they are deemed to be distinct persons or not? Yes. When they are deemed to be distinct persons, is it a stock transfer or a deemed supply? Deemed supply. That is the point. Okay, ma? So this is a point. Why we are discussing about this point now? Because we are discussing about 7.1c. In that 7.1c deemed supplies, first point, permanent transfer was completed. Now related parties also completed. What is the third one now? What is the third point that is there? So we covered this one completed, this one completed. I think this one is also completed now in deemed supplies now. Now what is the third point? Sorry, next point we need to see. Applies to certain principal agent transactions. So now the question is here, how many types of agents are there? Two types of agents will be there. One is buying agent and second one is selling agent. Here the transaction between buying agent to the principal or principal to the selling agent. Yes. So here third party, TP means third party, is sending the goods to the buying agent and buying agent in return sending the goods to the principal. As per 7.1c, even though the transaction between buying agent and principal happens without consideration, but still it is a deemed supply. Same point will be applicable to selling agent also. See, principal is sending the goods to selling agent and selling agent is selling the goods to the customer. In this case, even though the transaction between principal and selling agent happens without consideration, but still it is a deemed supply. So the transaction between buying agent and the principal or principal and the selling agent, even though it happens without consideration, but still it is a deemed supply. Okay, but there was one relaxation we discussed. In that case, the concept of deemed supply will not be applicable. What are the cases, ma'am? But invoice in the name of the principal, then the concept of deemed supply not applicable. But invoice in the name of the principal, then the concept of deemed supply is not applicable. That means while receiving the goods by the receiving the goods by the buying agent, or while selling the goods by the selling agent, if the invoice is in the name of the principal but not in the name of the agent, then the concept of deemed supply will not be applicable. While receiving the goods by the buying agent, while selling the goods by the selling agent, if invoice is in the name of the principal but not in the name of the agent, then the concept of deemed supply will not be applicable. Okay, ma. This is the third point. Principal agent relation. So with respect to principal agent relation, ma, what is the general rule? Buying agent to principal or principal to selling agent. Even though it happens without consideration, but still it is a deemed supply. And what is the second one? If the invoice is issued in the name of the principal, then the concept of deemed supply will not be applicable. Okay. Next. In deemed supply, what is the next point, ma? Includes import of service from related persons for business purpose. Simply I just give in one line. Import of services from related persons for business purpose. Already we know that it is without consideration. So in order to be covered under 7(1)(c), import of service, how many conditions that are required to be satisfied now? 4 conditions, answer is yes. For 4 conditions, answer is yes. In those cases, what is the position, ma? The concept of deemed supply will be applicable. First condition, is it import of service? Yes. Is it without consideration? Yes. Or the related parties? Yes. And is it for business purpose? Yes. For all these 4 questions, answer is yes. It is a deemed supply. What is the first question, ma? Is it import of service? Yes. Is it without consideration? Yes. Or the related parties? Yes. Is it for business purpose? Yes. For all these 4 questions, answer is yes. Then as per 7(1)(c), definitely it is a deemed supply. Okay, ma? This is 7(1)(c), ma. And these are the few important points there. Okay. And we have discussed about 7(1)(a), that is definition of supply. And we discussed about 7(1)(c), that is supply without consideration, and some important points here. Goods definition, service definition, consideration, and business. Now the next thing is here. What is the next point now? Schedule 2, classification of supply. That means, what is the section number? This is section 7, subsection 1A. What does 7 subsection 1A deals with? What does 7 subsection 1A deals with? Classification. That means once it was a supply as per 7(1), whether it is a supply of the good or a supply of service will be taken care by 7 subsection 1A. That is classification. So with respect to the 7 subsection 1A, transfer of goods, ma, that means transfer of title in the goods classified as supply of the goods. That means, what is meant by the word title? If the ownership is going to be transferred, is it a supply of the good or a supply of service, ma? Supply of the good. That is the first one. Transfer of title in the goods classified as supply of the goods. When ownership is going to be transferred, it is a supply of the goods. Second one, transfer of right in the goods without transfer of title as a supply of service. That means without transferring the ownership, only right of possession or right in the goods is transferred, it comes under supply of service. That is the second point. If the ownership is transferred, it is a supply of the goods. Without transfer of ownership, only the possession is going to be shifted. It comes under supply of service. Next one, land and building related transactions. I divided the points into based on concepts, not as per your material. So with respect to land and building transactions, lease, tenancy and letting out classified as supply of service. Why ma? In tenancy of building or in the tenancy of land or letting out of the building, the ownership is transferred or the ownership is not going to be transferred. Ownership is not going to be transferred. In that case, is it a supply of the good or a supply of service? Supply of service. Next one, construction services. This is important one. Construction services taxable if consideration is received before completion and it is a supply of service. I told you this point now. While the property was under construction, some part of the consideration was paid. It comes under supply of service. We are liable to pay the GST. But whereas the total consideration was paid after the certificate of completion, it comes under sale of building, which is covered under negative list 7 subsection 2. On that, there is no need to pay any GST. I am repeating it once again. While the property was under construction, some part of the consideration was paid. It comes under supply of service and we are liable to pay the GST. Whereas the total consideration was paid after the certificate of completion, it comes under sale of building, which is covered under 7 subsection 2, negative list of GST. Therefore, we are not liable to pay any GST on it. Okay, that's why I wrote that point in a simple manner. Construction services are taxable if the consideration is received before completion. After completion, then it comes under sale of building. There is no need to pay any GST. Okay, ma'am? Is it clear? So can I move to the next point, ma'am? Yes, the next point is IPR. What is meant by this IPR? Intellectual property rights. What is meant by this intellectual property rights? Example, patents, copyrights, trademark, those things comes under IPR. IPR is a supply of the good or a supply of service, ma'am? Sure, supply of service only. IPR is always supply of service. Lock किया जाए. That's why I wrote those 2 points here. See, permanent transfer of IPR is a supply of goods. Temporary transfer of IPR is a supply of service. Permanent transfer of IPR, supply of the goods. Temporary transfer of IPR comes under supply of service. Okay, ma. Permanent transfer of IPR comes under supply of the goods. Temporary transfer of IPR comes under supply of service. Take example KFC, Ibaco. These brand names are given on a temporary basis. Therefore, it comes under supply of service. But whereas Nokia brand name was permanently given to Microsoft, in that case, is it a supply of the good or a supply of service, ma? Definitely it is a supply of goods. Permanent transfer of IPR, supply of the goods. Whereas temporary transfer of IPR comes under supply of service. That is the point. Okay, ma'am. So the next one is specific service categories. I just use the word. That means even though both goods and services are involved in that, law specifically says that it is a supply of service only. I just categorized them into specific service category. That means in your material it will be given as composite supply. Okay. The point is, what is meant by this? Even though goods plus service both are involved therein, law specifically says that it is a supply of service. What are the activities? Restaurant, with restaurant and catering services. In restaurant and catering services, what is the position, ma? Food is sold and served in a plate. Food is sold, goods. Served in a plate, service. Both are there. But law says that it is a supply of service. Second one, works contract services. What is meant by this works contract services, ma? What is meant by this works contract service? Means what works contract service means construction of immovable property. What is meant by the word works contract, ma? Construction of immovable property is known as works contract. Construction of immovable property is known as works contract. Say, for this building construction, iron, sand, cement, wood, plus labor, all are needed. That means for the construction of this building, goods plus service, both are required. But law says that specifically it is a supply of service. Same point will be applicable to job work also. Take the example of tailoring. Very good, somebody said. So with respect to this tailoring case, ma, we just gave the cloth to him. The tailor will do the stitching work, tailoring. But while doing the tailoring, he will use the buttons and as well as the thread. All these things he need to purchase, na? Those buttons and thread ownership will be transferred to us, na? That means in tailoring services also, goods plus service both are involved. But still law says that one, technically that one is a job work, ma? And that means on our goods, somebody is doing any process, it comes under job work. In our Telugu, మనకి సంబంధించినటువంటి గూడ్స్ మీద అదర్ పార్టీ ఏదైనా ఒక ప్రాసెస్ని క్యారీ చేస్తే ఆ ప్రాసెస్ని మనం ఏమంటాము అంటే జాబ్ వర్క్ అంటాం. మన క్లాత్ మీద అదర్ పార్టీ స్టిచ్చింగ్ అనే సర్వీస్ ప్రొవైడ్ చేస్తున్నాడు కాబట్టి ఆబ్వియస్లీ ఇట్ ఈస్ ఏ జాబ్ వర్క్. సో ఇన్ జాబ్ వర్క్ ఆల్సో గూడ్స్ ప్లస్ సర్వీస్ బోత్ విల్ బి దేర్. But law specifically says that it is a supply of service in order to avoid the dispute. Okay, ma? This is the point. So this is 7 subsection 1A classification. In this specific service category is important, ma. After that construction service is important. Okay. And first one is the general theme of 7.1A. If ownership is transferred, supply of the goods. Without ownership, only possession is transferred, comes under supply of service. This is a basic theme of entire 7 subsection 1A. After that, what is the next point we need to see after 7.1A? What is the thing that was still left? 7.2. What does 7.2 deals with? Negative list. That is non-taxable activities. They are neither the supply of the goods nor the supply of service. We will see what are those activities. So with respect to 7 subsection 2, these are the activities, ma. First one is services by employee to employer in the course of employment. I already told you this point. Whatever the things employee will do to the employer in the capacity of employee, it comes under income from salaries, not under GST. That's why I just put it there. That means it is neither the supply of the goods nor the supply of service. Second one, services by the court and tribunals. Because justice must be provided equally to all. In order to make it happen, whatever the court fee that is there, on that court fee, we are not liable to pay any GST. Next one. Functions performed by constitutional authorities means MPs, MLAs like people elective members, and constitutional post holders like President of India, Governor, like that, and government regulatory bodies like SEBI, IRDA, like that, SEBI chairman, SEBI member, SEBI director, if it all have done anything in that capacity, it is neither the supply of the goods nor the supply of service. Sir, what is the word you used? In that capacity. As a MP, what you will do? On that there is no GST. If MP purchased a BMW car, he is liable to pay the GST. Because it is not the function of the MP to purchase a BMW car. In that MP capacity, what he will do, it is neither the supply of the goods nor the supply of service. Got the point, ma? In the capacity of MP, what you will do, no GST. Other than the MP capacity, in his personal capacity has done anything, definitely you are liable to pay the GST. Okay, next one. Sale of the land and completed buildings. See the word I used. Land is a immovable property. It is there in the negative list. See, completed buildings is there in the negative list. That means what is meant by sale of completed buildings? That means I told you already, while the property was under construction, some part of the consideration was paid. It is not a sale of complete building. It comes under construction service. Some part of the consideration was paid while the property was under construction. It comes under construction service. But whereas the total consideration was paid after the certificate of completion, it comes under sale of complete building. In that case, what is the position, ma? It is neither the supply of the goods nor the supply of service. Therefore, we are not liable to pay any GST. Break low, na? Okay, my fine. So the next point is here under 7 subsection 2, actionable claims except specified actionable claims. I told you, what are those specified actionable claims, ma? Lotteries, betting, gambling, casinos, horse races, and online money gaming. These 6 are treated as specified actionable claims. On the specified actionable claims, definitely we are liable to pay the GST. On the rest of the actionable claims like promissory note, bills of exchange, checks, arrears of rent, insurance claims, on all these areas, definitely we are not liable to pay any GST. Last but not the least, burial, funeral, as well as mortuary, crematorium. These services are provided in relation to deceased person. So whatever the services you will provide in relation to that deceased person, it is neither the supply of the goods nor the supply of service. Therefore, we are not liable to pay any GST. Okay, ma'am. So this is 7.2. Now the next one is few circulars, ma. There are so many circulars in your material, but only these are important ones, single line stories. I just made them. Okay, ma. First one is with respect to donations and gifts. Donations without quid pro quo, not considered as a supply. What does this mean? Without any consideration or obligation. Donations without any obligation is not a supply. There is any obligation on the donee to do something, it is a conditional donation, definitely it is a supply. That is the first point. Donations without condition, donations without obligation, it is not a supply. And already I told you this point previously. Gift to employees up to 50,000 rupees per year is not taxable. I told you this point. Gift value is more than 50, then only GST is payable. Gift value is less than or equal to 50,000, GST is not payable. Sir, one doubt is here. If the gift value is 70,000, then excess 20 is taxable or total 70 is taxable? Total 70 is taxable. That is the point. Next one. Second point is in relation to sales promotion schemes. With respect to free samples, generally not considered supply. Unless ITC was taken, so generally free samples are not considered as supply unless they are covered under deemed supplies concept. What is the general rule? Free supplies means without consideration they will happen. Therefore, they are not considered as a supply. But if at all these free samples are covered under deemed supplies, like in deemed supplies 4 points are there na, permanent transfer, related party transaction, principal agent relation, import of service. If it falls under any of those 4 categories, then only free samples comes under supply. If free samples does not cover under any of those 4 activities, it is not a deemed supply. Got the point, ma? Next one. Buy one, get one free offers treated as single supply. That means section 8 is applicable, not section 7. What is the difference between 7 and 8? What is the difference? If at all it is any supply that is supplied individually, section 7 is applicable. If the item is going to be supplied as a bundle, in those cases section 8 will come into scene. If the item is supplied individually, in those cases what is applicable, ma? Section 7 is applicable. If the item is going to be supplied as a bundle, section 8 is applicable. Here, buy one, get one offer means 2 items are supplied for a single consideration. It will be treated as single supply, as a bundle. Therefore, what is the section that is applicable? Section 8 is applicable, not section 7. Based on section 8, it can be either composite or mixed supply. Next one. Principal agent relationship already I covered, ma. Taxability depends upon invoicing arrangements. I told you, na. If the invoice is in the name of the principal, then the concept of deemed supply is not applicable. If the invoice is in the name of the agent, then the concept of deemed supply will be applicable. Second one. Declaratory agents have specific tax treatment for the interest on advances. I will have to discuss this point separately, ma. I just wrote it, we will discuss that. Just wait for this point. Next one. Interstate movement of the vehicles not treated as supply in most of the cases. Okay, what does this mean? Interstate movement of the vehicles means between distinct persons. Between deemed to be distinct persons, it is neither the supply of the goods nor the supply of service. We are discussing about movement of conveyance. Any interstate physical movement of motor vehicle is there between deemed to be distinct persons, not everybody, between deemed to be distinct persons, then the transfer of motor vehicle from one place to another place of the same organization, it is neither the supply of the goods nor the supply of service. Got the point, ma? Any interstate physical movement of the motor vehicle is in between 2 deemed to be distinct persons, like from one branch to another branch, one service, one head office to another, head office to branch, one branch to another branch, like that it was there. They are called as deemed to be distinct persons. They are neither the supply of the goods nor the supply of service. Okay, ma. But further, 3 conditions are required to be satisfied. Any of these 3 purposes, then only it is not a then only it is not a supply, ma. I think now you remembers, anybody remembers what are those? What are those 3 points? Just wait. First one, that particular physical movement reason can be transportation of passengers or transportation of goods. And what is the third one, ma? Repairs and maintenance. If any of these 3 purposes are there, then that physical movement of motor vehicle is not taxable. For which purposes the physical movement must be there? It can be for transportation of passengers, or it can be for transportation of the goods, or it can be for, what is the thing, ma? Repairs and maintenance. Any of these 3 purposes it was done. In those cases, it is neither the supply of the goods nor the supply of service. Which one? Physical movement of motor vehicle is not taxable. Sir, what about that repairs and maintenance? Repairs and maintenance definitely taxable. If at all it was for further supply, that means you are moving that car to the car showroom. Here what is the purpose? For selling it further. అక్కడ కార్ని మూవ్ చేయడం వెనకాల ఉన్న పర్పస్ ఏంటి? ఫర్దర్గా సేల్ చేద్దామనా, లేదు ఒక చోటు నుంచి ఇంకో చోటుకి ట్రాన్స్ఫర్ చేద్దామనా? ఫర్ ఫర్దర్ సేల్. If at all it was for further sale, in those cases it is taxable. So what is the summary of movement of conveyance? 2 points. First one, physical movement of motor vehicle for any of these 3 purposes, it is not taxable. What are those 3 purposes? Transportation of passengers, transportation of the goods for the sake of repairs and maintenance. Okay, that point is clear. Second one, sir, on the repairs and maintenance GST will be there? Yes. And another point, sir, if that motor vehicle is transferring for further supply, sir, not for transportation of passengers, not for transportation of the goods, not for repairs and maintenance, the transfer of motor vehicle is only for further sale. In that case, is it taxable or not taxable? Taxable. That is the point, ma, you need to remember. And only declaratory agent is the thing we need to see. I will show it to you. This is the story, ma. It is a mixture of value of supply and supply chapters. In order to understand this, so this is, you need to have the knowledge of value of supply also. I think it is a marathon session, therefore already you know value of supply chapter also. Just why I just divided this point, ma. It was a circular, in fact. It is in relation with 2 chapters. One is value of supply, second one is supply. Now we are seeing that. See, credit sales. Levy of interest for the delayed payment of consideration. That means if at all it is a credit sale, generally what the supplier will do, ma, along with the sale price, he will charge some interest also, na, because he is giving us some credit. In that case, whether that interest amount is taxable or not, first question. Second question, in whose hands it is taxable? In the hands of the principal or in the hands of the agent? That is the point we are seeing now. What is the point we are seeing, ma, in relation to value of supply and supply? First question, if at all it is a credit sale, okay, in that case, with respect to credit sale, generally interest will be charged, na? That interest is taxable or not is the first question. Second one, it is taxable, then whose hands it is taxable? In the hands of the principal or in the hands of the agent? Here the agents are divided into 2 types. That is our story now. First, we will have the discussion on normal agent. What is the difference between normal agent and declaratory agent, ma? Normal agent will only sells the goods on behalf of the principal. He will not guarantee the amount. But whereas declaratory agent, along with selling the goods, he will give guarantee also to the supplier if the buyer makes any default. That's why in comparison with normal agent, declaratory agent will get more commission. Okay, now come to the point. This is the difference between normal agent and declaratory agent. Now normal agent. So invoice for the supply to the customer in the name of the principal. So what are the circumstances I am covering? Invoice for the supply to the customer is in the name of the principal. In that case, interest is included in the value of the supply of principal. Interest is included in the value of supply of the principal. Why ma? Invoice is in the name of principal. Therefore, interest will go to principal only na. Then in whose case it is actually needed to be added? Principal amount. That means for the sale value it is includable. 15 subsection 2, I just wrote there. See, section 15, subsection 2, clause D. That is fourth point. Okay. If it all you remembers, that is okay. Otherwise, in this session only you will listen to that. Today we will complete up to value of supply if time permits. Okay. So, interest is included in the value of supply of principal. Why ma? Invoice is in the name of the principal. Therefore, interest will go to principal only. Therefore, under whose taxable value it is needed to be added? Principal taxable value. Next one. Invoice in the name of the agent. Interest is included in the value of supply of agent. As simple as that. That means interest is includable in whose hands ma? It depends upon your invoice. If the invoice is in the name of the principal, interest is also included in the value of principal. If invoice is in the name of the agent, then what will happen ma? Interest is added to the value of agent. That is the point. Now come to this declaratory agent. Okay, you can copy in the break ma. No issue. So, declaratory agent. See, invoice in the name of the principal. P means principal. Extending loan is the independent service. Consideration for the loan is interest. It would not form part of the value of original supply. Interest is exempt. That means here who is providing the credit facility? Not the principal ma, agent. Here what happens is ma, he is a declaratory agent. That's why what he will do ma, he will finance the buyer and he will make the payment to the seller. This declaratory agent, when the time arrives, the buyer defaulted, then what he will do ma? He will make the payment to the supplier. He will make payment to the supplier. Now that amount will be recovered from the buyer there. అంటే ఎప్పుడు ఈ పాయింట్ డెలకరేటరీ ఏజెంట్ అనే పాయింట్ ఎప్పుడు వస్తుంది అంటే ఇక్కడ when the buyer defaults, then only this point is applicable. If the buyer does not defaults, that point, left side point what we have discussed, that point only applicable. Okay ma. Now come to this point. If the buyer defaults and the amount is paid by the DCA, declaratory agent, later on it is going to be recovered from the buyer. Now the question is here, under whose name the invoice is there? Principal. In that case, who has sold the goods? Principal. Who has sold the goods? Invoice is in the name of the principal means who is selling the goods? Principal is selling the goods, but who has given the loan? Agent, DCA. In that case, giving loan is a independent service. Got the point? Invoice ఎవరి పేరు మీద ఉంది? ప్రిన్సిపాల్. లోన్ ఎవరు ఇచ్చారు? ఏజెంట్. అలాంటప్పుడు లోన్ ఇవ్వడం అనేది ఇండిపెండెంట్ సర్వీసా కాదా? Yes, extending loan is an independent service. Consideration for the loan is interest. I already told you, interest on credit card only taxable. All other interest incomes are exempted. Got the point, ma? So that's why consideration for loan, interest, it would not form part of the value of original supply. Interest is exempt. That is the first point. Okay ma, first point is clear. Manaki, that means if the invoice is in the name of the principal means who is selling the goods? Principal is selling the goods. Who is giving the loan? Agent. So selling the goods and giving the loan, both are different ones. In that case, giving loan is an independent activity. If at all it is an independent activity, then whatever the interest you will get, it is exempted. Why sir? Interest on credit card only taxable. All other interest incomes are exempt. That is the first point. Sir, invoice is in the name of agent, sir. In that case, what will happen? Now, who is selling the goods? Agent. Who is giving the loan? Agent. In that case, it is a part and parcel of taxable value. Interest is taxable. That is the story, ma. This is the most important circular, and it was there in your material under self-study. Almost 2 pages or 1 page it will be there, ma. I think it was there in either value of supply or supply chapter. It will be there. Supply chapter. Supply chapter it was there. In supply chapter it was there, ma. Okay. This is the entire story of that one. Okay. If you want to copy that, in break was there, na, you can copy that. I will just keep it here. Okay. Even I will share the. Okay, this one is not possible. I think 2 types are there, na, without writing. That one is can be shared with you because it can't be downloaded. Handwritten ones are there, Nama. So that's why it's taking time, and it's not opening in the mobile phones also sometimes. So that's why I prepared 2. Even I'm unable to zoom in this one. But so that's why that one will be shared with the students, ma. This one will be shared. So which is no handwritten marks are there, but if at all this is possible, I will share this one also. No issue, but based on, because in WhatsApp it is not actually going to Telegram only, it is going at present. Even WhatsApp is not accepting. File size is bigger. When handwritten was there, na, file size will increase, na. So that's why I will try to do that, but this one is 100% issued. I will share it with you. And so this is with respect to this point here, DCA. Now what is the last point, ma? There ends this entire story of section 7. And now the last one is, what is the last one here, ma? Composite and mixed supplies. What is meant by this composite and mixed supply, ma? If the item is going to be supplied individually, in those cases, section 7 is applicable. If the item is going to be supplied as a bundle, in those cases, section 8 will come into scene. If the item is going to be supplied individually, in those cases, section 7 is applicable. If the item is going to be supplied as a bundle, in those cases, section 8 will come into scene. Okay, ma. Right. That means if at all you are purchasing a dairy milk silk for me, it comes under section 7. If at all you are purchasing a celebrations box for me, it comes under section 8. Because in celebrations box, dairy milk, 5-star, gems, as a bundle we will sell. In that case, section 8 will come into scene. Okay, ma. Now, in this section 8, 2 types will be there, ma. One is composite supply and another one is, ma, mixed supply. So what is meant by this composite supply? There are 3 conditions. Now, first one, minimum 2 or more taxable supplies must be there. If one of the supply is a non-taxable supply or a exempted supply, then it can't be a composite supply. In the bundle, all the supplies must be taxable supplies. Then only it is a composite supply. In that bundle, one supply is either exempted or a non-taxable supply, then it can't be a composite supply. Next one. And they must be naturally bundled. What is meant by this naturally bundled, ma'am? With respect to not celebrations, mobile with charger. Because customers generally, it will be treated as a natural bundle when there is a tradition in that particular business to supply them together, or the customers expect them in such a manner, or without the other, the total bundle is useless. In those cases, it will be termed as natural bundle. So if at all it is a natural bundle and one of the supply is a principal supply, then only it is a composite supply. So basically 3 conditions. Minimum 2 or more taxable supplies. Second one, it is a natural bundle. Third one of the supply should be a principal supply. What is meant by the word principal supply is predominant element or purpose of the contract. Say for example, mobile phone with charger. What is the principal supply there? Mobile phone. And hotel accommodation with breakfast. Hotel accommodation will be the principal supply. TV with remote. TV will be the principal supply. AC with remote. AC will be the principal supply. AC with installation. AC will be the principal supply. In this case, what is the rate of tax that is applicable? Tax at the rate applicable to the principal supply. What is the rate that is applicable to the principal supply will be applicable to this entire composite supply. This is the first point. And what is the second one? Mixed supply. What is meant by the word mixed supply, ma? What is meant by the word mixed supply? Minimum two or more individual supplies, they can be either taxable or non-taxable. Whereas under composite supply, in the entire bundle, all the supplies must be taxable. But whereas under mixed supply, not only the taxable ones, even exempted or non-taxable supplies can also be there in that bundle. Next one. It is not a naturally bundled one. That means it is an artificial bundle. And third one is it must be supplied for a single price. If all these three conditions are satisfied, then what is the position, ma? It is a mixed supply. First condition, minimum two or more individual supplies. Second one, single price. Third one, artificial bundle. If all the three conditions are satisfied, then it is a mixed supply. And what is the rate that is applicable, ma? Highest rate. There ends supply chapter. Okay, ma'am. So I think we need to start this reverse charge mechanism with respect to, I think, levy and collection or charge of GST. Whatever the name it is, with respect to this point here. Here, ma, generally supplies can be divided into two types. One is interstate supply and second one is intrastate supply. With respect to this one, let's say levy and collection of under GST Acts, ma. That means what is the charging section with respect to CGST for the levy and collection, ma? Section 9. Whereas with respect to IGST, what is the section that will be there, ma? Section 5. And in this section 9, how many subsections are there? How many subsections are there, ma? Anybody remembers? 5 subsections are there. 9.1 normal levy, 9.2 GST on petroleum products, 9.3 RCM, 9.4 RCM and 9.5 ECO, e-commerce operators. Total 5 points will be there in this, ma. 9.1 FCM, 9.2 GST on petroleum products, 9.3 and 9.4 deals with RCM and 9.5 e-commerce transactions. So regarding this, types of GSTs based on supply. Already we know that intrastate supply. If what is meant by intrastate supply, ma? LOS, POS is there in the same state or same UT, it is an intrastate supply. If at all it is an intrastate supply, what will be levied, ma? CGST and SGST. If at all it is a UT GST will be there. If at all it is an interstate supply, what will be levied, ma? IGST will be levied. And what is the maximum rate of CGST? 20%. What is the maximum rate of IGST? 40%. Okay. So this is with respect to the basics here. And after that, few terms with respect to chapter number 3 is here. What is meant by the word supplier? What is meant by the word recipient? And what is meant by RCM? What is the taxable person? These are the important points we need to remember, ma. Because tax systems are of two types. One is FCM and second one is RCM. So with respect to FCM, recipient will pay to the supplier. Supplier in return will pay to the government. Under RCM, recipient will pay the amount directly to the government. So first one need to know who is the supplier and who is the recipient. Who is the supplier, ma? See this, who is the supplier? So who is the supplier, ma? Person supplying the goods or services or both, and includes agents acting on behalf of the supplier. That means who is the supplier? That means the person who is supplying. either the goods or the services. Both persons are treated as supplier. Goods supplying person is also a supplier. Services providing person is also a supplier. And it includes agents also. Not only the principal, because sometimes invoice will be there in the name of the agent. Na? In those cases, the concept is covered under deemed supplies. Na? Therefore, those agents are also covered under this supplier definition. So supplier means who supplies the goods or providing the services, and it includes agents also. Agents who are covered under deemed supplies are also treated as a supplier. Now the second question is here. What is the second definition, ma? Recipient. So what is meant by the word a recipient now? Recipient means if at all there is any need to pay the consideration, the person who is liable to pay that consideration is the recipient. Person liable to pay the consideration when applicable. Let's say we just went to the restaurant and I made the order for, let's say for example, for the marathon session students, I just want to get a small treat. So that's why we all went to, what is that, Jam Jam restaurant. Jam Jam, that one, its name. We just went to Jam Jam restaurant. So I am the person who ordered the food there, and you are the person that enjoyed it. As per the law, who can be the recipient? The person who is liable to pay that consideration will be the recipient. Even though food is enjoyed by you, the students, but here who is the person that is responsible for this particular payment? Myself. So in that case, myself will be the recipient. If at all there is any need to pay the consideration, then the person who is liable to pay that consideration is the recipient. Okay. Second one. Person to whom the goods are delivered or the services rendered when there is no consideration. That means if at all it is a deemed supply, then no consideration will be there. Na? In that case, who will be the recipient? Take the example of permanent transfer of business asset. The transaction happens without consideration. Na? If the transaction happens without consideration, then what is the position? To whom the goods are delivered, that person will be the recipient. With respect to services, to whom the services are provided, that person will be the recipient. Okay, ma. Right? So, with respect to recipient, who can be the recipient, ma? When consideration is payable, the person who is liable to pay that consideration is the recipient. When no consideration is payable, then the person to whom the goods are delivered So with respect to the person to whom the goods are delivered and with respect to the services to whom the services are rendered, that person will be the recipient. Okay. Next one. Sir, agents also covered under this? Yes. Definitely buying agent is also covered under this one. Na? Buying agent can be the recipient. Na? And selling agent also, principal to the selling agent is a deemed supply. Then who is the supplier? Principal. Who is the recipient? Selling agent. Therefore, selling agent can also be a recipient because it happens without consideration. In that case, to whom the goods are delivered? Selling agent. Selling agent will be the recipient. Now the point is, our original concept is here, reverse charge mechanism. What is meant by this reverse charge mechanism? Shifts the tax payment liability from supplier to recipient. Recipient is responsible for the compliance and tax deposit under RCM. This concept is known as reverse charge mechanism. Under FCM, recipient will pay to the supplier and supplier in return will pay to the government. Under RCM, recipient will pay directly to the government. Sir, my question is here, under FCM also, the ultimate tax liability will be there on supplier. Under the RCM also, ultimate tax liability will be there on, the tax liability will be ultimately there on recipient, whether it is FCM or RCM. Then what is the difference between FCM and RCM? under FCM, the compliance requirement will be there on the supplier to take the registration, payment of taxes, and registration. All these requirements are there with the supplier. But under RCM, all these compliance requirements will be shifted to the recipient. That is the point. Recipient is responsible for compliance and tax deposit under RCM. Okay, ma? Next. Another definite point you need to see is here, the taxable person. GST is needed to be paid by the taxable person. Who is the taxable person here? Fine. Whereas with respect to okay, fine. Okay, ma. So taxable person. So what is meant by the word taxable person here, ma? That means the recipient who is liable to be registered either under section 22 or under section 24, that person is known as taxable person. What is meant by this section 22? Anybody remembers what is meant by this section 22, ma? The person whose turnover crossed the specified limits is required to take the registration. That point will be there under section 22. What does 24 deals with? Compulsory registration irrespective of your turnover. Okay, ma? These are the cases. These persons who is liable to take the registration are known as taxable person and includes various entities and individuals. Will have a discussion in section 22 and 24. Simply the person who is required to take the registration either as per 22 or as per 24, that person will be a taxable person. And who is liable to pay the GST? Taxable person is liable to pay the GST. It can be asked in the MCQs. Who is liable to pay the GST? Option A, supplier. Option B, recipient. Option C, agent. Option D, taxable person. Generally, you will go with either supplier or taxable person, sometimes recipient. Majority cases, the people will go for supplier. If the supplier and taxable person, both the words are there, what is the best answer? Taxable person. So the person who is liable to pay the GST is taxable person. Okay, ma. Whether he can be supplier or recipient. Sir, that means recipient also be a taxable person? Yes. Under RCM, who is the taxable person? Recipient. That is the difference, ma. Taxable person includes both supplier and recipient. So these are the important definitions we should remember under your levy and collection of GST, ma. So the next point is here. So now some specific sectors under RCM. I divided the point into based on sectors, ma. I divided the point into based on sectors. So what is the first sector? I divided it. Transport and motor vehicle sector. So with respect to this transport and motor vehicle sector, ma, what is the first one? GTA services to specified persons. So what is meant by the word GTA, ma? Goods Transport Agency. So we are talking about the first one, GTA, Goods Transport Agency. If GTA is having two options, I think you know that. What are those two options, ma? One is FCM, second one is it can follow RCM. With respect to GTA, we're having two options, ma. One is we can follow either FCM or we can follow RCM. If at all we are following FCM, what is the rate of tax that is applicable, ma? 12% with ITC. If at all it is RCM, what is the rate of tax that is applicable, ma? 5% without ITC. If at all you want to follow the FCM, if the recipient is unregistered person, HUF, or a casual taxable person, or exclusive TDS deductor, then it is exempt. You are not liable to pay any GST. If at all you want to follow the FCM, what is the rate of tax we need to pay? 12% with ITC. And if at all the recipient is unregistered person, HUF or CTP or exclusive TDS deductors, it is exempt. There is no need to pay any GST. But whereas if the recipient is a specified recipient, who are those specified recipients, ma? Factory, society, cooperative society, registered person, CTP, body corporate, partnership firm, those people are there, na? Those specified recipients, it is taxable. Okay, we just completed FCM. Now come to RCM. With respect to RCM, what is the position ma? Rate of tax? 5% without ITC. See, if the recipient is a registered person, RCM is applicable, definitely we are liable to pay the GST. Okay, ma. And what is the exception? Exclusive TDS deductor, then we are not liable. See, supplier is GTA. Recipient is a registered person. Generally, it is taxable under RCM. What is the one and only exception to that? TDS deductor under section 52. Those people are, if at all, recipients, then it is exempted. There is no need to pay any GST. Okay, ma. Now, what is the next point there? What is the next point there, ma? If the recipient is a unregistered person, in that case, what is the position, ma? Specified. SR means specified recipient. If the recipient is a specified recipient, then what is the position, ma? Definitely RCM. With respect to others, what is the position, ma? It is exempt. This is the important point with respect to GTA. With respect to GTA, what is the position, ma? If the recipient is a registered person, then except TDS deductor, what is the position, ma? RCM is applicable. Unregistered person, recipient is a, in that case, specified recipients taxable under RCM, they are required to take the compulsory registration, and others, it is exempted. There is no need to pay any GST. This is the first one. GTA is important one. That's why whenever I wrote something on the board, handwritten one was there, then it is more important. That means already we covered important areas only in our marathon, but these are the most important ones. If something was there in handwritten format, it is most important one. That is the segregation I made. Okay, ma? Fine. So the next one will be, in this case, after GTA services. So what is the next one, ma, we need to see now? What is the second one? Renting of motor vehicle for passenger transport. That means simply car travels, ma. So simply what is this, ma? So definitely it will be car travels, ma. So with respect to car travels, what is the position, ma? We need to see now. So this is renting of motor vehicle, ma. I think with respect to, if at all you are able to recollect your childhood days when GST was going on, with respect to renting of motor vehicle also, what is the position, ma? Two options are available to you. What are the two options that are available? One is they can follow either FCM or they can follow RCM. If they want to follow the FCM, what is the rate of tax that is applicable, ma? 12%. If you want to follow the RCM, what is the rate of tax that is applicable, ma? 5%. So in this, what is the first point? In case where the GST is payable by 5%, that means what is the option we are taking there? RCM. Who is the supplier? Any person other than body corporate. That means if the supplier is any person other than body corporate, then RCM is applicable. If the supplier is body corporate, then what will be applicable, ma? FCM. If the supplier is any person other than body corporate, in those cases, what will be applicable, ma? RCM. Okay. If the supplier is any person other than body corporate, and recipient is a body corporate, then what will be applicable, ma? RCM. Okay, if the above conditions are not satisfied, then tax shall be paid by the supplier as per FCM. So what are the conditions? Supplier should be any person other than body corporate. Recipient should be a body corporate. If these two conditions are satisfied, RCM. Any one of these conditions are not satisfied, then what will be applicable, ma? FCM will be applicable. Okay. And with respect to this, another point is, ma, if you want to follow the FCM, what is the rate of tax that is applied, ma? 12%. So these 2 points will have a discussion at the time of ITC. For the time being, ignore it. And apart from that, this is the second one. What is the third one? Okay, we discussed different tax rates for FCM and RCM options. That is the point we discussed, na? With respect to FCM, what is the rate of tax? 12% with ITC. If it already is RCM, what is the rate of tax that is applicable? 5% without ITC. Next one. What is the next sector, ma? Legal sector. Legal sector related RCMs we are seeing now. Services by individual advocates, senior advocates or law firms to the business entity, it is covered under RCM. If the recipient is other than business entity, it is FCM and exempt. Who is the supplier? Junior advocate, senior advocate, partnership form of advocates. And who is the recipient? Registered business entity. Then it is taxable. In rest of the cases, it will be exempted. Next one. Arbitral tribunal services to business entity. What is meant by the word arbitration, ma'am? What is meant by the word arbitration? Settlement of a civil case outside the court through a legal process, it is known as arbitration. And the panel which will do the arbitration is known as arbitral tribunal. So arbitral tribunal to business entity taxable under RCM. Arbitral tribunal to individual for personal use, FCM, and it will be exempted. Okay, ma'am. Okay, ma'am. So, okay, fine. Now let's come to the session with respect to legal sector. Advocates to the registered business entity, tribunal to the registered business entity, it is taxable under RCM. Rest of the cases, they are taxable under FCM and exempted. Next one. Insurance and banking related, ma. With respect to insurance and banking, what are the services? Insurance agent to insurance company. That means LIC agent to LIC company. Next one, recovery agent to bank. These are actually covered under RCM. Insurance agent to insurance company. Recovery agent to bank is covered under RCM. Recipient is liable to pay the GST. In the same way, various banking services are also covered under RCM, like where are they? Yes. These are the services, other services. That is business facilitator to the bank, agent to the business correspondent. These are actually covered under RCM. These are also banking related ones. Insurance agent to insurance company, recovery agent to bank. Next one is business facilitator to bank, and agent to business correspondent is covered under RCM. What is the difference between business facilitator and business correspondent, ma? Business facilitator will mobilize the savings accounts generally, and business facilitator plus loan facility is equal to business correspondent. Business facility, whatever the things the business facilitator will do, all those activities are done by the business correspondent also. Along with that, up to a small amount of advance also. What is the position, ma? Up to a small amount of advance. He can also provide you. In that case, that person will come under business correspondent. So, business facilitator to the bank or agent to the business correspondent, both are covered under RCM. Next one, author to the publisher. This is important one, ma. Author to the publisher, if three conditions are satisfied, then FCM. Otherwise, RCM. Anybody remembers what are those three conditions, ma? Author must be a registered person. He must give intimation to the commissioner. and he shall not withdraw within a period of 1 year, and he should intimate on the invoice also. If all these points are satisfied, then what will be applicable, ma? FCM is applicable. Any one of these conditions are not satisfied, what will be applicable? RCM will be applicable. Author to the publisher is also important. First one is GTA, second one is renting of motor vehicle, and agent to business correspondent, not that much, but business facilitator to bank is important, ma. In rural areas, it is exempted. In urban areas, it is taxable under RCM. Remember that sentence. Business facilitator services to bank. In urban areas, it is taxable under RCM. Business facilitator to bank. In rural areas, it is exempted. This line is asked in so many number of times, ma. Business facilitator to bank. Urban areas, taxable under RCM. Whereas the rural areas, it will be exempted. Rural areas, it will be exempted. So that is the point one should remember, ma. Okay. So the next point will be after insurance and banking, what is the next sector, ma? Government. So services by central government, state government, local authorities to the business entities, and renting of immovable property by government entities. Sir, both are government, na? Then why they are given separately? Anybody can tell me the difference? In our Telugu, both cases lonu supplier government kada. Why separate entry numbers are there? One is entry number 5, second one is entry number 5A. Why two separate entries are there? In both cases, the supplier is government, na? Why they divided like this? Renting of immovable property is separate, other services separate. Recipient is different, ma. With respect to renting of immovable property, who is the recipient? Registered person is a recipient, then RCM is applicable. But whereas other services, if the recipient is a business entity, then there is a possibility that RCM can be applied. That is the difference, ma. Renting of immovable property, who is the recipient? Registered person is the recipient, then RCM is applicable. Whereas with respect to other services, if the recipient is business entity, then what will be applicable, ma? RCM will be applicable. That is the point. Next one. Construction related service sector, ma. First one, transfer of development rights or floor space index to the promoters. Transfer of development right means generally you are having a land, that land was given to the builder for construction, then ratio 50-50, 60-40 ratio you will make, and after completion of the construction, that fellow will give you some 4 flats or 5 flats, there ends the matter. That means what you are giving there, your development rights will be transferred to the builder. Who is transferring that? Landowner. To whom the development rights are transferred? To the promoter. Promoter means builder. In that case, what is applicable? RCM. As per RCM, who is the recipient? Builder or promoter is liable to pay the GST. In the same way, long-term lease. What is meant by the word long-term lease? How much time period? More than 30 years, na? 12 years only. In our GST, not as per your accounts. Only 12. Long-term lease in RCM. I think as per our GST, I think it is more than 30 years or something. It is there. So if at all it is a long-term lease to the promoters, generally with respect to schools, it will be given, ma. Generally, schools does not build on own land, ma, generally. What they will do, ma, they will take the land on a long-term lease, and there they will construct the school. Constructing school is easy. In the middle, you need to have some trees, and that side actually you will have some walls. On the walls, actually roofing tiles will be there. There ends the school. Generally, this is a school, and it will be called as Gurukul also nowadays. That means in the environmental way you are studying. So that is the thing generally what will happen. Okay. So this is with respect to long-term lease to the promoter. Next one is, okay, fine. So unorganized to organized. That is sponsorship services to body corporate or partnership firms, director services to companies or body corporate. So with respect to sponsorship services, it is also important. It was asked in the exam. Who is the supplier? Any person. Who is the recipient? Body corporate or partnership firm. Then what will be applicable? RCM will be applicable. Who is the supplier, ma? Any person. And who is the recipient, ma? Body corporate or partnership firm. In those cases, what will be applicable, ma? RCM is applicable. And what is the next one? Director services to company or body corporate. That means, please keep it in mind this point, ma. Director to company. What is the position? RCM. And who is liable to pay the GST? Company is liable to pay the GST, but keep it in mind, what he will do in the capacity of director, those are only covered under this particular RCM. If director has done something in his personal capacity, then it is not a RCM concept. In the capacity of director, what he will do, it is only covered under RCM. In personal capacity, it is not covered under RCM. It covered under FCM. So director has given his flat to company on a rental basis. It is not the capacity of director. In his personal capacity has given that thing on your rental basis. In that case, FCM or RCM? FCM. In the capacity of director, what you will do, those things are only covered under RCM. Okay, ma. So the next point will be, these are the cases I divided. So these are the important ones, ma, from the examination point of view. The first priority goes to transport, ma. It is important one. One is GTA and second one is renting of motor vehicle and third one is author to the publisher. Even though it is not covered here, these three are important. Legal services are okay. In legal services, advocate services are important. And in government services are important. What I just wrote there. And with respect to construction, you can ignore it. No need to study. That one not that much important. And this one, sponsorship and directors. Rest of the things you can ignore. That means single reading is compulsory. But at the time of final exam, you can ignore that. But you were, what are the revision exams or something. So those exams you need to study. But when the time does not permits you and something is needed to be left out, then except these things, rest of the areas you can left out. Time does not permit. If time is there, you need to study everything. If time is not there, then go by this particular chart. It is more than sufficient to get the exemption. That means with respect to our GST, 50-60% means 60% is exemption. Huh? So for 50, if you study these charts, a minimum of 30 will come. 30. So GST exemption means 30 marks only. Na? So that's why whatever the charts that are given to you, that are going to be given to you, so those ones, if you are able to read, a 60%, that means 30 marks is assured. Ma. If you are able to read these hardly 13 charts, it will be max to max. So these, if at all you are able to read it, that is 100% sufficient to get 30 marks in our GST. Including amendments. Including amendments, it will be 13 charts only. For amendments, I will give you a separate chart. That means tomorrow. So based on this, you need to study, then more than sufficient for the exam to get 30 exemption in our GST. But if we want to get 50 out of 50, then you need to read everything in the material. That is up to you. 50, then you need to study the board material, not even masterminds material. Who is that ranker? Second and third one only. So this is with respect to 9.3 concept. There ends the 9.3 concept. Now we need to proceed to 9.4. So what does 9.4 deals with? RCM. So what is the difference between 9.3 and 9.4? What does 9.3 and 9.4 deals with? Tomorrow bring me one chocolate. Fine. You are doing multitasking in the class. So it's so appreciable. Okay. So here, what is the difference between 9.3 RCM and 9.4 RCM? Under 9.3 RCM, supplier can be registered or unregistered. But whereas under 9.4 RCM, supplier will be always unregistered. Under 9.3 RCM, supplier can be registered or unregistered, but 9.4 RCM, supplier is always unregistered. And what is the sector that is covered under this point, ma? Real estate sector. For that, there are different tax rates for affordable houses, one rate, non-affordable houses comes rate, and commercial apartments, some other rates will be there. If you remember them. So, yes. These are the output tax rates ma, with respect to 9.4. If at all it is affordable house, then 1% without ITC. If at all it is a non-affordable house, 5% without ITC. And if at all it is a commercial apartment, but that means commercial residential apartment, then the total commercial area is less than or equal to 15% of the carpet area, then also 5% without ITC. These are the output tax rates that are applicable under 9.4. Affordable house, 1% without ITC. Non-affordable house, 5% without ITC. In an apartment where the commercial area is less than or equal to 15%, then also what is the rate of GST, ma? 5% without ITC. These are the output tax rates, ma. What is meant by affordable house? In metros, 600 square meters, 600 square feet, I think approximately it will be. So 60 square meters, in non-metros, 90 square meters plus value cap of 40 lakhs. 45. Wow, you are attentively listening to the class. Very good. Fine. Just actually I tried whether you're listening to that properly or doing multitasking. Fine. So here, fine. So here the point will be, if at all it is a affordable house, that means what is the position, ma? Metros simply single bedroom and non-metros double bedroom, it will be flats, fine. So whereas and value cap will be 45 lakhs, ma. Then it is a affordable house. If at all it is a affordable house, what is the rate of tax, ma? 1% without IDC. Non-affordable, 5% without IDC. It is an apartment. Then the total commercial area is less than or equal to 15%, then also 5% without ITC. These are the output tax rates. Now, what is the RCM rates applicable to him, to the builder or a construction contractor? With respect to cement, 100% purchases must be made from registered person. Any purchases are made from unregistered person, RCM is applicable at the rate of 28%. With respect to cement, 100% must be purchased from registered person. Any purchases are made from unregistered person, then RCM is applicable at the rate of 28%. And with respect to capital goods also, 100% must be purchased from registered person. Any purchases we just made from unregistered person, then RCM is applicable at their individual rates. Capital goods are also 100% must be purchased from registered person. Any capital goods are purchased from unregistered person. In those cases, RCM is applicable at the rate of individual rates. Next one is with respect to other cases. That means other inputs. 80% must be purchased from registered person. 20% can be purchased from unregistered person. Any shortfall is there for this 80%, on this shortfall, RCM is applicable at the rate of 18%. Let's say only 65% is purchased from registered person. What is the shortfall? 80 minus 65, 15. On this 15%, RCM is applicable and GST is payable at the rate of 18%. That is the point. Okay, ma. So this is 9.4. There ends. What is the next point we need to see, ma? 9.5. What does 9.5 deals with? ECO. So with respect to ECO, ECO is responsible for GST on specific services like passenger transportation, hotel accommodation, like that. If the ECO physical presence is there in India, ECO will pay that. Otherwise, his representative will pay that. So what are the cases that are covered under RCM? So these are the cases that are covered under RCM, that ECO 95. So there are actually 4 services that are covered under 95. One is transportation of passengers, second one is hotel accommodation plus housekeeping, and fourth one is restaurant. These are the 4 cases that are covered there. With respect to transportation of passenger, what is example for those ECOs, ma? Ola, Uber, Rapido, all these things will come under this. Okay. With respect to transportation of passengers, if the supplier is omnibus, if the supplier is by omnibus, then the supplier is a company, FCM, company will pay the GST, others, ECO will pay the GST. If transportation was done by any other person, that means other than omnibus, car, etc., in those cases, who is liable to pay the GST, ma? ECO is liable to pay the GST. Okay, ma? What are the topic we are discussing about? Transportation of passengers like Ola, Uber, etc. Regarding that, if the supplier is omnibus, then we need to check who is the supplier. If at all it is a company, FCM, and others, RCM. That means ECO. And others, if the supplier is, then ECO is liable to pay the GST. And second one, hotel accommodation. Hotel accommodation ECO's example, ma? Make My Trip, Trivago. These are the examples. What are the other examples we can say? OYO rooms. Okay, fine. OYOs. All these things comes under hotel accommodation, ma? And with respect to housekeeping, like plumbers, carpenters, electricians, etc. And what is the example for that? Urban company. Previously, Urban Clap. If hotel accommodation and housekeeping services are provided through ECO, if the supplier is a registered person, who will pay the GST? Supplier will pay the GST. If the supplier is a registered person, then supplier will pay the GST. If the supplier is an unregistered person, then who will pay the GST, ma? ECO will pay the GST. With respect to hotel and housekeeping, supplier is registered, supplier will pay the GST. Supplier is unregistered, ECO will pay the GST. And the next one is restaurant service. With respect to restaurant service, if at all it is a restaurant, always ECO like Zomato or Swiggy will pay the GST. If at all it is a hotel, who will pay the GST will depends upon, who will pay the GST will depends upon the room rent, ma. Room rent less than or equal to 7,500, ECO. Room rent is more than 7,500, hotel will pay the GST. With respect to restaurant services, ma, if the supplier is a restaurant, then always ECO like Zomato or Swiggy will pay the GST. If at all the supplier is a hotel, then we need to check the room rent. Room rent is less than or equal to 7,500, ECO will pay the GST. If the room rent is more than 7,500, then who will pay the GST, ma? The hotel itself will pay the GST. So this is all about 95, ma. So, sorry. I think we covered everything. Yes, these are the points. That's it, ma. This is with respect to RCM. So we just completed RCM concept. That is with respect to RCM 9.3. What is the position? What is the position, ma, there? With respect to 9.3, I told you few important areas like GTA, renting of motor vehicle, government services, sponsorship services, author to the publisher. These are the few important areas. 9.4, only RCM rates are important, not the output tax rates. 9.5, there are only 4 points. Recently added one is restaurant. Therefore, restaurant, you need to, restaurant and omnibus. You need to keep more focus on these 2 areas, ma, because they are the latest amendments. Okay. Now RCM is complete. Okay, ma'am. Now we are starting this composition scheme. So first point we are discussing is what is the applicability and the turnover limits for this composition scheme. So I think already you know that composition scheme is of 2 types. One is normal composition scheme under 10.1. Second one is concessional rate scheme under 10.2A. Like that, composition schemes are of 2 types. First, we will see the first one. What is the first one here? First one is, this is 10.1 and 10.2, goods and restaurant services. That means 10.1 is designed for, that is normal composition scheme is designed for supplier of the goods only. Normal composition scheme under section 10.1 is designed for supplier of the goods only. The one and only service that was eligible for this normal composition scheme under section 10.1 is, what is the service ma? Restaurant service. Only restaurant service is eligible for this normal composition scheme under section 10.1. Okay, see, that's why I wrote you. So what is the section that is applicable? 10.1 and 10.2. Sir, what is the eligibility criteria? What is the eligibility criteria for this normal composition schema? Aggregate turnover limit of 1.5 crore in the preceding financial year. That means in order to be eligible for this composition scheme, your turnover should be less than or equal to 1.5 crore in the preceding financial year. Then in the current year, you are eligible for this composition scheme. For example, what is the present financial year? 24-25. In order to be eligible for composition scheme in 24-25, then in the previous financial year 23-24, your turnover should be less than or equal to 1.5 crore. Then in the current year 24-25, you are eligible for this composition scheme. Sir, that means for every state this 1.5 crore is applicable? No. With respect to special category states except Himachal Pradesh, Assam, Jammu and Kashmir, total 11 special category states will be there ma. In that except these 3, for the remaining 8 special category states, what is the limit that is applicable ma? 75 lakhs. What are those 8 states? Manipur, Mizoram, Nagaland, Sikkim, Arunachal Pradesh, Uttarakhand. And some, what is the state I just missed? Meghalaya, Tripura. Okay, total 8 is over. With respect to those 8 special category states, instead of 1.5 crore limit, what is the limit that will be applicable, ma'am? 75 lakhs will be applicable. Except these 8 special category states, for the rest of the states, what is the limit that is applicable, ma'am? 1.5 crore. Okay. The question is here, sir, what is meant by the word aggregate turnover here? So just now you said with respect to normal states 1.5 crore, with respect to special category states 75 lakhs. In the preceding financial year turnover is there. Then in the current year we are eligible now. What is meant by the word aggregate turnover? What is the formula for aggregate turnover, ma? I just wrote there also in the chart. But in the format of formula, what we discussed in the class, taxable supplies plus exempted supplies plus exports plus deemed supplies minus GST minus RCM purchases minus exempted interest. What is the amount we will get? It is known as aggregate turnover. While computing that 1.5 crore turnover or 75 lakhs turnover, what is the formula for aggregate turnover, ma'am? Taxable supplies plus exempted supplies plus exports plus deemed supplies minus GST minus RCM purchases minus exempted interest. What is the amount we will get? It is known as aggregate turnover. If this aggregate turnover is less than or equal to 1.5 crore or 75 lakhs in the preceding financial year, then in the current year we are eligible for composition scheme. Okay, ma'am. Sir, if at all, that means you said that 10.1 and 10.2 is designed for supplier of the goods only. The one and only service that was eligible for this 10.1 is only restaurant service. The question is here, is there any composition scheme that is there exclusively for supplier of service? Yes. What is that? 10. Other services are covered under 10.2a. So that means if at all you are exclusive supplier of the service, what is the limit that, what is the scheme that is applicable to you? 10.2a concessional rate scheme. Sir, what is the eligibility criteria for this concessional rate scheme? What is the eligibility criteria for this concessional rate scheme, ma? Aggregate turnover limit of 50 lakhs in the preceding financial year. That means if in the preceding financial year, your aggregate turnover is less than or equal to 50 lakhs, then in the current year, you are eligible for this concessional rate scheme under section 10(2)(a). Sir, just like 10(1), few states are having 1.5 crore limit, few states are having 75 lakhs. Just like this also is there in this 10(2)(a)? No, this limit is applicable to all the states. Does not make any difference whether it is a normal state or a special category states. For every state, what is the limit criteria here, ma? 50 lakhs in the preceding financial year. And I told you the aggregate turnover definition already, na? The first point is, another point is here, we need to keep focus is considered on all India basis for the persons with the same PAN. That means state-wise turnover will be considered or country-wise turnover will be considered. Country-wise turnover will be considered for the same PAN number. Take example, masterminds. AP and Telangana, in both states MM is there. While computing that 1.5 crore or 50 lakhs limit, what is the turnover we should consider only with respect to AP, ma'am? No, AP and Telangana we need to consider. That means country-wise turnover shall be considered. This is a formula already we discussed. Includes, that means taxable supplies plus exempted supplies plus interstate supplies means deemed supplies and exports. Excludes means minus. Inward supplies under RCM means RCM purchases, GST and exempted interest. This is the formula I told you now. Taxable supplies plus exempted supplies plus exports plus deemed supplies minus GST minus RCM purchases minus exempted interest. What is the next point is, ma'am, eligibility criteria and conditions. What are the conditions that should satisfy regarding this composition scheme? We need to see that. Already we discussed this point here. Turnover limits must not exceed the specific turnover limits for respective categories. Limits vary based upon the nature of the business and state location. That means a special category state 75 lakhs, normal state 1.5 crore, like that limits will change. And next point is here, from this point onwards, you need to keep focus. This is the important one. Nature of business. That means which type of businesses are not eligible for composition scheme? Manufacturers of these notified goods are not eligible. Not eligible for the manufacture of ice cream, pan masala, tobacco products, fly ash bricks, building bricks, roofing tiles, fossil mills bricks. These manufacturers are not eligible for this composition scheme. Who are the manufacturers that are not eligible, ma'am? Ice cream, pan masala, tobacco, aerated water, building bricks, fly ash bricks, roofing tiles and fossil mills bricks. In our Telugu sunnaprai తెల్లగా ఉంటాయి ఇటుకలు, వాటితో చేస్తారు అవి fossil mills అంటే. Okay, so these are the manufacturers who are not eligible for this composition scheme. Sir, only manufacturers are not eligible or traders are also not eligible? Only manufacturers, see, no restrictions on the trader of the goods. Only manufacturers are not eligible. Definitely traders are eligible. That means, sir, traders of notified goods are also eligible? Yes, only notified goods manufacturers are not eligible. Definitely traders are eligible. Next one. Supply restrictions. With respect to supply restrictions, cannot engage in interstate outward supplies. That means you are prohibited from making interstate sales. You are prohibited from making interstate sales, but keep it in mind, interstate purchases are allowed. What is the thing that is prohibited, ma? Interstate sales are prohibited, but interstate purchases are allowed. Interstate sales are prohibited. Cannot engage in interstate outward supplies. That means interstate sales are not allowed. Interstate purchases are allowed. Next one. No supply of non-taxable goods. Example, petroleum products and alcohol. If at all you are making non-taxable supplies, I told you one sentence here in the regular batch. If at all you are having, the one slogan I told you, go for all or go for none. If you want to go for composition scheme, go for all or go for none. That means if at all you are having two units, one unit is making a taxable supply, another unit is making a non-taxable supply, then automatically both the units will become ineligible for composition scheme. We are having two units. One unit is making a taxable supply, another unit is making a non-taxable supply. In those cases, automatically both the units will become ineligible for composition scheme. That is the point one need to remember. Okay, ma'am. Next one. E-commerce restrictions. Next one is, with respect to these e-commerce restrictions, ma'am, cannot supply through e-commerce operators. Cannot supply through e-commerce operators. That means this applies to services only. That means goods can be supplied through ECO. In olden days, both are not possible. This is the latest amendment, na? This is a latest amendment, ma. In olden days, goods as well as services, both are prohibited through ECO. If at all you want to go for composition scheme. But now, ECO of the goods, that means if at all you are supplying the goods through ECO, you can be eligible for composition. Okay. But if at all you are making supplies through ECO, then you are not eligible for composition. In olden days, both goods and services are not eligible if at all they are making supplies through ECO. But now what is the point, ma? Any person supplying the goods through ECO, like Amazon, Flipkart, etc., those people are eligible for composition. Any person who is providing services through ECO, take example restaurant services through Zomato or Swiggy, those people are not eligible for composition scheme. That is a new point. I think you need to keep focus on this one. Definitely they will try to confuse you. Any person supplying the goods through ECO eligible for composition scheme. Any person supplying the services through ECO not eligible for composition scheme. Okay, ma. You need to keep focus on this point. This is also a latest one, amendment. Okay. Next one. Service related limitations. What is meant by these services related limitations, ma? Whatever that means for goods or restaurant category. That means for 10.1. For 10.1, sir, you said that the scheme is designed for supplier of the goods only. And the one and only service that was eligible is restaurant service. The question is here, along with the goods, is it possible to make supply of service also? Yes, but up to a specified limit only. What is that specified limit? In the preceding financial year turnover 10% or 5 lakhs, whichever is higher. In the preceding financial year turnover 10% or 5 lakhs, whichever is higher. That is the point. Let's say in the preceding financial year the turnover is 90 lakhs. In that case, in the current year, up to which extent we can make the supply of service? In that 90 lakhs, 10%, that is 9 lakhs or 5 lakhs, whichever is higher, 9 lakhs. In the current year, we can make the supply of service up to 9 lakhs along with the supply of the goods. Next one. But while computing the limit of that 10% of the turnover or 5 lakhs, what is the thing that is excluded, ma? Exempted interest. Exempted interest is also a supply of service. It will not be counted for the above sublimit of 10% of the turnover or 5 lakhs, whichever is higher. Okay. This is another point, ma, one need to remember. That means the eligibility criteria already we know that with respect to 10-1, normal states 150 lakhs and special category states 75 lakhs, 10-2A 50 lakhs. The question is here, sir, in the current year turnover, up to which extent these composition rates are applicable? In the current year, up to which extent these composition rates are applicable? See, if the eligibility in the previous financial year is 150 lakhs, then in the current year, up to 150 lakhs, composition rates are applicable. After that, normal rates are applicable. If the eligibility criteria in the preceding financial year is 75 lakhs, then in the current year, up to 75 lakhs, composition rates are applicable. And in excess of that, after that, normal rates are applicable. If at all it is 10-2A, what is the eligibility criteria, ma? Preceding financial year 50 lakhs, then in the current year, up to 50 lakhs, composition rates are applicable. In excess of that, normal rates will be applicable. Okay, ma'am. This is the point you should remember from the problem's point of view. Because based on the handwritten wordings, generally they are asking in the exam. Eligibility, you know. But in the current year, up to which extent you will get the composition rates is the point. In the current year, up to 1.5 crore or 75 lakhs or 50 lakhs, depending upon the scheme you are taking. Definitely, composition rates are applicable. In excess of 1.5 crore, in excess of 75 lakhs, in excess of 50 lakhs, definitely, what is applicable, ma? Normal rates will be applicable. You are liable to pay the GST at normal rates. Okay, ma? These wordings you should remember. And another thing is you need to keep focus is these things. This is important point, but in the year in which the organization started, limits for taxability will be, for example, the year in which we started the business, the aggregate turnover is 90 lakhs. Then up to 20 lakhs, you are an unregistered person. Therefore, there is no need to pay any GST. But whereas, what is the composition turnover we discussed? Up to 50, na? That's why up to 50, you are a registered person. You are a composition. CD means composition dealer also. What is the rate that is applicable? 6%. Why, ma? 10-2A. With respect to 10-2A, what is the rate that is applicable? 6%, 3% CGST and 3% SGST. Okay. On how much value you are liable to pay that? In that 50, up to 20, you are not liable for registration. Na? Therefore, you are not paying any GST. So 50 minus 20, what is the remaining balance there? 30 lakhs. On the 30 lakhs, at the rate of 6%, you are liable to pay. And after 50 lakhs, what is the turnover that is there? 90 lakhs minus 50 lakhs, 40 lakhs. On the in the 40 lakhs, you are a normal scheme person. NS means normal scheme, and you are liable to pay the GST at normal rates. These two lines are important. Whatever the things I just wrote here, these are important from the problem's point of view. Up to which turnover composition rates are applicable, from which turnover you are liable to pay normal rates. And this one is actually there in the problems also. The problems related theory I just gave here. In our Telugu, అంటే ఏ ఇయర్లో అయితే మనం బిజినెస్ స్టార్ట్ చేసామో ఆ ఇయర్లో మాత్రమే ఈ నోట్ పాయింట్ అప్లై అవుతుంది. The year in which we started the business, in that year only the note point will be applicable. So, in the current year, the year in which we started the business, what is the turnover, ma? 90 lakhs. But you are an unregistered person, na? In that case, supplier of service, when he is required to take the registration? When he is required to take the registration? With respect to services, what is the turnover limit? 10 or 20. With respect to normal states, 20 lakhs. That's why up to 20, you are an unregistered person. Therefore, you are not liable to pay any GST. After 20 lakhs, up to 50 lakhs, that is 30 lakhs. You are a registered person and a composition dealer. Therefore, what is the rate that is applicable? 6%. And in excess of 50 lakhs, that is 90 minus 50, 40 lakhs, you are a normal scheme person, you are taxable at normal rates. So these are the lines you need to remember from the examination point of view. Okay, ma'am. Can I move to the next point? Okay, ma'am. I think we just completed these areas. So the next point will be, what are the rates that are applicable to composition scheme? What are the rates that are applicable to composition scheme? With respect to manufacturers, what are the rates that are applicable, ma? With respect to manufacturers, 1% of aggregate turnover. This is 1% of aggregate turnover. With respect to traders, 1% of taxable turnover. With respect to restaurants, 5% of aggregate turnover. And whereas with respect to other services, that is 10 to A, what is the point that is applicable, ma? 6%. With respect to manufacturers, 1% of aggregate turnover. With respect to traders, 1% of taxable turnover. Whereas with respect to restaurant, 5% of aggregate turnover. And with respect to 10 to A, 6% of aggregate turnover. These are the composition rates, ma. Manufacturer, 1% of aggregate turnover. Trader, 1% of taxable turnover. Restaurant, 5% of aggregate turnover. 10 to A services, 6% of aggregate turnover. Those are the limits that will be applicable. Those are the rates. Okay, ma. So the next point will be, what are the compliance requirements under composition scheme? What is the next point we need to see, ma? What are the compliance requirements that are to be followed under composition scheme? The first point is here, billing disclosure. So with respect to composition scheme, what is the point, ma? Billing disclosure means, what is the document they need to issue, ma? What is the document they need to issue? Instead of tax invoice, what is the document they need to issue? Bill of supply. Second one. And they must mention on the bill of supply that I am a composition taxpayer not eligible to collect tax on the bills. Okay, ma? What is the point one need to remember here? Issues bill of supply instead of tax invoice. That means if at all you are a composition dealer, instead of tax invoice, what is the document we need to issue, ma? Bill of supply. And next one, must mention the words composition taxpayer not eligible to collect the tax on the supplies. Next one, not only you should mention on the bill of supply, you should also at the place of business also, you should display that on the board, you are a composition taxable person. That means these compliance requirements will be on two parts. One is at the place of business, you need to display that you are a composition taxable person. Second one, whatever the document you will issue, what is the document the composition supplier will issue, ma? Bill of supply. On the bill of supply also, you must mention that he is a composition taxable person. This is the point. Next one, with respect to this composition dealer, what about the ITC? Is it possible for the composition dealer to claim the ITC, ma? Cannot claim the ITC. Composition dealer cannot claim the ITC. Not allowed to collect any tax from the customers. That means that 1%, 5%, 6% taxes are there, na? Those taxes are needed to be paid by the composition dealer out of his own pocket. He should not collect the taxes from recipient. That's why what the people will do, I told you, na? In the name of the tax, a composition dealer shall not collect. What he should not do? In the name of the tax, he shall not collect that. But what they will do? They will increase the price. I told you the example of one restaurant. I can't remember because now it will be put in YouTube now. So that's why I don't remember the name of the restaurant there. I don't remember. Okay, in that restaurant, for example, the dosa was, onion dosa was previously 100 rupees and GST is 5 rupees. But if at all you are a composition dealer, what you will do now? Your dosa will become 105 now. In the name of tax, you should not collect anything. That's why dosa price was increased to 105. Then automatically nothing was in the name of the tax. Na? So the people are doing like this, some practices. What the people are saying at the tea stall, I don't know about them in person. But while I'm having a cup of coffee or cup of tea at the tea stall, those people are saying that in the name of the tax, we shall not collect. So in that case, definitely will increase the price. That is the thing in reality will happen. But as per the theory, should not collect any tax from the customer. And that 1%, 5%, 6% taxes are there now. They must be paid in cash. Must pay the tax liability in cash. Why, sir? Because you don't have any ITC. You don't have any ITC now, because a composition dealer will not have any ITC. Therefore, in those cases, what is the position, ma? Definitely, he must pay 100% of the amount in cash. Next one. Penalty for non-compliance. If at all you don't follow the rules above, it may lead to irregular availment, leads to penalties and tax liabilities under section 73 and 74. So that means definitely punishment will be there. And all businesses under the same plan must opt for composition scheme. This is the slogan I told you now. If you want to go for composition scheme, go for all or go for none. That is the point. Okay. And next point is, this point you can study on your own, but I will tell you in brief. Next one is procedural for opting and withdrawal. What is the next point, ma? Procedure for opting and withdrawal. Okay. So this point is, if at all it is a new registration, okay. If at all it is a new registration, in that case, what is the position, ma? There is no need to give intimation in a separate application. If at all it is a new registration, then what is the thing, ma? There is no need to give any separate intimation. Indicate option in registration form number REC01 part B. If at all it is the first time GST registration and you are going for composition scheme, there is no need for separate application. Indicate the option in the registration form itself is sufficient. What is the form number, ma? REC01. And from which date this composition scheme will be effective? From the date of registration, this composition scheme will be effective. Sir, if at all it is an existing registered person, sir, then what is the position? If at all is an existing registered person, in those cases, he must give a separate intimation. What is the separate intimation, ma? CMP02. File intimation in form number CMP02 before start of financial year. That means if you want to go for composition scheme in the financial year 24-25, then you must intimate the department on or before March 31st, 2024. What is the form number to intimate? CMP02. From which date this composition scheme will be effective? From the beginning of financial year. From the beginning of financial year. Next one. And along with that, you must provide the statement within 60 days for ITC reversal. Why, sir? Because you opted for composition scheme, na? Therefore ITC is not allowed to you. Therefore on the closing stock ITC is needed to be reversed. That's why for that reversal ITC statement must be submitted to the department within a period of 60 days for ITC reversal. Next point, withdrawal process. How to withdraw from the scheme? Mandatory withdrawal if the conditions are not met. What are the conditions? You should not make any interstate sales. You should not make services through ECO. You should not make non-taxable supplies. And you should not be a CTP or a NRTP. And you should display the words composition taxable person. You shall not claim the ITC. You shall not collect the tax from the recipient. These are the conditions. If those conditions are not met, then automatically you need to exit from composition scheme. Sir, voluntarily also we can exit. I just want to quit. Is it possible to do so? Yes. Voluntary withdrawal option is available, but you need to file the intimation or application for withdrawal. Voluntary intimation, 5 days, 7 days before. Generally, the event happens. Before that, you need to intimate to the department and furnish the statement of the stock within 30 days of withdrawal. Why we need to submit the statement here? To claim the ITC. Because you are exiting from composition scheme. Now you are moving from composition scheme to normal scheme. Then in normal scheme, ITC is allowed or not allowed? Allowed. That means on the closing stock, now ITC must be allowed to you. For that sake, you must give the intimation within 30 days. But here it is 60 days. For reversal, 60. For claiming, 30 days. This is the point. You need to remember this point, ma. And this is the story with respect to entire composition scheme. So in this composition scheme, from the examination point of view, most important points are just handwritten ones are there now. I told you those ones. Along with that, rates of composition and service specific limit is there now. That is 10% of the preceding financial year turnover or 5 lakhs, whichever is higher. That point you need to keep focus. And the slogan, go for all or go for none. These are the most important areas, ma. These things are covering 90% of the exams, ma. These points are covered in 90% of the exams. What I wrote in the handwritten format, those points, apart from that, 10% limit, and our slogan and tax rates. These are the important ones from the examination point of view. Okay, ma? This is with respect to composition scheme. Now the next point we will see is exemptions, ma. For exemptions, putting all these things in a single shot, time is not sufficient for me. That's why that one I will go in PPT itself. Rest of the chapters I just prepared it, ma. So just we will see the exemptions in that only. Just wait. Okay, ma'am. The next topic we need to see is here healthcare services. Whereas with respect to healthcare services, what is meant by the word healthcare service, ma'am? Diagnosis, treatment, or care. In a recognized system of medicine, it is called as healthcare services. What is meant by the word healthcare service, ma'am? Diagnosis, treatment, care in a recognized system of medicine in India. Then only it is exempted. Not every healthcare services are exempted, ma. Diagnosis, treatment, care in a recognized system of medicine in India, definitely it is exempt. Sir, what are the recognized system of medicines in India? Allopathy, yoga, naturopathy, Ayurveda, homeopathy, Siddha, Unani. These are the government recognized systems, ma. Unani means what we can say, that means in our Telugu, Vanamulikalto chese vaidhyam. Okay, ma'am. Those allopathy, yoga, naturopathy, Ayurveda, homeopathy, Siddha, Unani. These are the government recognized system of medicines, ma. Those are exempted. Apart from that, whatever the rest of the medical systems are there, definitely they are taxable, like acupressure, acupuncture, Reiki healing, urine therapy, Rudraksha therapy, like that. Those are not government recognized system of medicines. In that case, is it exempted or taxable, ma? Taxable. And who will provide these healthcare services? Doctors, hospitals, paramedics will provide these healthcare services. What is meant by the word paramedics? Pre-hospitalizations or post-hospitalization service providers, it's not RMPs. Pre-hospitalization or post-hospitalization service providers are treated as paramedics, like lab technicians, nurses, and physiotherapists. Those people will come under the word paramedics. Pre-hospitalization as well as post-hospitalization service providers. Okay. And hair transplantation or cosmetic or plastic surgery, whether it is exempted or taxable, ma? When it is taxable, when it is exempted. For the sake of beautification, it is taxable. For the sake of medical treatment, it is exempted. Hair transplantation or cosmetic or plastic surgery, for the sake of beautification, it is taxable. As a part of medical treatment, it will be exempted. Okay, ma. So the next point will be, what is the next point? What about the hospital room charges, ma? If the room charge, if at all there are emergency wards, like ICU, CCU, ICCU, NICU, like that, these are emergency wards, ma. These emergency wards, irrespective of the room rent, they are exempted. With respect to normal rooms, more than 5,000 rupees per day, full amount will be taxable. Less than or equal to 5,000, it is exempted. More than 5,000, these room rents are fully taxable. Sir, what about the amount that is paid by the hospital to the senior doctors? Because senior doctors are consultants hired by the hospitals and remuneration paid to them by the hospital is exempt. Here the point is, ma, senior doctors are providing services to the hospital but not to the patient. But still they are providing these services indirectly to the patient. Therefore, they are exempted. Retention money charged from the patient by the hospital is also exempt. That means they charged from the patient 10 lakhs, ma. In that, 7 lakhs was given to the doctor and 3 lakhs was retained by the hospital. In that case, 7 lakhs is exempt. That is the point we discuss. What about those 3 lakhs, whether they are exempted or not? Exempt. Those 3 lakhs retention money by the hospital also a healthcare service. Why, sir? The point is simple. Without infrastructure, without surgical equipments, without nursing staff help, the doctor cannot do the surgery. So these are the basic amenities that must be there in order to provide the service. In those cases, the retention money also comes under healthcare services. It is also exempted. And renting of shops, auditoriums in the hospital, display of advertisements, etc. will be taxable. What is the point, ma? Renting of shop, let's say coffee shop is there in your hospital, canteen is there, outsourced one, definitely they are taxable. And what about the ambulance services? Transportation of the patient in an ambulance will be exempt. Ambulance includes air ambulance also. Air ambulance means helicopters, then that one also definitely exempted. Next one, services by the veterinary clinic in relation to health care of animals or birds. What is the point here, ma'am? That means just like normal human beings, we are also social animals. Na? That's why just like us, other animals also there. Na? Those animals' treatments are also exempted. Veterinary doctor services are also exempt and we are not liable to pay any GST. And what about the food services? Here it will be divided into two types, ma. Canteen run by the hospital, canteen outsourced by the hospital. If the canteen is run by the hospital, inpatient exempt, others are taxable. If it was outsourced to somebody else, definitely it will be taxable. There is no difference between inpatient and outpatient there. With respect to agriculture. So with respect to agriculture, what is the position, ma? Whatever the agricultural operations, the cultivator will do, all those agricultural activities are exempt. That means here agricultural operations means they are not only restricted to the cultivation of the plants. They are not only restricted to the cultivation of the plants. Definitely the main focus is on breeding of fish, silkworms, even ornamental flowers, forestry, commercial crops like rubber, tea, coffee. Everything will be covered under this notification. Everything is exempt. Second one, process which do not alter the essential features of agriculture produce. Until its basic nature changes, everything will be covered under this exemption notification. Pruning, cutting, harvesting, drying, cleaning, trimming, sun drying, fumigation. Previously it was exempted, now it is taxable. Fumigation is now taxable. Keep focus in this particular word. Fumigation means fog. In our Telugu, pogapettadam. To kill the insects. Okay. So those things comes under fumigation. Fumigation in olden days it is exempted, but now it is taxable. Except that rest of the things are there, definitely they are taxable. Sorry, they are exempted. That means process which changes the essential features means what it will be. Let's say coffee beans, agriculture, coffee powder, non-agriculture, potatoes, agriculture, potato chips, non-agriculture, tomatoes, agriculture, tomato ketchup, non-agriculture, tea leaves, agriculture, tea powder, taxable, paddy, agriculture, rice, taxable, like that. Banana? Canana? హర హర ఫైన్ కార్తీక మాసం అందుకని పవిత్రంగా ఉన్నాను అమంగళం ప్రతిహతమోగా ఓకే మా వాట్ ఈస్ ద థర్డ్ వన్ హియర్ సో విత్ రెస్పెక్ట్ టు దిస్ థర్డ్ వన్ మా అగ్రికల్చరల్ ఎక్స్టెన్షన్ సర్వీసెస్ సో వాట్ ఈస్ meant by this agricultural extension services ma like support services like soil testing, seed testing, and creating awareness to the farmers. All these things comes under this agricultural extension services ma definitely they are exempted. Renting or leasing of agro machinery or vacant land for agriculture in our Telugu polani kauliki ivvadam, definitely those things are that's why English piece is different from our Telugu ma. So listening marathon in English is just actually without screen, seeing the Tamil movie without subtitles. So that's why sometimes a translation is needed. Okay. So polani kauluku teesukodam in our Telugu it is called, definitely it is exempted. Next one, commission agent with respect to paddy. Paddy comes under agriculture. Therefore it is exempt. Now the question is, what are the things that are taxable, sir? Process which alter the essential features of agriculture produce. I told you na, potato chips, tomato ketchup, and retail packing. That's why I told you in regular batches, rice bags up to 25, 5 kgs, 10 kgs, 25 kgs comes under retail packing. They are taxable. After 25 kgs comes under bulk packing, it is exempted. Bulk packing is exempted. Retail packing is taxable. That's why some rice mill owners are doing now 26 kgs. More than 25 comes under bulk packing, no GST will be there. We are doing everything legally, na? Up to 25 you are liable, but my bag is 26 kgs. Therefore it comes under bulk packing. I am not liable to pay any GST. What the business people are saying. And I listen to those things in T-style. Next one, services by Agriculture Produce Marketing Committee. What is this Agriculture Produce Marketing Committee? In our words, it is called as market yard. The best example for that is Guntur Mirchi Yard. In Guntur Mirchi Yard, shops will be there, na? Those shops are given by the market yard committee to the shop owner, the business people there. It comes under renting of shops, ma. It is non-agriculture, definitely it will be taxable. And renting or leasing of agro machinery or vacant land, sir, just now you said that it is exempted now. Yes, if at all it is used for agriculture. See the example there. Renting or leasing of agro machinery for rice mill owner is called as a business person and he is not a farmer. Rice mill owner is called as a business person, is not a farmer, therefore it is taxable. In the same way, commission agent, see the above example, paddy. Paddy is exempt, but whereas rice is taxable. That is a point you need to remember. Okay, ma'am. So this is with respect to agriculture important areas, ma'am. Rest of the things you can ignore from the examination point of view. So 3-4 pages will be there in our material, but these are the things you need to keep focus. Rest of the things you can ignore 100%. And with respect to your religious place, any shops, any rooms, any kalyana mandabs are given on rental basis. We discussed about one exemption now. Yes, ma, any doubt you can ask me, ma, later on after the class. So, regarding this year, ma, with respect to a religious place, any rooms are given on a rental basis. The room rent is per day less than 1,000 rupees, it is exempted. I told you the example of TTD, Tirumal Tirupati Devasthanam. The rooms are less than 1,000 rupees, they are exempted. More than or equal to 1,000, they are taxable. Same point will be applicable to mandap keeper, Kalyana Mandabs also. Regarding that, the room rent per day is less than 10,000, it is exempted. More than or equal to 10,000, it is taxable. In the same way, shops per month rent is less than 10,000, it is exempted. More than or equal to 10,000, it will be taxable. That is a point you need to remember. Later on, you can put a tick mark, ma. Until you search those things in the material, I will move to the next point. Marathon session, na? So that's why you need to listen. Later on, when the time is there, then in YouTube, actually, again, you can watch this. Then you can pause the video and you can search for it. Okay. No, phones are not there. I know. Okay. Phones are not there with you. Okay. I know that, ma. I know that. There are no phones either. No phones in the hostel or in the classroom also. You are not using it. You are not using it, ma. You are not using it. I know that. Okay. So the next point is here. Fitness camps, dance or music classes, definitely they are exempted or taxable, ma. Taxable. What is the dance? Salsa or salsa? Salsa dance programs, aerobics or something like that. Those things comes under definitely exempted or taxable, ma. Taxable. And see this, not every activity by the charitable trust is exempt. Only the charitable activity by the trust is exempt. What is the sentence I said? Not every activity by the trust is exempt. Only the charitable activity by the trust is exempt. Sir, what is meant by the word charitable activity then? What is meant by the word charitable activity then? Not every activity by the trust is exempt. Only the charitable activity by the trust is exempt. Now the question is here, what is meant by the word charitable activity? What is meant by the word charitable activity? Okay. I think some points, promotion of religion, promotion of spirituality, and promotion of yoga, and promotion of health related issues, and promotion of education services to orphans or old aged people, and forest preservation, environment preservation. These are called as charitable activities, ma. Any of these activities are done by you, it is a charitable activity and it is exempted. And rest of the activities are taxable, even done by the trust. See, by trust is exempted, ma. Any service provided to trust is not exempt. Definitely it is taxable. Definitely it will be taxable. And see, conduct of any religious ceremony by any person is exempt. సో ఇన్ అవర్ తెలుగు ఒక జీవితాన్ని బుగ్గిపాలు చేసే ప్రాసెస్ ఏదైతే ఉంటుందో దట్ వన్ ఓన్లీ ఎగ్జామ్టెడ్. గుర్తుపెట్టుకోండి, లీగల్ సూసైడ్, ఎస్ దట్ వన్. లీగల్ సూసైడ్ ఈజ్ ఓన్లీ ద ప్రాసెస్ ఆఫ్ కండక్టింగ్ ద లీగల్ సూసైడ్ ఈజ్ ఎగ్జామ్ట్. అంటే వాడి జీవితాన్ని బుగ్గిపాలు చేసే ప్రాసెస్ వరకు ఎగ్జామ్టెడ్ మా. రిమైనింగ్ యాక్టివిటీస్ ట్యాక్సబుల్. వాడి జీవితం బుగ్గిపాలవడానికి కళ్ళారా చూద్దామని పెళ్లి బస్సు వేసుకొని వెళ్తాం, ట్యాక్సబుల్. వాడి జీవితం బుగ్గిపాలవడం జనాలందరికీ తెలియాలని వెడ్డింగ్ కార్డ్స్ కొట్టిస్తారు, ట్యాక్సబుల్. వాడి జీవితంలో చివరి వెలుగులు కాబట్టి లైటింగ్ పెడతారు, అది ట్యాక్సబుల్. జీవితంలో వాడు చివరిసారి టేస్టీ ఫుడ్ తింటాడు కాబట్టి క్యాటరింగ్ ఇస్తారు, ట్యాక్సబుల్. జీవితంలో చివరిసారి చిరునవ్వు నవ్వుతాడు కాబట్టి ఫోటోలు వీడియోలు తీస్తారు, అది కూడా ట్యాక్సబుల్. సరే, ఎగ్జామ్షన్ దేనికి ఇస్తారయ్యా అంటే ఓన్లీ బుగ్గిపాలు చేసే ప్రాసెస్ వరకే ఎగ్జామ్టెడ్ మా. అంటే మనలో అయితే పురోహితుడు, చర్చ్లో అయితే ఫాదర్, మసీదులో అయితే మౌల్వా ఆర్ సంథింగ్. వాట్ ఎవర్ ద యాక్టివిటీస్ దోస్ పీపుల్, రిలీజియస్ పీపుల్ విల్ డూ, those activities are only exempted. Rest of the things are definitely taxable. Next one. Training or coaching relating to arts, culture by the individual, it is exempt, like painting, traditional music, like that. Even coaching is given by the individual, but still it is exempted. But sports related training, exemption is given to trust only. This point you should keep focus in the exam. Any training or coaching in recreational activities, then coaching is given by the individual, then also it is exempted. But whereas sports coaching given by the charitable trust, then only it is exempted. Recreational activities training even given by the individual, then also it is exempt. But whereas with respect to sports related training, exemption will be given to only to the charitable trust. Sports training given by the charitable trust, exempt. By the others, it is taxable. This is a point that can be asked in the exam. Sports training given by the charitable trust, exempt. Sports training given by the individual, taxable. They can confuse you in this particular point. Next point is education services. With respect to education services, here supplier educational institution, recipient is student, faculty and staff. From them any consideration is received, it is exempt. What is meant by the word educational institution here, ma? What is meant by the word educational institution here? Preschool and school, vocational training centers and courses recognized by Indian law. Recognized by Indian law. These are the three, ma. Preschool and school, courses recognized by Indian law, and vocational training centers. These three are treated as educational institutions. If the supplier is these educational institutions and recipient is students, whatever the fee they will collect from the students, it is exempted and there is no need to pay any GST. Next one. Who is the supplier? Third person. Who is the recipient? Educational institution. Then few activities are specified like transportation, food facility, security and housekeeping, admission test, and fifth one, online educational journals. With respect to these five, to whom exemption is given, ma? With respect to first three, transportation, food facility, security and housekeeping, these three exemption was given only to the school. Supplier any third person, recipient is school, then only these three are exempted. Transportation, food facility, security and housekeeping. These three services are exempt if the recipient is only a school. And fourth one, admission test, exemption will be given to all the three. And online educational journals, exemption will be given to courses recognized by Indian law. Remaining two, it is not exempted. Schools and vocational training centers, online educational journals are taxable. Okay, ma? Transportation, food facility, security and housekeeping. When it is exempted, if the recipient is school. And next one, admission test, exemption will be given to all the three. And next one, online educational journals, courses will be recognized by Indian law. For them only it will be exempted. Okay, ma? Next one. Private coaching like masterminds or obtaining qualification recognized by foreign law. Indian law only exempted ma, foreign law it will be taxable. In the same way, fee charged for admission or eligibility certificate. That means when you want to join in a new school, admission test must be taken. Whatever the amount they will collect for that. In the same way, migration certificate means TC. Definitely they are exempted. Next one. Keep it in mind, only services are exempted, but not the goods. That is, school provides any stationery to the students, it is taxable. Only education service is taxable. Any tie, belt, shoes, uniforms, if it are they are sold by the school, definitely they are taxable. Services by school are exempt. Sale of the goods by the school, the like stationery, definitely it will be taxable. And with respect to this one, that is circus, this is not movie, dramas, dance shows, circus, movies, that is dance shows, music shows, award functions, sports events. If the ticket price is less than or equal to 500, it will be exempted. More than that, full amount will be taxable. What are the circus, drama, dance shows, music shows, award functions, sports events? If the ticket price is less than or equal to 500, it is exempted. More than that, full amount will be taxable. See, that is the point. Services by way of circus, dramas, award functions, music functions, music performance, patient means fashion shows, sports event, planetarium means by telescope stars you will see those things. If the ticket price is up to 500, it is exempted. More than that, full amount will be taxable. In the same way, zoo, museum, national park, tiger reserve, irrespective of the ticket price, they are exempted. Zoo, museum, national park, tiger reserve, irrespective of the ticket price, they are exempted. Next one, this is a point. Zoo, museum, national park, wildlife sanctuaries, tiger reserve, protected places, irrespective of the amount, definitely it is exempt. Next point is performance of artists. With respect to artist performance, if it all it is a classical one or a folk one, you will get the exemption up to 1.5 lakhs. Here, this fellow is singing a song. If it all it is takida takida tha, then definitely you will get the exemption up to 1.5 lakhs. If it all it is yo-yo, remix, in that case, automatically full amount will be taxable. Same point will be applicable to musical instruments also. Musical instruments like veena, violin, tabla, traditional ones, you will get the exemption up to 1.5 lakhs. If it all there are western ones like guitar, keyboard, etc., always full amount will be taxable. And what about this one? Is it exempted or taxable, Comes under puppet show in our Telugu Tolubomalata. Panchatantra, stories in olden days. It comes under folk in our Telugu Janapadalu. Definitely it will be exempted. Up to 1.5 lakhs. What about this one? Whether it is exempted or taxable, it comes under western one. Always full amount will be taxable. It comes under western one. Always full amount will be taxable. Like see, classical music, classical dance, classical dramas, you will get the exemption up to 1.5. But see the third one. If those classical or folk ones performed as a brand ambassador, then always full amount will be taxable. That means Zakir Hussain is famous for his tabla. He conducted his own musical program. He will get the exemption up to 1.5 lakhs. But whereas he performed the show on behalf of Taj Mahal tea, Vahtaj, in that case definitely you will not get any exemption because you are doing that as a brand ambassador. and Western music, mimicry, modern theater, magic shows, movie artists, TV artists, painting, sculpture, everything will be taxable except above folk music, folk dance, folk theater and classical ones. Rest of the things are taxable. And passenger transport service, ma. So with respect to passenger transport service, we'll have, yes. With respect to passenger transportation, ma, if at all it is a rail transportation, special railways like metros, monorail, tramway are exempt. If at all they are general railways, then AC are taxable, non-AC, first class is taxable, others are exempt. What is meant by the word others there? General and sleeper are exempted. Okay. Now, water transportation of passengers. Then inland waterways. Inland means specified sea routes exempt. Other than specified sea routes from outside India to India, from India to outside India, simply it is an international journey, is taxable. And within India, then public transport but used for tourism, taxable. Others, it will be exempt. And personal transport, always it will be taxable. Public transport tourism purpose means Papikondal. I told you the example of lunch facility there. It is for tourism. Therefore, even though it is public transport, it is taxable. Others means I told you the example of Kerala boat. Just like our city buses, for commuting within the city, they will use the small boats there. Definitely it comes under public transport, it is exempted. And personal transport, I told you the example of Anand Ambani engagement, which was held in a ship. Ship was together. So, fine. So, definitely it is taxable, ma. That is water transportation and other transportation like ropeway, cable car, aerial tramway. I told you the example of Vizag Kailasagiri or Srisalem Patalaganga area. Those things are definitely taxable. And with respect to air transportation, northeast states, Nagaland, Manipur, Tripura, Mizoram, Sikkim, Arunachal Pradesh, Assam, Meghalaya, Bagdogra in West Bengal, if either origin or destination is from any of these places, and if at all it is a economy class, then only it is exempt. Rest of the cases, every other airports are taxable. And road transport, metered cab, that means metered taxis, autos, e-rickshaws, exempted. Radio taxis are always taxable. What is meant by the word radio taxi? Two-way GPS tracking will be there. Your location will be known to the driver and driver location will be known to you. It comes under radio taxi like Ola, Uber, etc. Definitely whether it is AC or non-AC, both are taxable. And apart from that, carriages can be divided into two types. One is stage carriage, second one is contract carriage. So with respect to stage carriage, what is the position? AC, taxable, non-AC, exempt. AC, taxable, non-AC, it will be exempt. Contract carriage, AC is taxable. Non-AC also, tourism, conducted tour, higher basis, it is taxable. Others, exempt. Tourism means, I told you what we can say, Vizag, near Vizag, Borra caves will be there. Na? From there, you can hire a taxi to see the, what it is called, Araku Valley and coffee gardens, everything. And Chapra, I think, waterfall will be there. So everything actually we can see there. Okay, those things definitely taxable. And conducted tour. In our Telugu, Uttara Bharat Desha Punyakshetrala Yatra. Chardham Yatra, like that. Generally they will go for that. Now, conducted tour, definitely it will be exempted. Yes, you remember. Yes, I understood. And next one is higher basis. With respect to higher basis, what is the position, ma? Bus for marriage. What is that movie? I told you. Ashoka Vanamlo, Arjuna Kalyanam. In that movie, hero hires a non-AC bus to go to the marriage. But still, it is taxable. Except these areas, non-AC contract carriage is exempt. This is with respect to transportation of passenger, ma. With respect to transportation of the goods by road, that means GTA. What is the position, ma, with respect to GTA? Random goods are exempted. What is meant by random goods? You know that, na? relief materials, defense items, newspapers, agriculture produce, milk, organic manures. Those random goods by GTA, definitely it is exempt. Sir, other than random goods, sir, specified persons taxable, others are exempted. This is with respect to road. I did not write that. In fact, I just want to write that, but time is not sufficient. That's fine. Road transport, random goods, exempt, other than random goods. What is the position mark? Specified recipients. Who are specified recipients? Factory, society, like that. Then it is taxable. Others it will be exempt. Pipelines, petrol, etc. always taxable. Railways, random goods exempt. Others are taxable. And apart from that, airways, always any goods taxable. Any goods, airways taxable. And waterways, inland waterways, exempt. Any goods exempt. Other routes, random goods exempt, others are taxable. That is the story ma, with respect to transportation of passengers. Next one is legal service ma. Who is the supplier? Individual advocate. Who is the recipient? Individual for personal use. Unregistered business entity. Registered business entity. Tribunal, lawyers. These are the cases ma. Okay. So junior lawyer to individual for personal use, exempt. Junior to unregistered person, exempt. Junior to registered person, taxable. Junior to tribunal, not applicable. Junior to junior, exempt. Junior to individual for personal use, exempt. Junior to unregistered person, exempt. Junior to registered person, taxable. Junior to tribunal, not applicable. Junior to junior, exempt. Next one, arbitral tribunal to individual for personal use, exempt. Tribunal to unregistered business entity, exempt. Tribunal to registered person, taxable. Tribunal to tribunal, not applicable. Tribunal to lawyers, not applicable. Person representing arbitral tribunal means he will provide service only to the tribunal, it is taxable. Rest of the cases it is not applicable. Last but not the least, senior advocate to individual for personal use, exempt. Senior to unregistered person, exempt. Senior to registered person, taxable. Senior to tribunal, not applicable. Senior to junior, taxable. Junior to junior, exempt. Senior to junior, taxable. That is the thing. Something can be twisted in the exam. Junior to junior, exempt. Senior to junior, taxable. And this is with respect to services provided by the sports body here. That means any individual as a player, as a referee, as an umpire, as a coach, as a team manager provide services to a recognized sports body like BCCI, it is exempt. Same individual as a player, as a referee, as an umpire, as a coach, as a team manager provides to an unrecognized sports body like IPL, it is taxable. It is taxable. That is the point. Recognized sports body like BCCI, it is exempt. What are the things? Player, referee, umpire, coach, team manager. To a recognized sports body, it is exempt. And unrecognized sports body like IPL. Sir, IPL is unrecognized. Yes, because it does not represent the country. IPL country represent cheyadu kada. That's why it is unrecognized. That is the logic. Okay ma, recognized sports body like BCCI, exempt. Unrecognized sports body like IPL, taxable. One recognized sports body to another recognized sports body, that is BCCI to ICC, International Cricket Council, it is exempt. In the same way, any individual as a team selector, as a commentator, pitch curators and batting pitch and bowling pitch and technical experts, even to a recognized sports body also, it is taxable. Even to a recognized sports body also, it is taxable. Next one is with respect to government. This is, I told you the point of government here. Renting of immovable property by the government. See, to the non-business entity or government, exempt. If the recipient is a business entity, what is the thing we need to check here? Consideration. If the consideration is less than or equal to 5,000, it is exempt. If the consideration is more than 5,000, it is taxable. Sir, under RCM or under FCM, sir? If the recipient is registered, RCM. If the recipient is unregistered, FCM. Sir, this 5,000 is needed to be counted if at all it is a normal supply, transaction basis, continuous supply, yearly basis, this 5,000 is needed to be checked. And see this, any other service. If the recipient is non-business entity or government, it is exempt. If the recipient is business entity, then we need to check whether it is registered or unregistered. If at all it is unregistered, it is exempt. Registered, now we need to check the consideration. Consideration is less than or equal to 5,000, exempt. Consideration is more than 5,000, taxable under RCM. These are the two things. I think I asked you to copy also at the time in the notes. Please read it once, then you will get a better idea regarding that. And renting of conveyance. Goods vehicle. That means మన vehicle రెంట్కి ఇస్తున్నాం ఇక్కడ. Goods vehicle, if the recipient is GTA, it is exempt. Third party to GTA, goods vehicle is given on rent, it is exempt. Passenger vehicle, manually operated means petrol or diesel. This is electronically operated, that is its meaning. If at all it is a normal one, petrol or diesel one, if the recipient is a transporter who will arrange transport to the school, it is exempt. Renting of motor conveyance, if at all it is a petrol or diesel bus, then if the recipient is the transporter who will provide transport service to the school, it is exempt. And another exemption, seating capacity is more than 12. Recipient is a state transport undertaking, then also it is exempt. Best example, Volvo bus was given to APSRTC on rent. It is exempt because APSRTC is a state transport undertaking. Next one, EVs, electrical vehicles. Capacity is more than 12. Recipient is a local authority, then it is exempt. That means local city buses. In order to reduce the pollution, if the recipient is a local municipality and the bus is a EV, electrical vehicle, then the rent paid is exempt. There is no need to pay any GST. That's it with respect to exemptions, ma'am. Okay, ma'am. So whereas with respect to time of supply, the next topic we need to start with, the first point is the overview of time of supply. That means what is the purpose of time of supply? So what is the definition and significance of time of supply? Generally occurs on the 20th of the next month and crucial for accurate tax calculation and timely payment. That means, first of all, what is meant by the word time of supply? At what point of time recipient is liable to pay the GST? That will be decided by time of supply. So if time of supply arises in the current month, the due date will be next month 20th. That is the first point. If, say for example, we are there in the month of November. If time of supply arises in the month of November, then what will happen, ma? Then what is the due date for the payment of tax? Next month 20th, that is December 20th is the due date. That is the significance of time of supply. So what are the advantages or significance of time of supply, ma'am? First one, at what point of time recipient is liable to pay the GST? And second one, at what rate, whether it is 10%, 20%, what rate we need to consider. Second one, if time of supply arises in the current month, in that case, the due date will be next month 20th. That is the significance. Second one, categories of time of supply. Separate provisions for goods and services. Why there are separate provisions for goods and services? Why with respect to time of supply there are separate provisions? What can be the reason? That means with respect to goods, section 12 is there. With respect to services, section 13 is there. Why there are separate provisions for goods and services? Because tax rates will be different from goods and services. That's why there are separate provisions for goods and service. The reason is tax rate for the goods as well as tax rate for the service are different. Okay, ma. So the next point is with respect to goods. This is time of supply with respect to goods, ma. Which section deals with time of supply with respect to goods? Section 12. In that, how many subsections are there? 6 subsections are there. 12.1 naam ke vaste, that means for the namesake. 12.2 FCM, 12.3 RCM, 12.4 vouchers, 12.5 residual cases, 12.6 additional consideration. In that we need to discuss about initially FCM, time of supply with respect to goods. So FCM, what is meant by FCM here, ma? Forward charge mechanism. What is the section number? 12.2. So what is the time of supply with respect to 12.2? We need to see now. Advance payment. Sorry, I think about one sentence is there. Yes. So what is the time of supply under FCM? So with respect to this one, FCM, ma, forward charge mechanism. What is the point there, ma? With respect to FCM, what is the time of supply? Earlier of date of invoice or last date for the issue of invoice, whichever is earlier. 12.2, what is the time of supply, ma? Date of invoice or last date for the issue of invoice, whichever is earlier will be the time of supply. The question is here, date of invoice can be found out from the invoice itself. How to find out the last date for the issue of invoice? How to find out the last date for the issue of invoice, ma? As per section 31. What does 31 says? This is the last date for the issue of invoice, ma? Section 31. With respect to section 31, how many circumstances are covered? Anybody remembers? 4 circumstances. When physical movement was there, when there is no physical movement, continuous supply of the goods, sale or return basis. So see the first one. For the goods with the physical movement, what is the last date for the issue of invoice, ma? On or before date of removal or date of dispatch. That means when we can decide that there is a physical movement or not, ma? When goods comes towards us, in that case, it will be treated as physical movement was there. But when we are moving towards the goods, it will be called as no physical movement. In our Telugu, goods మన దగ్గరికి వస్తున్నాయా, మనం goods దగ్గరికి వెళ్తున్నామా? Goods మన దగ్గరికి వస్తే there was a physical movement. లేదు మనం goods దగ్గరికి వెళ్తున్నాం. In that case, there is no physical movement. In this way, we can define whether there is physical movement or not, ma. Okay. So if at all there is a physical movement, in that case, what is the position, ma? What is the last date for the issue of invoice? On or before date of delivery, on or before date of removal or date of dispatch. And when there is no physical movement, in that case, what is the position, ma? When there is no physical movement, then the date when the goods are made available to the recipient or date of delivery. Goods with movement, what is the example for that? Amazon. With respect to Amazon, goods will come towards us or we will move towards the goods. Goods will move towards us. That means there is a physical movement. In that case, what is the last date for the issue of invoice, ma? On or before date of removal or date of dispatch from the factory. When there is no physical movement, for that, what is the best example? DMart. That means we will move towards DMart to purchase the goods. In that case, what is the last date for the issue of invoice, ma? In that case, what is the last date? On or before date of delivery or the goods when they are made available to the recipient, that is the last date for the issue of invoice. Third one, continuous supply. Sir, what is meant by continuous supply? First of all, in order to treat any supply as a continuous supply, so these are the conditions, ma. First one, a recurring nature must be there. Second one, there is obligation to make the periodic payment. If these two conditions are satisfied, it is a continuous supply of the goods. What is meant by continuous supply of the goods, ma? First one, recurring nature must be there. Second one, there is an obligation to make the periodic payment. If these two conditions are satisfied, then it is a continuous supply of the goods. What is the example for continuous supply of the goods, ma? Newspapers, milk packets, all these things comes under continuous supply of the goods. Sir, if at all it is a continuous supply of the goods, then what is the last date for the issue of invoice? At the time of issue of periodic statement or receipt of payment, whichever is earlier. Simply date of periodic statement or date of payment, whichever is earlier, that is the last date for the issue of invoice. Okay. Next one is here. Sir, sale or return basis. What is this sale or return basis, ma? With respect to sale or return basis, what is the last date for the issue of invoice? Sale or return basis. Date of acceptance or from the date of removal 6 months, whichever is earlier, is the last date for the issue of invoice. With respect to sale or return basis, what is the position, ma? What is the last date for the issue of invoice? Date of acceptance or from the date of removal 6 months, whichever is earlier. Date of acceptance or from the date of removal 6 months, whichever is earlier, that is the last date for the issue of invoice. Okay, ma'am. Right. So these are the 4 cases. What is the topic we are discussing, ma'am? 12.2. With respect to 12.2. Yes, ma. So what is the topic we are discussing? 12.2. What is the time of supply as per 12.2? Date of invoice or last date for the issue of invoice, whichever is earlier, that is the time of supply. Okay, date of invoice can be find out from the invoice itself. How to find out the last date? As per section 31. Under section 31, how many cases are there? 4 cases. When physical movement was there, what is the last date? On or before date of removal or date of dispatch. When there is no physical movement, on or before date of delivery, and with or date when they are made available, and continuous supply of the goods. What is the last date? Date of periodic statement or date of payment, whichever is earlier. Sale or return basis, what is the last date? Date of approval or from the date of removal 6 months, whichever is earlier, that is the last date. That last date will be compared with the date of invoice. In that, whichever is earlier will be the time of supply. Next sentence. So advance payments are not considered for time of supply except for composition dealer or online money gaming. Oh my God. Okay, ma. So generally, what is the rule, ma? With respect to goods, whenever advance is received, we are not liable to pay any GST. What is the sentence I told you, ma? Whenever advance is received in relation to goods, we are not liable to pay GST because time of supply will arise based on invoice, not on the date of payment. That's why with respect to goods, when advance is received, what is the position, ma? We are not liable to pay any GST. But further 2 exceptions are there. One is composition dealer. Second one is online money gaming. One is composition dealer. And what is the second one, ma? Online money gaming. Okay, ma. In these 2 cases, at the time of receipt of advance itself, we are liable to pay the GST. What is the general rule? Advance payments nor not considered for time of supply in relation to goods. What is exception? Composition dealers and online money gaming, we are liable to pay the GST even on advances also. This is the second point. Third one. And we discussed these two specific rules for continuous supply of the goods and goods sent on approval. So what is meant by continuous supply of the goods? First one, recurring nature. Second one, periodic payment. If these two conditions are satisfied, it is a continuous supply. And with respect to continuous supply of the goods, what is the last date? Date of periodic statement or date of payment, whichever is earlier. With respect to sale or return basis, what is the last date? Date of acceptance or from the date of removal, 6 months, whichever is earlier. That is 12.2 FCM, which is completed. Now, what is the point we need to discuss, ma? 12.3 RCM. So, with respect to RCM, how many dates will be there, ma? 3 dates will be there. So, with respect to RCM, 3 dates will be there. What are those 3 dates, ma? Earlier of, date of receipt of the goods, date of payment, from the date of invoice, 31st day. In these 3 dates, which one is earlier, that one will be the time of supply. With respect to goods, RCM, what is the time of supply, ma? Date of receipt of the goods, date of payment, from the date of invoice, 31st day. These are the 3 dates, ma. In that earlier one will be the time of supply. Sir, if those dates are not available in the problem, if the above dates not determinable, the date of entry in the books of accounts of recipient will be the time of supply. What is the general rule under 12.3? Date of receipt of the goods, date of payment, from the date of invoice, 31st day. In these 3 dates, which one is earlier, that one will be the time of supply. If these dates does not works out, in that case, what is the position, ma? The date when the supply is entered in the books of accounts of recipient, that one will be the time of supply. Okay, ma. Next one. These are the 2 points, and this one already we discussed. So, 12.2, 12.3. These are the important points, ma. I think everything is just covered. See, in case of composition dealer and online money gaming, even when advance is received, GST is payable. So everything I covered this side. Why separate provisions are there for goods and services? Because tax rates are different for goods and service. So I think everything I covered this side. Yes, ma. So now 12.2 and 12.3 was completed, ma. What is the next thing we need to see? 12.4, 12.5, 12.6, 13.4, 13.5, 13.6 are common points. Therefore, we will discuss them together. Now, with respect to services, we need to see. So, time of supply with respect to goods is over. What is the next point we need to see, ma? Time of supply with respect to services. So, time of supply with respect to services, what is the position, ma? This is 13.2. This is 13.3. What is 13.2 deals with? FCM in relation to services, ma. FCM in relation to services. FCM in relation to services, what is the point there? So, what is the time of supply, ma, with respect to this? What is the time of supply? Anybody remembers? When invoice is issued within the time. Sir, what is meant by this within the time? What is 13.2, ma? When invoice is issued within the time, earlier of date of invoice or date of payment. The question is here, what is meant by this within the time? 30 days. From which date this 30 days shall be counted from? From the date of completion of service. Within 30 days, invoice is issued. Then what is the time of supply? Date of invoice or date of payment, whichever is earlier. Sir, if invoice is not issued within the time, what is meant by within the time here also? 30 days. If invoice is not issued within 30 days, then what is the time of supply? Date of service or date of payment, whichever is earlier. If invoice is issued within 30 days, then what is the time of supply, ma? Date of invoice or date of payment, whichever is earlier. If invoice is not issued within 30 days, then date of service or date of payment, whichever is earlier. Okay, ma. But whereas with respect to banks, financial institutions and NBFCs, these 30 days are going to be replaced by 45 days. Are you able to recollect, ma? If at all it is a bank, financial institution, NBFC and insurance, these 30 days are going to be replaced by 45 days. Okay. This is 13.2 FCM. Now 13.3 RCM. With respect to RCM, what is the time of supply, ma? This one. Earlier of date of payment or from the date of invoice 61st day, whichever is earlier. With respect to goods, 31st day. But whereas with respect to services, ma, what is the time of supply under RCM 13.3? Date of payment or from the date of invoice 61st day, whichever is earlier. Sir, if these dates are not available, if the above dates are not determinable, then what is the time of supply? The date of entry in the books of accounts of recipient will be the time of supply. Okay, ma? This is 13.3. What does 13.3 deals with? RCM. What is the time of supply under RCM in relation to service? Date of payment or from the date of invoice 61st day, whichever is earlier. If these things does not work out, then what is the time of supply? Date of entry in the books of accounts of recipient. That is the time of supply. Next one, special cases. Special cases, what is covered here? First one, associated enterprises. What is meant by this associated enterprises, ma? If two organizations which are having financial interest in one another's business, they are known as associated enterprises. What is meant by the word associated enterprises, ma? What is meant by associated enterprises? If two organizations which are having mutual financial interest in one another's business, they can be called as associated enterprises. For example, A Limited is having shares in B Limited, B Limited is having shares in A Limited. In that case, A Limited and B Limited can be called as associated enterprises. In case of associated enterprises, supplier is there in outside India. In that case, what is the time of supply? Date of entry in the books of accounts of recipient or date of payment, whichever is earlier. In case of associated enterprises and supplier is located outside India, in those cases, what is the time of supply, ma? The date of entry in the books of accounts of recipient or date of payment, whichever is earlier. So this is a special point which is there in 13 subsection 3. This point is also covered under 13 subsection 3, ma, technically. Next one is small amount of advance. Are you able to recollect, ma? Small amount of advance. Excess payment of 1,000 rupees over the invoice. Supplier can choose the date of receipt or the date of invoice issue for that excess. Are you able to recollect what is the example we discussed in the classroom? Airtel, ma. Now that means mobile. Let us assume that what is point here is from the how much is the invoice value that is there? In excess of that, if the payment is made, and such excess amount is less than or equal to 1,000 rupees. In that case, for that excess, there is no need to issue a separate invoice for that, the month in which it is received or for which month the excess is going to be adjusted. These things will be called as supplier intention. Based on that, time of supply will be decided. For example, take the example of Airtel. Let us assume that I am using Airtel postpaid. My monthly bill is 1600, but I paid 2000 rupees. But that particular customer care center executive told me that, sir, I don't have any change for this. I will adjust this particular 400 for the next month bill. I said okay with that. What is the invoice value? 1600. What is the amount I paid? 2000. How much excess I paid? 400. 400 is less than 1000? Yes. In that case, for this 400, there is no need to issue a separate invoice. The month in which it is received, that is November month invoice, or which month it is going to be adjusted, December month invoice, it depends upon the supplier intention. Who is the supplier here? Airtel. It depends upon the intention of Airtel. That is the point. Okay, ma'am? Next one. Invoice issue deadlines with respect to services. Ma. What is the general rule? 30 days. From that service provision means the date when the service was completed. From that particular date, within 30 days, invoice must be issued. But whereas with respect to banks, financial institutions, NBFCs, what is the time limit for that? 45 days. 45 days. Sir, what about the continuous supply? Just like with respect to goods, which is having a continuous supply, services will also have a continuous supply. Na? With respect to continuous supply of service, what is the point, ma? With respect to continuous supply of service, when a service is called as continuous supply of service, if three conditions are satisfied, first one, recurring nature, second one, periodic payment, third one, contract period is more than 3 months. 1 point extra will be there in case of continuous supply of service. Okay, with respect to goods, only 2 points, recurring nature and periodic payment obligation. But whereas with respect to services, 3 conditions will be there. First one, recurring nature. Second one, periodic payment. Third one, contract period is more than 3 months. If all these 3 conditions are satisfied, then what is the position, ma? It is a continuous supply of service. If at all it is a continuous supply of service, then what is the last date for the issue of invoice, ma? The last date for the issue of invoice in case of continuous supply of service. Due date is ascertainable on or before the due date. Due date is not ascertainable on or before the date of payment. Payment is linked with completion of event. On or before completion of the event, invoice is needed to be issued. With respect to continuous supply of service, 3 points will be there, ma. What are those 3 points, ma? Due date can be ascertained on or before the due date. Due date cannot be ascertained on or before the date of payment. Payment is linked with completion on or before completion of the event. Those are the last date for the issue of invoice. Due date ascertainable. What is the example I told you? Very good, ma. Mobile postpaid. With respect to mobile postpaid, what is the position, ma? Every month fixed due date will be there, na? With respect to mobile postpaid, every month fixed due date will be there. In those cases, what is the position, ma? On or before due date, invoice is needed to be issued. If the due date cannot be ascertained, what is the example? We had a discussion on that. Best example discussed is very good, ma. Cable TV. In olden days, cable TV, there is no fixed due date. Whenever we feel comfortable, we will make the payment. In those cases, what is the last date? When the payment is made, that is the last date for the issue of invoice. Third one, payment is linked with completion of event. What is the example we discussed for that? Construction contracts in proportion to work certified. Just like contract costing is also there, na? Contract costing is there in your syllabus. In that work certified, in that proportion payment will be done, na? Let's say, for example, if first floor is completed, 30%, second floor is completed, another 30%, if the remaining completed, balance 40%. In this case, what is the last date for the issue of invoice, ma'am? In this case, what is the last date? On or before completion. With respect to first 30% payment, what is the last date? First floor completion. With respect to second 30%, what is the last date? Second floor completion. Balance 40%, remaining completion is the last date for the issue of invoice. This is with respect to continuous supply of service. Okay, ma'am? Is it clear? Fine. This is the invoice deadlines. Okay, sorry. Next one is what is the next point here? What is the next point? Common points for goods and services. What are the common points for goods and services? 12.4, vouchers, 12.5, residual cases, 12.6, additional consideration. Same, 13.4, vouchers, 13.5, residual cases, 13.6, additional consideration. Okay, ma. These are the points. Vouchers. With respect to vouchers, what is the time of supply, ma? With respect to vouchers, what is the time of supply? Supply is identifiable, date of voucher issue, example Zomato voucher. Supply not identifiable, date of voucher redemption, example Reliance Rent voucher. That means at the time of issue of voucher, supply can be identified, issue of voucher. If at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. Take for Zomato voucher. Generally, Zomato voucher, you can identify the supply, na? That means when you place the order, below that apply coupon code option will be there in the mobile application. Then there will be a list of the coupons. If you use access credit card, something, if the order value is some 500 above, flat 75%, like that offer will be there, na? Let's say 500 rupees more than purchases, flat 75 rupees offer was there. In that case, which item you are going to adjust at? The order you are going to make. It was already there on the screen, na? That means which item against you are going to redeem it. Already you know before redeeming itself. In those cases, at the time of issue of voucher, supply can be identified, issue of voucher. And if at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. Take the example of Reliance Rents voucher as well as Amazon gift coupon is the best example for this. Let's say with respect to Amazon gift coupon, at the time of issue of coupon or voucher, we cannot identify for which item we are going to use this Amazon gift coupon. We can use it for electronic gadgets, we can use it for Amazon fashion, we can use it for say Kindle books, and say whatever the books you want to purchase, you can use it for. That means at the time of issue of voucher, is it possible to identify the supply or not? No, it is not possible to identify the supply. In that case, issue of voucher or redemption of voucher? Redemption of voucher will be the time of supply. So with respect to vouchers, what is the time of supply, ma? If at the time of issue of voucher, supply can be identified, issue of voucher, supply cannot be identified, redemption of voucher. Next one, interest, late fee and penalties. What they will be called as, ma? Which section is applicable? Additional consideration 12.6. Interest, late fee, penalties, we will call them as contractual penalties. What is the section that is applicable, ma? 12.6 or 13.6? 12.6 or 13.6 is the section that will be applicable. With respect to contractual penalty, what is the position, ma? With respect to contractual penalties, what is the time of supply? Time of supply is the date when the supplier receives the additional value. Simply, when that additional consideration is received. The date when that additional consideration is received, that is the last date for the issue of invoice there. That is the type of supply. Next one. It applies to delayed payment of consideration. That means contractual penalties. This is the point. So, with respect to 12.6 or 13.6 contractual penalty, what is the time of supply, ma? The date when that additional consideration is received, that one will be the time of supply. And what about the next one? 12.5 or 13.5. What does this 12.5 or 13.5 deals with, ma? Residual cases 12.5 or 13.5. Where it is not possible to apply 12.2, 12.3, 12.4. Or where it is not possible to apply 13.2, 13.3 and 13.4. In those cases, what will be applicable, ma? These residual cases will be applicable. With respect to that, what is the time of supply, ma? If GST return is filed, date of filing of that GST return. If no return was filed, then date of payment will be the time of supply. Generally, black money transactions, when income tax right, GST right was there, in those cases 12.5 or 13.5 will come into C. As per 12.5 or 13.5, what is the time of supply? If GST return was filed, filing of GST return, when no return was filed, date of payment will be the time of supply. So these are the points one need to remember, ma. And what is meant by the word date of payment, you need to remember that point also. This is date of payment. This is date of payment from the point of view of the supplier. This is the date of payment from the point of view of the recipient. What is the date of payment, ma? From the point of view of the supplier? You know this, na? The date when it is entered in the books of accounts or the date it is credited to the bank account, whichever is earlier. Whereas the same date of payment from the point of view of recipient, what it can be, ma? Date of payment entered in the books or debited in the bank, whichever is earlier. What is the difference? Supplier will think when the money is credited to his bank account because he is going to receive the money. Whereas if you are taking from the point of view of the recipient, in that case, we need to consider the date when the money is debited to the bank account. That is the difference one need to remember. Okay, ma? Date of payment from the point of view of supplier means date of entry in the books of accounts or the money credited to the bank account, whichever is earlier. If at all it is RCM, we are seeing the point from the point of view of the recipient. In those cases, what is the date of payment, ma? The date when it is entered in the books of accounts or debited in the bank account, whichever is earlier. This is the entire concept. Now, even one line also I did not skip it in that. So the entire time of supply was completed. In this, the most important ones are 12.2, 12.3, 13.2, 13.3. These are the most important ones, ma. Rest of the things based on the time you need to go through them. Okay. So this is with respect to type of supply. Okay, ma'am. So the next topic we need to start is here, value of supply. First point is what is the purpose, why one should know about the value of supply. We will see the definition and importance of this. And what are the key components of value of supply, we will see first. So the importance, value of supply is a crucial concept in GST taxation because it determines the taxable value on which GST is levied. That means how to compute the rate of tax? How to compute the rate of tax, ma? Sorry, sir, how to compute the tax payable? Value into rate of tax. Rate of tax can be determined by the time of supply. Rate of tax can be determined by the time of supply. In order to apply the 10% or 20%, there must be some value, na? Without value, you cannot determine the amount of tax, na? Therefore, that is the importance of value of supply, because this section 15 determines the taxable value on which GST is to be levied. So that is importance of section 15 here. So section 15, what is section 15 here deals with, ma? It determines the taxable value on which GST is levied. This is the purpose of section 15. What is the purpose and the importance of section 15, ma? It determines the taxable value on which GST is to be levied. Sir, what is the key component of this value of supply? That means, what is the formula? Anybody remembers what is the formula? Transaction value plus 15.2 inclusions minus 15.3 inclusions is equal to value of supply. That is taxable value. This is the formula, na? What is the formula? Transaction value plus 15.2 inclusions minus 15.3 exclusions is equal to value of supply. Transaction value plus 15.2 inclusions minus 15.3 exclusions is equal to value of supply. That is the point I just wrote here also. See, transaction value, inclusions, that is 15.2, exclusions, that is 15.3. And this is the point, ma. This is the formula what we have discussed. Okay, fine. Now the question is here, sir, what is meant by the word transaction value then? What is meant by the word transaction value then? What is meant by the word transaction value, ma? Price actually paid or payable for the supply, which is considered as the primary basis for value of supply calculation, simply sale price. What is meant by the word transaction value, ma? Sale price. What is meant by this sale price? What is meant by this sale price, ma? Sale price paid or payable for the supply that is made. But in order to accept the transaction value, I think two conditions are required to be satisfied. Na? There are two conditions for using the transaction value. What are those two conditions, ma? Supplier and recipient should not be related persons. And second one, price is the sole consideration for the supply. If these two conditions are satisfied, then as per 15 subsection 1, taxable value is equal to transaction value plus some adjustments. First point is, supplier and recipient should be related parties. Supplier and recipient should not be related parties. What is meant by the word related parties, ma? What is meant by related parties? Anybody remembers in supply chapter, common directors, partners, employer and employee, more than or equal to 25% of voting power, holding and subsidiary, third party controlling these two controlling a third party, same family member, sole selling agent. All these people are treated as related persons. If any of these related persons are there, then 15.1 will not be applicable. Instead of that, what is the section we need to apply? 15.4 valuation rules. If any one of these conditions are not satisfied, then 15.4 will come into scene. As per 15.4, valuation rules will come into scene, ma, which is not in our CA inter syllabus. Okay, so what is the second condition? Price should be the sole consideration for the supply. Sir, what is meant by price is the sole consideration for the supply? What is the meaning of the word price is the sole consideration? Anybody remembers? Whatever the consideration that is moving from recipient to the supplier, 100% of that consideration must be in terms of money. Then only it is the price is the sole consideration. What is meant by price is the sole consideration, ma? Whatever the consideration that is moving from buyer to the seller, 100% of that consideration must be in terms of money. Then only it is called as price is the sole consideration. If these two conditions are satisfied, then as per 15.1, taxable value is equal to transaction value. So, what are the two conditions that are required to be satisfied, ma'am? First one, supplier and recipient should not be related persons. Second one, price is not the sole consideration, or price should be the sole consideration. Price should be the sole consideration. If these 2 points are satisfied, then taxable value is equal to transaction value. If any one of these conditions are not satisfied, in those cases, what will be applicable, ma? Valuation rules as per 15 subsection 4. That is the point. See, I just wrote the same point. Limitations of transaction value, that is not applicable in case of related party transactions. Alternative valuation methods used when conditions are not met, that is 15 subsection 4. Valuation rules will come into C. This is the first point. Okay. Now the next point is, now we completed 15 subsection 1 ma. Now we need to see what is the second one? Inclusions in value of supply. Which section deals with this particular inclusions, ma? 15 subsection 2. How many inclusions are there? Very good. 5 inclusions are there, ma. There are only 5 inclusions as per 15 subsection 2. Now we will see what are those 5. What is the first one in that? Taxes and duties. So with respect to taxes and duties, what is the position, ma? It includes all the taxes, duty, cess and fee other than GST. That means if the problem is given like this, customs duty 40,000, CGST 20,000. In that case, and sale price is 1 lakh. In that case, what can be the taxable value? 1 lakh is the sale price, 40,000 is the customs duty, 20,000 is the GST amount. In that case, what is the taxable value then? 1 lakh 40 only. Sir, 1 lakh is the value plus for that customs duty. Any taxes other than GST is includable or excludable? Includable. Any taxes other than GST is includable. That is the first point. Therefore, customs duty is includable or excludable? Includable. And second one. What is the second one, ma? What is the second one? If it, that means GST in our example. First one is customs duty 40,000 includable. What is the second one? GST 20,000. Is it includable or excludable? Excludable. Why, ma? Any taxes other than GST is includable. That is the point. Any taxes other than GST is includable. See, examples, municipal taxes, excise duty, etc. I think in the problems you are having municipal taxes. In the problems you are having municipal taxes, ma'am. Okay, those are the points. The second one, it excludes TCS. It is only a tax collection mechanism. So, what is the summary of the first point now? Any taxes other than GST but excludes TCS. Why TCS is excluded, sir? It is only a interim levy. Why TCS is excluded, ma? It is only a interim levy. That's why TCS was excluded. So what is the first point summary? Any taxes other than GST but excludes TCS. That is the first point. Now, what is the second point, ma? Third party payments. That means supplier obligation was met by the recipient. What is the second point, ma? Third party payments means supplier obligation was met by the recipient. See, payments made by the recipient to the third party on the supplier's behalf. Then those amounts are needed to be added to the taxable value. For example, X is the supplier and Y is the recipient. Total contract price is 100 rupees. In that 100 rupees, X asked Y to pay to Z 20 rupees and pay the balance to him. In this case, how much amount that is paid to the supplier? 80 rupees. Now, what is the taxable value then? Is it 80 rupees or 100 rupees? 100 rupees. Why, ma? Because that particular 20 rupees was paid by recipient to the third party on the instruction of the supplier. In that case, includable or excludable? Includable. That is the line. Na? Payment made by the recipient to the third parties on the supplier's behalf. Included if supplier is contractually liable for the service. What is this? If the supplier is contractually liable for the service means, let's say for example, recipient went to the supplier's daughter marriage. Recipient went to the supplier's daughter marriage. In that marriage, he gifted 10 lakhs worth diamond ring to the supplier's son-in-law. What he has done, ma? He gifted 10 lakhs worth diamond ring to supplier's son-in-law. In that case, what is the position? That 10 lakhs is includable in the taxable value. There is no contractual obligation between supplier and a son-in-law to give diamond ring on the occasion of marriage. Is it a contractual obligation of the supplier? No. If the contractual obligation of the supplier was met, then only what is the thing, ma? We need to add it to the taxable value. If the supplier don't have the contractual obligations, those amounts should not be added to the taxable value. That is the second line. Included if the supplier is contractually liable for the service. And third point, this point is applicable even if not added to the bill or paid directly by the recipient. That means in our example, recipient paid the 20 rupees directly to the third party JEDNA, then also the amount is needed to be added to that. This is the second point. What is the first point? What is the first point? Any taxes other than GST excluding the TCS. What is the second point? Third party payments means if supplier contractual obligation was met by the recipient, then those amounts are needed to be added to the taxable value. That is the second point. Now, what is the third point, ma? Incidental expenses. Now, what is the third point? Incidental expenses. We will see them. So, what is this incidental expenses? Charges for activities done by the supplier before the delivery of the goods includes commission, packing, loading, customization, testing, transportation. That means up to the stage of delivery, whatever the expenditure that is incurred by the seller, all those amounts are needed to be added to the taxable value. What are the examples, ma? Packing. How many types of packing will be there? 3 types. Primary packing, secondary packing, special packing. Take the example of, say, dairy milk. First, the gold color one will be there, na? That is primary packing. And on that blue color will be there, na? Shining one. That will comes under secondary packing. If you pack them in the celebrations box, it will be a special packing. Primary packing, secondary packing, special packing. So, which type of packing is includable in the taxable value? Which type, ma? All, whether it is primary, secondary or special, all the 3 packing expenditure are needed to be added to the taxable value. Next one, loading charges. Customization means designing charges, testing charges, certification charges, transportation up to the stage of delivery. Every incidental expenditure is added to the taxable value. Every incidental expenditure is to be added to the taxable value. Okay, ma. When it is incurred by the seller. That is the point you need to remember. Okay. Next one. Treatment differs based on who bears the cost, supplier or recipient. What is this sentence? Treatment differs based on who bears the cost. What is this point? This point is generally applicable for transport and insurance. If the supplier is paying for freight and insurance, then in that case that amount will be added to the transaction value. If the buyer comes to the place of the seller and purchases the goods and incurs freight and insurance, then who is incurring the cost here? Buyer. In that case, this freight and insurance is includable in the transaction value? No. That means who is paying for them will decide whether they are includable or excludable. If at all they are paid by the seller, they are includable in the transaction value. If at all they are paid by the buyer, they are not includable in the transaction value. That is the third point, incidental expenses. Now what is the fourth point we need to see? What is the fourth point? Interest and penalties, simply what we will call it as contractual penalties. Now we will see what are these contractual penalties. Late fee, penalties for delayed payments are included. That means contractual penalty is includable or excludable? Includable in the transaction value. But see the sentence. Only if actually recovered, it will be included. Waived amounts are not included. I think you have done some problems also. Let's say interest on delayed payment 1000 was there, but supplier has given the waiver. If at all it is waiver was given, then it is not added to the taxable value. That's why what is the word I used? Included only if actually it is recovered from the buyer. Any waiver was given by the supplier, then notional value will not be added. When actually that contractual penalty is received, then only it is includable in the taxable value. If any waiver was given, it will not be added to the transaction value. That is the point you need to remember. Okay. Next one. Considered as a composite supply with the same tax rate as the main supply. What is this sentence? What is this? Let's say the sale price is 1 lakh rupees and the interest we received is 10,000. Generally interest comes under supply of service, whereas goods comes under supply of the goods. With respect to goods, the rate of tax is, let's say for example, on that 1 lakh 18%. Interest comes under supply of service, the rate of tax is for example 6%. In that case, what is the rate of tax we need to apply? We are having 2 points. One is 1 lakh rupees sale of the goods, on that 18% is there. Second one is interest 10,000, on that the rate of tax is 6%. Now what is the taxable value? We know that it is 1 lakh 10,000. No issue with that, because contractual penalty is includable in the taxable value. But the question is here, sir, what are the rates we need to apply? For 1 lakh 18% and interest 10,000 6% or total 18%? Total 18%. That is what this sentence is saying. Considered as a composite supply with the same tax rate as the main supply is applicable. What is the main supply here? Supply of the goods 1 lakh. What is the rate of tax applicable on that? 18%. Therefore, on this interest 10,000 also, what is the rate of tax that will be applicable, ma? 18% instead of 6%. That is the point you need to remember. Okay, ma'am. So, the last but not the least in 15.2 is subsidies. Already you know about this subsidy, na? This is the most confusing point in the problems. Rest of the points definitely easy. What are the 4 points just now we discussed? First point, any taxes other than GST excluding the TCS. Second one, suppliers contractual obligation was met by the recipient. Third one, incidental expenses up to the stage of delivery. Fourth one, contractual penalty. I just forgot to tell you another point in contractual penalty. Contractual penalty amount is always inclusive of GST. That is assumption what we will make. That point is applicable only to the fourth point, contractual penalty. Whenever contractual penalty is received, it is always includable in we assume that it is always inclusive of GST. That is a point we should remember. Okay, ma. Now, fifth one, subsidy. Subsidy is included. Subsidy is included. What is this? Hey. What is this? Oh, no, this one. Hey, something new actually I just created, huh? What? Why? Okay, fine. So what about this one here? Included only if provided by the entities other than central or state governments, must be directly linked to the price of the supply. This is the most important. Almost if value of supply is given, there is a 90% probability that the subsidy will be asked in the exam if value of supply is asked. And students also will be a little bit confused here. Sir, whether it is includable or excludable or ignored. For that, okay, ma? Subsidy from government, excludable. Subsidy from any person other than government, includable. This is a general assumption. Yes or no? Subsidy from government, excludable. Subsidy from any person other than government is includable. Assumed to be considered if nothing is given in the problem. That means if the problem remains silent, subsidies amounts are given, then what is the assumption we will make? These two subsidies are already considered. Already considered means already deducted. If nothing is mentioned in the problem, both subsidies are given in the problem, then what is the assumption we will make? What is the assumption we will make, ma? These two subsidies are already considered, means these two subsidies are already deducted. In that case, what is the treatment? Then the treatment will be government subsidy. Let's say, already deducted. Already deducted. What is the thing you need to do now? Ignored. And other subsidy to be deducted? No, but it was deducted. What is the thing we need to do now? Add back. That is the answer. Remember the sentence. Subsidies are given in the problem, nothing is mentioned, we can assume it as to be considered. Considered means already deducted. If already deducted, then what is the treatment? Government subsidy to be deducted and already deducted. Therefore, already deducted it was. In that case, no adjustment is needed. And other subsidy to be deducted or not to be deducted? Not to be deducted, but it was deducted. Therefore, we need to add it back. That is the point. That is the point we should consider. Okay, ma'am. So I think you copied that line. So can I move to the next point then? Okay, fine. So the next point will be here, ma, exclusions from the value of supply. So what is the section that deals with exclusions from the value of supply, ma? That is 15.5. Sorry, 15.3. Okay, 15.3. Santo. Okay, as per 15 subsection 3, what is the one and only exclusion that was there, ma? What is the one and only exclusion that is there, ma? Discounts. Here, discounts can be divided into two types, ma. What are they? One is pre-supply and on-supply discounts. One is pre-supply and on-supply discounts. And second one is post-supply discounts. One is pre-supply and on-supply discounts. Second one is post-supply discounts. In maximum cases, in reality, which type of supply it can be, ma? In reality, the maximum cases, this type of pre-supply discount means discount that is given before or at the time of supply. In real life, what is the supplies that is there, ma? In real life, what is the supplies that are there? The maximum cases, the supplies will be pre-supply discounts only. Sir, these pre-supply discounts are allowed or not allowed? Allowed. But what is the condition for that? Very good. Must be shown on the invoice to be excluded from value of supply. I told you the example that, let's say the shirt value is some 1000, sorry. Let's say flat 40% off is there. In that case, this 400 will be deducted, and based on that 600 it will be there. 1000 minus 400, that is 600. That means how much discount you are giving, it must be indicated on the invoice. How much discount you are giving must be indicated on the invoice. Then only that particular discount is allowed. Okay, this is the first case. What is the second discounts, ma? Post supply discounts given after the supply has been made. That means once the supply is made, after the supply, any discount is given, it is known as post supply discount. Sir, are there any conditions that are required to be allowed for this post supply discount? Yes, can be excluded if certain conditions are met. In fact, 3 conditions. What are they? Prior agreement must be there, and discount can be linked with the invoice, and third one, proportionate IDC is needed to be reversed. If all these 3 conditions are satisfied, then that post supply discount is allowed or not allowed, ma? Allowed means deducted. So pre-supply discount, what is the condition we need to satisfy? Pre-supply discount, it must be indicated in the invoice. That is the only condition. If at all it is a post-supply discount, then what is the position, ma? With respect to post-supply discount, 3 conditions are required to be satisfied. First one, agreement, prior agreement must be there. Second one, discount must be linked to the invoice. And third one, proportionate IDC must be reversed. If all the 3 conditions are satisfied, then post-supply discount is allowed. Sir, in this, prior agreement is okay. Mentioning the invoice number is also okay. What is this proportionate IDC is needed to be reversed by the recipient? For that, we discussed the example in the classroom also. What is the example we discussed, ma'am? Very good. So the plant and machinery purchased is, let's take the example, 1 lakh rupees. Rate of GST 18%. If you pays within 15 days, then 5% cash discount is allowed. Cash discount is the best example for post-supply discount. The plant and machinery value 1 lakh, rate of GST 18%. If you pays the amount within 15 days, 5% cash discount is allowed. In this case, on day 1, when invoice is issued, for how much value the invoice is issued, ma? How much value, ma? 1 lakh only, because we don't know whether we will pay within 15 days or not. In that case, into 18%. 18,000 is the GST that is indicated on the invoice. 18,000 is the GST that is indicated on the invoice on day 1. How much IDC now the buyer will claim? 18,000. Okay. If he pays within 15 days, now what is the plant and machinery value? 95,000 into 18%. It will be 17,100. What is the IDC you need to claim? 17,100. What was IDC you climbed? 18,000. How much excess you climbed? 900. That 900 is needed to be reversed in order to get 5,000 rupees cash discount. That is the last point. Plant and machinery value 1 lakh and rate of GST 18%. If you pays within 15 days, then how much IDC that is needed to be reversed? The point is, on day 1, when invoice is issued, for which value the invoice will be issued? 1 lakh, because we don't know whether he will pay within 15 days or not. Therefore, invoice will be issued for 1 lakh. On the 1 lakh, 18% means 18,000. 18,000. Okay. And second one, if you pays within 15 days, what is the plant and machinery value? 95,000 now, because 5% cash discount means 1 lakh into 5%, 5,000. After reducing that, 1 lakh minus 5,000, 95,000 is the plant and machinery value. On 95,000, 18% means 17,100. How much IDC you need to climb? 17,100. How much you climbed? 18,000. How much excess you climbed? 900. In order to get the discount of that 5,000, you must reverse the IDC of excess 900. That is the point. Okay. This is 15.3, the exclusions. And there is one actually circular that is pending, is no claim bonus in insurance. What is meant by this no claim bonus? Generally, with respect to health insurance, in the previous year you did not make any claim. Then in the current year, from your premium amount, some deduction will be given. That deduction is known as no claim bonus. No claim. You did not make any claim in the previous year. Therefore, in the current year premium amount, we are giving you some deduction. That one is known as no claim bonus. So, no claim bonus is a deduction or not? Yes, it is a permissible deduction from the value of supply. But in order to allow that, it must be disclosed in the policy document that no claim bonus was given to him, and how much no claim bonus was given to him. Let's say in the premium of 30,000, 5,000 is allowed as no claim bonus. Then in the current year policy, you should state that gross premium payable is 30,000. From that, no claim bonus allowed is 5,000. After deducting that, remaining 25,000 rupees is payable. It must be clearly disclosed in the policy documents. Then GST is payable on the actual premium after deducting no claim bonus. In our example, 30,000 is the gross premium, 5,000 is the no claim bonus. Therefore, that 25,000 is allowed. That 25,000 is on the 25,000, GST is payable. That is the point. This is with respect to no claim bonus. No claim bonus is a permissible deduction. That means the amount can be deducted. But for deducting the amount from the value of supply, what is the condition we need to satisfy? It must be disclosed in the policy document. If at all it is disclosed in the policy document, on which value we will pay the GST, gross premium minus no claim bonus, that is GST is payable on the actual premium after deducting the no claim bonus. This is another point you need to remember. And after this, few circulars are there, some special cases and examples. Technically, they are the circulars. I just gave you a summary form here. With respect to circulars, what is the first one, Staggered discounts. What is meant by this staggered discounts? Buy more, save more offers. That means if the quantity purchased increases, discount amount also increases. These types are known as staggered discounts. Whether they are allowed or not allowed, they are excluded from the value of supply if shown in the invoice. That means definitely staggered discounts. That means buy more, save more offers. Allowed or not allowed? Allowed. But what is the condition that is needed to be satisfied? Those discounts must be indicated on the invoice. Next one. What about volume discounts or year-end discounts? Whether they are allowed or not allowed? What about volume discounts or year-end discounts? Volume discounts or year-end discounts are post-supply discounts or pre-supply discounts? Post-supply discounts or post-supply discounts. So can be excluded if meeting the three conditions for post-supply discounts. What are the three conditions for post-supply discounts? Prior agreement, linked to the invoice, proportionate ITC must be reversed. If all these three conditions are satisfied, then what is the position, ma? They are allowed or not allowed? Allowed. What are the discounts? Volume discounts or year-end discounts are treated as post-supply discounts. In order to allow them, those three conditions are required to be satisfied. And what is the last one, ma? Secondary discounts. These discounts are given due to the price revaluation or other reasons after the initial contract. Simply, these discounts are not known at the time of making the supply or entering into the contract. Secondary discounts will be given due to the price revaluation or any other reasons after the initial contract. That means after the supply was made. So whether those secondary discounts are allowed or not allowed, ma? Not allowed. Not deductible from the value of supply. GST is payable on original invoice amount. That means secondary discounts are allowed or not allowed? Not allowed. This is the entire story with respect to value of supply. Okay, ma'am. So the next topic will be, okay. So what is the next topic we need to discuss, ma'am? ITC, that is input tax credit. What is meant by the word input tax credit, ma'am? It is the tax that is paid on purchases. If at all we are able to set off with the taxes that are needed to be paid on sales, then that particular process is known as ITC. That particular process is known as ITC. Say for example, on the raw materials we paid 10 rupees, ma. On the finished goods we are required to pay 15 rupees. While paying that 15 rupees, what is the tax that is paid on purchases? 10 rupees will be deducted and remaining 5 rupees is allowed as ITC. So remaining 5 rupees is needed to be paid in cash. That 10 rupees is not treated as allowed as ITC. So in our CA Inter syllabus, there are total 3 sections, ma. 16, 17 and 18. Those are the sections we are going to discuss now. So the first point is here. Sir, in order to claim the ITC, what are the conditions for availing the ITC? Which section deals with this particular topic, ma? 16 subsection 2. Which section deals with condition for availing the ITC, ma? 16 subsection 2 deals with the conditions which are required in order to claim the ITC. Okay. What is the first condition that is there? So what is the first condition, ma? Possession of valid documents. Simply, without documentary evidence, we cannot claim the ITC. Without documentary evidence, we cannot claim the ITC. Sir, what are the documents that are needed to be submitted in order to claim the ITC, ma? What are the documents that are needed to be submitted? Must have the tax invoice, debit note, or other prescribed documents. What is meant by this other prescribed documents, ma'am? These are bill of entry, RCM invoice, ISD invoice. These are the other prescribed documents. So total 5 documents will be there, ma. One is tax invoice, second one is debit note, third one bill of entry, fourth one RCM invoice, fifth one ISD invoice. Any one of these are submitted as evidence, then definitely you can claim the ITC. That is the first condition to claim the ITC. So what is the first condition, ma'am? Documentary evidence must be there. Documentary evidence must be there. So what are the documentary evidences that are required to claim the ITC, ma? Tax invoice, debit note, bill of entry, RCM invoice, ISD. ISD means input service distributor. Any one of these documents are submitted as evidence, then definitely we can claim the ITC. Definitely we can claim the ITC. That is the first point. Second one. What is the second one, ma? Suppliers GSTR1 should reflected in recipient GSTR2B, and ITC should not appear in the restricted category in GSTR2B. It was a paper provision, ma. Still legal enforcement is not there. Even though it is there in the material, there is no requirement to read that. Only first 2 points are for you. First one, documentary evidence must be there. Second one, suppliers GSTR1 should reflect in recipient GSTR2B. What does this one see? Till to be notified, that one is not required, ma. So this one is technically rule 36.4. Anybody remembers that? Oh, sorry, that's one right. So rule 36.4, ma, this is. Rule 36.4. If at all you are able to recollect how the ITC chain will be processed, anybody remembers? First, supplier will file GSTR1 on a monthly basis. When supplier files his sales data in GSTR1, it will be reflected in recipient GSTR2A as purchases. Based on recipient GSTR2A, GSTR2B will be generated on every month 14th. Based on GSTR2B, definitely you can claim the ITC. This is a process. Now the point is, how many number of supplies the supplier uploads in his GSTR1? How many number of supplies that supplier uploads in GSTR1 and reflected in recipient GSTR2B? Up to that extent only we can claim the ITC. Say for example, there are actually 100 supplies that are made by the supplier to the recipient. Each one is having 1000 rupees as GST. In those 100 invoices, 70 invoices are uploaded by the supplier in his GSTR1. And they are reflected in GSTR2B of the recipient. Now, how much ITC the recipient can claim now? How many number of invoices uploaded by the supplier in his GSTR1 and reflected in GSTR2B of the recipient? Up to that extent only you can claim the ITC. How many invoices are uploaded by the supplier in GSTR1? 70 invoices. And how many reflected in GSTR2B of the recipient? 70. 70 into 1000, it will be 70,000. You can claim ITC of 70,000 only. Sir, what about the remaining 30,000? What about the remaining 30,000? When ITC is allowed? When those invoices are uploaded by the supplier in his GSTR1, in that particular month, that 30,000 is allowed as ITC. That is the second condition, ma'am. Okay. This is the point. Suppliers GSTR1 should reflected in recipient GSTR2B. That means how many number of invoices that are uploaded by the supplier in his GSTR1 and reflected in GSTR2B of the recipient. Up to that extent only, definitely we can claim the ITC. Next one. That is the first condition. Now we need to see this is the first condition to claim the ITC. Now what is the second condition, ma? Receipt of goods or services is the second condition in order to claim the ITC. So what is the topic we are discussing, ma? Conditions for claiming the ITC. In that, what is the first condition? Documentary evidence must be there in order to claim the ITC. And second one, how many number of invoices uploaded by the supplier in his GSTR1 and reflected in GSTR2B of the recipient. Up to that extent only you can claim the ITC. Now the next one is receipt of goods or services, and we will see that now. Yes, actual receipt of the goods or services required. That means in order to claim the ITC, the goods must be received within the factory premises. Then only you can claim the ITC. For example, on October 1st, the sale was completed. Invoice is issued. We made the payment to the seller, but the goods are received on November 1st, next day. The goods are received on November 1st, next day. In which month we can claim the ITC? In the month of October or in the month of November? In the October, invoice is issued, payment is made, everything is done, but the goods are received in the month of November. In that case, in which month we can claim the ITC? In the month of October or in the month of November? In the month of November. In order to claim the ITC, actual receipt of goods and services is required. Sir, is there any exception to that? Yes, exception is for bill to ship to model for both goods and services. What is meant by this bill to ship to model? What is meant by bill to ship to model, ma? In bill to ship to model, order will be given by one person, but the goods are delivered to some other person. Say for example, Guntur head office of Masterminds has given the order to supply the goods to Hyderabad branch. Then who is giving the direction? Guntur head office. And who is receiving the goods? Hyderabad branch. In that case, who is eligible to take the ITC? Guntur head office or Hyderabad branch? In case of bill to ship to model, the person who has given the instruction. In case of bill to ship to model, goods are deemed to be received by the person who gave the direction. In case of bill to ship to model, goods are deemed to be received by the person who gave the direction. In our example, who has given the direction to do that? Guntur head office. Therefore, Guntur head office is deemed to be receiving those goods. Guntur head office is deemed to be receiving those goods. So then Guntur head office can claim the ITC even though the goods are received by the Hyderabad branch. This type of model is known as bill to ship to model. With respect to bill to ship to model, order will be given by one person and goods are delivered to some other person. Okay. Next one. Sir, if the goods are going to be received in installments, then ITC is available on the receipt of last installment. If the goods are going to be received in installments, then ITC can be available on the receipt of last installment. For example, from November 1st onwards, I am going to receive every month 5 computers until March. In this case, in which month actually I can claim the ITC? When this last installment I am going to receive, March month, therefore I am able to claim the ITC in the month of March only. That is the second condition. Now what is the third condition, ma'am? Payment of tax by the supplier. That means sir, recipient made the payment to the supplier. Recipient made the payment to the supplier, but supplier fails to make the payment to the government. Is it possible for the recipient to claim the ITC? Recipient made the payment to the supplier, but supplier failed to make the payment to the government. In this case, is it possible for the recipient to claim the ITC? Answer is no. Supplier must pay the tax to the government for the recipient to claim the ITC. Even though recipient made the payment to the supplier, but the supplier must make the payment to the government, then only the recipient is able to claim the ITC. Next one. Provisional ITC can be taken initially before matching on common portal. That means what happens is, first supplier will file GSTR 1 by saying his sales data. It will be reflected in recipient GSTR 2B. Okay, seller intimated the matter in GSTR 1 and it reflected in recipient GSTR 2B. Based on recipient GSTR 2B, recipient claimed the ITC. But later on, the supplier did not make the payment in his GSTR 3B. See, GSTR 1, he indicated it as a sale. In GSTR 1, he indicated it as a sale. Therefore, it reflected in GSTR 2B of recipient. Therefore, recipient claimed the ITC. But later on, supplier did not make payment to the government in GSTR 3B. Now what happened? Supplier did not make the payment, but recipient claimed the ITC. Now, department will issue a show cause notice to each the parties. Actually, there is a difference. So, it will give intimation or show cause notice to both supplier and recipient. If the supplier rectifies his mistake, then that is okay. If the supplier did not rectify the mistake, recipient need to reverse the ITC. Generally, what is the time limit, Next financial year, September. Next financial year, September is the relevant date for supplier to rectify the mistake. Next financial year, September is the time limit to rectify the mistake. If the mistake is not rectified by the person September, up to September, then within 2 months, that is October and November, recipient must reverse the ITC. If he reverses the ITC within 2 months, no interest is payable. If he reverses the amount after 2 months, interest at the rate of 18% from the date when he claimed the ITC is required to pay that. This is a concept you need to remember. This is a provisional ITC can be taken initially before matching on the common portal. So how it will happen practically? Not that much in depth will be asked you because you don't know the practical terms now because you are CA inter. But I am telling you, supplier files GSTR 1. It will be reflected in GSTR 2B of the recipient. Based on that, recipient will claim the ITC, but the supplier fails to make the payment in GSTR 3B. Then next financial year up to September month, the department waits for the supplier to rectify the mistake. If the supplier did not rectify his mistake within 2 months, October, November, the recipient need to reverse the ITC. In that case, no need to pay any interest. After November, recipient rectifies the mistake, then along with interest at the rate of 18% per annum, he needs to rectify the mistake. Okay, that is the point. That is provisional ITC concept. Okay, now the next point. What is the fourth condition, Filing of return by the recipient. What is the recipient is required to file, Recipient must file GSTR 3B to claim the ITC. In order to claim the ITC by the recipient, what is the thing, Recipient must file GSTR 3B. Why, Because GSTR 2B is a read-only document. Based on that, now what the recipient needs to do? He needs to file GSTR 3B. Once recipient files his GSTR 3B, then only ITC will be confirmed. So these are the 4 conditions. What are the 4 conditions, First one, documentary evidence must be there. Second one, goods or services must be received. Third one, supplier must pay the GST to the government. Fourth one, recipient has filed GSTR 3B. If all these four conditions, along with that rule 36.4. What is this rule 36.4? How many number of invoices uploaded by the supplier in his GSTR1 and reflected in GSTR2B of the recipient, you can claim the ITC. Got the point, ma'am? Right? These are the conditions you are required to satisfy in order to claim the ITC as per 16 subsection 2. Okay, next point. I think you remember this 180 days rule. What is this 180 day payment rule? Anybody remembers, ma? What is this 180 days payment rule? Once you have the documentary evidence, that means recipient is having the documentary evidence and the goods are received, then even though the payment is not made to the seller, but still we can claim the ITC. But there is a statutory time limit to make the payment. What is the statutory time limit to make the payment, ma? From the date of invoice, within 180 days, we should make the payment to the seller. Otherwise, whatever the ITC we have claimed previously, it must be reversed along with interest at the rate of 18% per annum. It must be reversed along with interest at the rate of 18% per annum. Okay, ma. That is the story that will be there. We will see those points. See. Recipient must pay invoice value to the supplier within 180 days. Failure leads to the reversal of ITC with interest at the rate of 18%. This is the point. What is the first point? If at all we are having the documentary evidence and we received the goods, then even though no payment is made, but still we can claim the ITC. But what is the statutory time limit to make the payment, ma? From the date of invoice, within 180 days, we must make payment to the seller, supplier. Otherwise, whatever the ITC we claimed previously, it must be reversed along with interest at the rate of 18% per annum. Okay, ma. And sir, for that rule, any exceptions are there? Is there any exception to this 180 days rule, ma? Yes. What is the exception? These three are the exceptions, ma. That means in these three cases, what is not applicable, ma? This 180 days rule, that is reversal of ITC, is not applicable. What are the three cases? First one, RCM purchases. Second one, deemed supplies. Third one, supplier obligation was met by the recipient. In these three cases, the concept of 180 days rule will not be applicable. Otherwise, from the date of invoice, within 180 days, we must make payment to the seller. Otherwise, whatever the ITC we claimed previously, it must be reversed along with the interest at the rate of 18% per annum. But this rule is not applicable in three cases. First one is RCM purchases, second one is deemed supplies, third one is supplier obligation was met by the recipient. In these three cases, 180 days rule will not be applicable. Okay, ma'am. These are the exceptions. See, RCM purchases and deemed supplies and supplier obligation was met by the recipient. This is 180 days rule, ma. This can be asked in the exam. Okay. Now the next point is, what is the next point, ma? This is 16 subsection 4. After 16.2, we are discussing about 16.4, ma, the maximum time limit for availing the ITC. So what is the maximum time limit for availing the ITC, ma? What is the general time limit that is prescribed under 16.4? What is the general time limit? There are two time limits. The first one is general time limit and second one is exception for that. What is the general time limit? ITC can be availed up to 30th November of the succeeding financial year or date of filing the annual return, whichever is earlier. So what is the cutoff date to claim the ITC? Next financial year, November 30th, or date of annual return, whichever is earlier, that is the cutoff date to claim the ITC. That is the cutoff date to claim the ITC. So say for example, we are in 24-25 financial year. In order to claim the ITC for this financial year, that means whatever the purchases you will make in between 1/4/2024 to 31/3/2025, whatever the purchases you will make in this time period, what is the cutoff date to claim the ITC? Next financial year, November 30th, that is 30/11/2025, or date of annual return, whichever is earlier. So what is the cutoff date to claim the ITC? For 24-25, next financial year, November 30th, that is November 30th, 2025, or date of annual return, whichever is earlier. This is the cutoff date to claim the ITC. But this 16.4 is not applicable for re-availing the reversed ITC. That means 16.4 is applicable to the cases of first availment of ITC. 16 subsection 4 time limit is applicable for first availment of ITC. Any subsequent re-availments are there, for that no time limit is there. Say this point, no time limit for re-availing the ITC due to non-payment within 180 days. Okay, can be re-availed upon subsequent payment to the supplier without any time limit. What is this point means, 16 subsection 4 time limit is applicable for the first time availment. First you avail the ITC. Subsequently, due to some reason, you are required to reverse it. You reversed it also. Later on, when again you want to claim the ITC, it is called re-availment. This re-availment is having no time limit. The time limits that are prescribed under 16.4 are only for first time claiming the ITC, first time availing the ITC. For re-availment of ITC, there is no time limit. After how many number of days also you can claim the ITC. What is the rule? Just now we discussed 180 days. If you did not make payment within 180 days, that ITC must be reversed. Okay, we reversed the ITC. After 10 years, we made the payment to the seller. After 10 years, we made the payment to the seller. Sir, in that year, is it possible to claim the ITC? Yes, in that year, definitely it is possible to claim the ITC. That is the point. So, 16.4 time limit is applicable for first time availment. Subsequent re-availments will not be applicable. Okay, this is 16.4 time limit for claiming the ITC. Next one is, this is 16 subsection 3. Capitalization of tax component. I think you remember this one. What does 16.3 deals with? Whenever you are claiming the depreciation including the GST, then on that portion you cannot claim the ITC. We will see that point. Restriction on the ITC for capitalized tax. That is the topic what this 16.3 deals with. Restriction on ITC for capitalized tax. Regarding this, ITC cannot be claimed if tax component is capitalized. That means, let's say the value is 100 rupees. On the GST paid was 10 rupees. You are claiming depreciation on total 110. Then no ITC is allowed on that 10 rupees. You are claiming depreciation only on 100 rupees. Then that 10 rupees is allowed as ITC. That is the logic. That plant and machinery value 100 rupees. GST is 10 rupees. Now you are claiming depreciation on 100 plus 10 on the total 110. On the total 110. In that case, what is the position, ma? Definitely, that 10 rupees is not allowed as ITC. But if at all you are claiming depreciation only on 100 rupees, that 10 rupees is allowed as ITC. That is the point. Applies when depreciation is claimed on the tax component under income tax. That is the point I told you now. No double benefit is allowed. Either you can claim depreciation under the Income Tax Act or you can claim IDC under GST. This is 16.3 point, ma'am. Okay. So the next point will be section 17 related points, ma'am. Apportionment of IDC for mixed supplies. That means the categories of procurements. Section 17 basic, 17.1, 17.2, 17.4. 17.4 is not in your syllabus. These points we are going to discuss. See, if the inputs, capital goods and input services are exclusively used for non-business purpose, then ITC is allowed or not allowed? No ITC. If the particular goods are exclusively used for non-business purpose, ITC allowed or not allowed? Definitely ITC not allowed. Exclusively used for taxable supplies, 100% full ITC is allowed. Exclusively used for exempted supplies, no ITC. Sir, both taxable and exempted supplies, sir, proportionate ITC you need to take as per rule number 42, but rule number 42 is not in your syllabus. For CMA Inter, it was there in their syllabus. Okay, ma? So, if at all it is exclusively used for non-business purpose, no ITC. Exclusively used for taxable supplies, 100% ITC. Exclusively used for exempted supplies, no ITC. Used for both taxable and exempted, in that case, what is the position, ma? Proportionate ITC can be claimed on that. So these are the points that are there in section 17 you need to remember. Okay, ma'am. And after this one, I think, the most important topic in entire ITC is, what is this? Ineligible input tax credit or blocked credits. Ineligible input tax credit or blocked credits. That means even though it is used for taxable supply, even though it is used for business purpose, but still in some cases we cannot claim the ITC. In some cases we cannot claim the ITC. Those cases are covered under 17 subsection 5 blocked credits. Even though it is used for business purpose, even though it is used for taxable supplies, but still you cannot claim the ITC. Those points will be there under 17 subsection 5 blocked credits, and we will see those points one by one. I divided the points into like this. The first one is motor vehicles and conveyance. So with respect to motor vehicles and conveyance, ITC is restricted on the vehicles for transportation of the persons within less than or equal to 13 seats. But there are few exceptions for specific business uses like further supply, passenger transportation, etc. What does this mean now? So this is the point what we have discussed at the time. Here the goods, that means the motor vehicles, can be divided into two types. One is passenger vehicles and second one is goods vehicles. If at all it is a passenger vehicle, in that case the seating capacity is less than or equal to 13, ITC not allowed. If the seating capacity is more than 13, definitely ITC is allowed. Passenger vehicle, seating capacity less than or equal to 13, ITC not allowed. Seating capacity more than 13, 100% ITC allowed. If at all it is a goods vehicle, then what is the position? 100% ITC is allowed. See, if more than 13, ITC is allowed. Less than 13, ITC not allowed. Goods vehicles, ITC allowed. But whereas in 3 cases, even though the seating capacity is less than or equal to 13, but still ITC is allowed. What are the 3 cases where ITC is allowed, ma? Even though the seating capacity is less than or equal to 13. First one is inward supply, outward supply is the same. That means best example for that is car showroom. What is with respect to car showroom? What is the inward supply? Car. What is the outward supply? Car. When inward supply, outward supply is the same, in those cases ITC is allowed. Second one, your main business is transportation of passengers. Your main business is itself transportation of passengers, means car travels, Ola, Uber. What is your main business there? Transportation itself. In those cases, even though the seating capacity is less than or equal to 13, ITC is allowed. And what is the third case? Driving school. Without motor car physically was there, definitely you can't have the training for that. That's why with respect to driving school, what is the position, ma? Definitely ITC is allowed or not allowed, ma? Definitely ITC is allowed. These are the 3 cases where even though the seating capacity is less than or equal to 13, ITC allowed. What is the general rule, ma? Motor vehicle will be divided into 2 ways. One is goods vehicle, second one is passenger vehicle. With respect to goods vehicle, 100% ITC allowed. With respect to passenger vehicle, depends upon seating capacity. The seating capacity is less than or equal to 13. What is the position, ma? ITC not allowed. Seating capacity is more than 13. ITC allowed. Fine. So, what is the second one? If the seating capacity is less than or equal to 13, in 3 cases, ITC is allowed. What are those 3? So, with respect to the motor vehicle, goods vehicle, 100% ITC is allowed. Passenger vehicle, it depends upon the seating capacity. Seating capacity less than or equal to 13, ITC not allowed. Seating capacity more than 13, 100% ITC is allowed. Even though seating capacity is less than or equal to 13, in 3 cases, ITC is allowed. First one, inward supply, outward supply is the same. Second one, transportation of passengers. Third one, driving school. Okay, ma. Sir, what about the services that are provided on these motor vehicles? Like repairs and maintenance, insurance, some maintenance services will be there, na? Insurance, repairs and maintenance. On them ITC is allowed or not? It depends upon the motor vehicle. If on the motor vehicle ITC is allowed, on the services also ITC allowed. Take example Masterminds. Masterminds purchased a minivan where the seating capacity is less than or equal to 13, which is used to transport the parents to Santiniketan campus. Even though it is used for business purpose, cannot claim the ITC. And what about the Masterminds bus? On Masterminds bus, can claim the ITC or not? Yes. Why, ma? The seating capacity is more than 13. So, that minivan insurance, ITC is allowed or not allowed? Not allowed. Why, ma? On the minivan, ITC is not allowed. Therefore, on the services also ITC not allowed. What about the Masterminds bus? Masterminds bus repairs and maintenance, ITC allowed or not allowed? Allowed. Why, ma? On the bus, ITC is allowed. Therefore, on the repairs and maintenance and insurance also, ITC allowed. That is the point. If on the motor vehicle ITC is allowed, then on the services also ITC allowed. If on the motor vehicle ITC is not allowed, on the services also ITC not allowed. This is the point, ma'am. So that is the point with respect to motor vehicles. Now the second one is, after the motor vehicles, what is the second one, ma? Vessel and aircraft. This is also the same. Generally, with respect to vessel and aircraft, ITC is not allowed. But for that, there are 4 exceptions. What are those 4 exceptions, ma? If that vessel and aircraft is used for transportation of passengers, transportation of goods, and inward supply, outward supply is the same. And fourth one, with respect to flight, flying school, with respect to vessel, navigation school, if at all it was used. What is the general rule, ma? With respect to vessel and aircraft, ITC is not allowed. But there are 4 exceptions to that. What are the exceptions for that? First one, if their main business is transportation of passengers, those ships are known as cruise ships. Okay, and those flights are known as cruise flights. That means passenger flights. And if at all their main business is transportation of goods, what those ships are called as? Cargo ships. What those flights are called as? Cargo flights. Then ITC is allowed. Third one, inward supply, outward supply is the same. Your main business is manufacturing of those ships, rebuilding of those ships. In those cases, ITC allowed. Fourth one, with respect to flight training, it is called flying school. With respect to vessel driving training, it comes under navigation school. In these 4 cases, ITC is allowed. Rest of the cases, ITC is not allowed. Okay, ma'am. Next one. Services relating to vehicles, just now I completed. Next one is food and beverages and personal services. Food and beverages and personal services means beauty treatment, cosmetic or plastic surgery, and healthcare services. Like that, few other points are there, na? Those things comes under simply personal services, ma. So food and beverages, personal services, generally not eligible for ITC. But what is the exception, ma? Inward supply, outward supply is the same, or it is a statutory obligation. Then ITC is allowed. Take the example of food and beverages. For example, I will take one example, being a marathon. Only one example I can tell you. Let's take the example. Masterminds actually, after the exams is over, they just want to take you to the highland. For example. Okay. In that case, actually want to provide you a catering service from Hotel Sinduri or Hotel Vajram, which is besides us. In that case, is it possible for the to claim the ITC on that catering service, ma? Answer is no. Because on food, only in 2 cases ITC is allowed. First one, inward supply, outward supply is the same. Second one, if at all it is a statutory obligation. Okay. I think what is the mastermind's outward supply? Coaching. What is the inward supply? Food. ITC allowed? No. Is there any statutory obligation on the masterminds to give you food from Hotel Sinduri? There is no statutory obligation. In that case, ITC allowed or not allowed? Not allowed. I will change the example to a little bit now. Hotel Sinduri is now conducting a food festival. That's why it gathered food from different places like Bandar Laddus, Athrepuram paper sweets, in Telugu Putarekulu, and from Goa, seafood, Hyderabad biryani, Kakinada kaja, Tapeshwaram Martha kaja, whereas another one is Rajahmundry rose milk, whereas Rayalaseema Uggani bhaji, okay, and like that, and Guntur mirchi bhaji, like that they gathered so many number of items from different places, ma. In this case, definitely what is the outward supply of Hotel Sinduri? Food. What is the inward supply? food. In that case, IDC allowed or not allowed? Allowed. That is the case. Second one, if at all it is a statutory obligation, like rent a cab facility, which is there in that personal services. Generally, rent a cab, unless it is a statutory obligation, IDC not allowed. Take the example in Hyderabad, Wonderla is there. In Nagarjuna Sagar route, Wonderla will be there, ma. Okay, Sagar route, we can go through. In that Sagar route, if you observe, TCS campus was there. TCS office. When you are returning from Wonderla, I think from on left side it will come. Okay, returning. So in the TCS, when I observed, when I am returning at some 7 p.m. or something from Wonderla, there is no public commuting facility, even at 7 p.m. Not that much city buses. I think city buses will not roam in that particular route. And autos are also not available after 7. But TCS employee shift will close it sometimes 10 or 11 p.m. Na? In those cases, government passed a GO that all the lady employees must be sent by the company to their homes by using rent-a-cab facility. In that case, is it a statutory obligation or not? Yes, in those cases, IDC is allowed. Like food and beverages and personal services like this. What are the personal services examples, ma? Healthcare services, cosmetic and plastic surgery, and what we can say is rent-a-cab services, insurance, all these things. When inward supply, outward supply is the same, and when if it is a statutory obligation, in those cases only IDC is allowed. That is the second point. Next one, third one, it was sometimes asked in the exam, works contract. What is meant by this works contract first of all? What is meant by this works contract, ma? Construction of immovable property is known as works contract. Construction of immovable property is known as works contract. Like buildings, bridges, canals, dams, all these things comes under construction of immovable property and it is called as works contract. Okay. Sir, on the works contract, ITC is allowed or not allowed? ITC is not allowed because it is used for construction of immovable property. Sir, is there any exception to that, sir? Yes, two exceptions. If the immovable property is a plant and machinery or it is for further supply, in these two cases, ITC is allowed. What is the general rule? Works contracts, ITC is not allowed. But for that, two exceptions are there. First one, if the immovable property is a plant and machinery, and second one, if at all that one was used for your further supply. Take the example of blowroom machinery. I told you in the classroom. Blowroom, BLOWROOM. What is this? What this blowroom machinery will do, ma? It will convert cotton into yarn. In our Telugu, దూది నుంచి దారాలు తయారు చేస్తాం. Okay, that machine will be used in spinning mills. What is the machine name? Blowroom machinery. Each machinery will be of this particular room thrice, 3 times. Each machine is of this particular size 3 times. That much bigger machine each machine is. ఈ room ki 3 times ఉంటుంది. Each machine will be. In that case, once it is installed, is it movable or immovable? Immovable. But still, on that plant and machinery, definitely we can claim the ITC. That is the first point. Second one, further supply of that works contract. Simply, your main business is construction itself. You are doing the construction for your clients. Then definitely ITC is allowed. Take the example of builders or construction contractors. What is their main business? Their main business is itself construction. In those cases, ITC is allowed or not allowed? Allowed. Those are the two exceptions. Generally, on works contract, we cannot claim the ITC. But what are the two exceptions? First one is the immovable property is a plant and machinery. Second one, if at all it is used for further supply. But keep it in mind, cell phone tower, buildings, land, All these things are excluded from planted machinery definition. And pipelines laid outside the factory, all these things are not planted machinery. Therefore, we cannot claim the ITC. That is the point. Next one. Self-construction. What is meant by this self-construction? The best example for that is our masterminds. Masterminds constructed Balaji campus, Paunaputra campus. Self-construction means they are not constructing that. Okay, they will use the services. So, who built the actually Taj Mahal ma? In fact, the labor. But what we will say? Shah Jahan. Just like that, this Paunaputra campus, Balaji campus is the self-construction of masterminds. It does not mean that masterminds directors has done this construction. They hire the people to do that. Okay. So that's why this self-construction, whatever this Paunaputra campus, Balaji campus that are there, for them, whatever the goods or services they used for their own construction, on them, ITC is not allowed. For the construction of this particular building, masterminds needs iron, sand, cement, and labor services. All these services and inputs are used, but is unable to claim the ITC. Even though it is self-construction, even though it is used for business, but still cannot get the ITC. That is the point. Okay. But there is one exception if debited to P&L account. What is this? That means sometimes repairs, this point is with respect to repairs can be divided into two types. One is capital repairs, second one is revenue repairs. Capital repairs means the amount is capitalized in the books of accounts, no ITC is allowed. Revenue repairs means the amount is debited to the P&L account. If the amount is debited to the P&L account, definitely ITC is allowed. If the amount is debited to the P&L account, definitely ITC is allowed. That is the point. Apart from this, few normal points, other ineligible items, goods or services under composition scheme. Why composition scheme buyer cannot claim the ITC? Because buyer will not pay any tax there. Seller needs to pay that 1%, 5%, 6% out of his own pocket. Here the buyer will not pay that. Therefore, what is the position? Composition dealer cannot claim the ITC. Or you purchased any goods from composition dealer, then also you cannot claim the ITC. Personal consumed items, no ITC. Goods lost, stolen, given as free samples or gifts, no ITC. Tax paid under fraud or confiscation, that means fraudulent cases, also no ITC. I just forgot to write here NRTP, ma'am. With respect to NRTP, local purchases, no ITC. Imported goods, ITC is allowed. With respect to NRTP, local purchases, what the local purchases NRTP will be? What is meant by NRTP? Non-resident taxable person. With respect to NRTP, whatever the local purchases he will make, no ITC. Whatever the goods he imports, on the imported goods, definitely we can claim the ITC. On the local purchases, we cannot claim the ITC, but whereas with respect to imported goods, definitely we can claim the ITC. Okay, these are the ineligible items we need to remember. I think we copied everything. Yes. There ends section 17.5 and just wait. Okay. Once section 17 important points are over, what is the next point we need to see? ITC in special circumstances, that is section 18. ITC in special circumstances, that is section 18. So with respect to section 18, first point is, what is the first point, 18.1. With respect to 18.1, what is the position? New registrations. What is meant by this new registrations? It can be divided into two types. One is normal registration. Second one is voluntary registration. What is meant by normal registration and what is meant by voluntary registration? If your turnover limit exceeds then you are applying for registration. It is a normal registration. But without any liability either under section 22 or under section 24, in those cases, what is the position, ma? Voluntary registration it is called as. Whether it is normal registration or voluntary registration, the date when you got the registration, you are required to pay the GST. Therefore, the date when RC was granted to you, on the preceding day, whatever the closing stock of raw materials, semi-finished goods and finished goods that were there, on them definitely you can claim the ITC. That is the point. ITC available on the stock held on the day before the liability to pay tax arises, simply effective date of registration. The date when RC was granted to you, on the preceding day, whatever the closing stock that is there, on that definitely we can claim the ITC. Sir, whether it is a normal mandatory registration or voluntary registration, in both cases ITC is allowed? Yes, this point is applicable to both mandatory registrations and voluntary registrations. But keep it in mind, only on the inputs you can claim the ITC. Whether it is normal registration or voluntary registration, only on the inputs you can claim the ITC. You cannot claim the ITC on capital goods. You cannot claim the ITC on capital goods, ma. Which cases? Normal registration and voluntary registration cases, you can claim the ITC only on the inputs, but you cannot claim the ITC on capital goods. Okay, this is the first 2 points in 18 subsection 1. And this is transition from composition to normal scheme. Sorry, transition from composition to normal scheme. That means composition scheme to normal scheme now. Previously you are there in composition scheme. Therefore no ITC is allowed. Now you are shifting from composition scheme to normal scheme. In that case, ITC allowed or not allowed? Allowed. The date when this conversion happens from composition scheme to normal scheme, on the preceding day, whatever the inputs, semi-finished goods, finished goods that were there, you can claim the ITC. Along with that, even on capital goods also, you can claim the ITC. Whereas in first 2, normal registration and voluntary registration, only on the inputs we can claim the ITC. But whereas from composition scheme to normal scheme, along with the inputs, even on capital goods also, definitely you can claim the ITC. Sir, how to claim the ITC on capital goods? Reduced ITC means what is the point? From the date of invoice, per quarter or part thereof, 5% will be reduced and remaining amount is allowed as ITC. Take for example, plant and machinery value 10 lakhs. We are there in composition scheme for 1 year, 6 months. Now we shifted to normal scheme and rate of GST is 18%. How much ITC is allowed on that capital good now? Plant and machinery value 10 lakhs, rate of GST 18%. After using it for 1 year, 6 months, now we shifted to normal scheme. In that case, how much ITC that is allowed on that? How much ITC that is allowed, ma'am? So, 1 year, 6 months. 1 year means how many quarters, ma'am? 4. And 6 months means 2 quarters. How many quarters? 6. Per quarter, how much percentage we need to reduce? 5%. That is 30%. How much ITC you claimed previously? 10 lakhs into 18%. That is 1,80,000 minus 30%. That is 54,000. Now 1,26,000 is the ITC you can claim now. So from the date of invoice, per quarter or part thereof, 5% is needed to be reduced. Okay, ma. In that case, what is the position, ma? Definitely in our example, what is the plant and machinery value, ma? 10 lakhs. What is the rate of GST? 18%. In that case, what is the position, ma? 10 lakhs into 18%. 1,80,000 is the tax we paid. 1 year, 6 months means how many quarters? 6 quarters. 6 into 5%, 30%. So 1,80,000 into 30%, 54. After reducing that, what is the remaining amount that is there? 1,26,000. That 1,26,000 is allowed as ITC. Okay, ma. This is while shifting from composition scheme to normal scheme. Similar provisions as transition from composition scheme is applicable to exempted to taxable supply. What is meant by exempted to taxable supply? Previously it is a exempted supply, therefore no ITC is allowed. Now that exempted supply was converted into a taxable supply, therefore ITC is allowed. Same point, just like in composition scheme to normal scheme. Along with the inputs, even on capital goods also we can claim the ITC. This is 18 subsection 1. So the next point will be reversal of ITC. What are the cases where ITC is required to be reversed? This is 18 subsection 4 ma. 18 subsection 4 here means previous 2 points we need to reverse that. That means previously what is the topic I told you? Composition scheme to normal scheme, exempted supply to taxable supply. Reverse them. Normal scheme to composition scheme, taxable supply to exempted supply. Normal scheme to composition scheme, taxable supply to exempted supply. In those cases, definitely as per 18.4, ITC is needed to be reversed. On the inputs, semi-finished goods, finished goods, along with that, even on capital goods also, we need to reverse the ITC. But we will follow a special procedure under 18.4. Anybody remembers that? What is the special procedure we follows for reversal of ITC in case of capital goods? 18.4. What is the special procedure we follows for the reversal of ITC? From shifting from normal scheme to composition scheme or taxable supply to exempted supply. You will take estimated life of the capital asset will be 5 years. In terms of months, it will be 60 months. For how much period it remains unutilized? In that particular proportion, you need to reverse the ITC. That means what is the position? Let's say for example, same example we can say 10 lakhs is a value, 18% is a GST, 1 year, 7 months we used it in the normal scheme. Now we shifted to composition scheme. In that case, how much ITC we need to reverse now? 1 year, 7 months means 1 year means 12 months. 12 plus 7, 19 months we used it for normal scheme. What is the unutilized time period? 60 minus 19, that is 41 months now. Therefore, what is the tax amount? 1,80,000 into 41 by 60. How much amount we will get, ma? How much amount we will get? 1,23,000. This is ITC you need to reverse. As per 18 subsection 4, normal scheme to composition scheme, taxable supply to exempted supply, when you converts, along with the inputs on the capital goods also, you need to reverse the ITC. But reversal of ITC with respect to the capital goods, what is the position, ma? Definitely, we need to follow the special procedure. What is the special procedure we need to follow, ma? As per GST law, estimated life of the capital asset will be 5 years. In terms of months, 60 months. For how much period it remains unutilized? In that particular proportion, ITC is needed to be reversed. In our example, the plant and machinery value is 10 lakhs. Rate of GST is 18%. After using it for 1 year, 7 months in the normal scheme, we shifted to composition scheme. In that case, how much ITC we need to reverse now? How much period we used in the normal schema? 12 plus 7, 19 months. What is the unutilized time period? 60 minus 19, 41 months. In that particular proportion, IDC is needed to be reversed. That is 1,80,000 into 41 by 60. So 1,23,000 is the amount of IDC we need to reverse. This is 18.4 ma. And another point that can be there, just wait. So I just forgot to write another point here, that is last point ma, 18.6. What does 18.6 deals with? Sale of plant and machinery as a second-hand plant and machinery. Sale of plant and machinery as a second-hand plant and machinery. That means 10 lakhs is the plant and machinery value. Rate of GST 18%. After using it for 1 year 6 months, we are selling it for 6,50,000. In that case, how much IDC we need to reverse now? That topic will be there in 18 subsection 6, sale of capital goods ma. How much IDC we need to reverse ma now? How much IDC we claimed previously? 10 lakhs into 18% means 1,80,000. From that, per quarter or part thereof, 5% is needed to be reduced. 1 year 6 months means how many quarters ma? 6 quarters into 5% means 30%. It will be 54,000 and 1,26,000. This amount will be compared with GST to be paid on sale value. What is the sale value? 6,50,000 into 18%. What is the amount we will get? 1,17,000 or 1,26,000, whichever is higher. 1,26,000 is the amount we need to reverse now. This is 18.6 ma. If the plant and machinery is sold as a second-hand plant and machinery, how much IDC you claimed previously? From that, per quarter or part thereof, 5% is needed to be reduced, and the remaining amount will be compared with GST to be paid on sale value. In our example, what is the plant and machinery value ma? 10 lakhs. What is the rate of GST ma? 18%. And we sold it for 6,50,000. In that case, how much IDC that is needed to be reversed? So, what is the input tax we just previously paid ma? 1,80,000. 10 lakhs into 18%, 1,80,000. For how much period we used it ma? 1 year 6 months means 6 quarters. Per quarter, how much percentage we need to reduce? 5%. 6 into 5, 30%. 1,80,000 into 30%, 54. After reducing that amount, what is the amount we will get? 1,26,000. It will be compared with GST to be paid on sale value. 6,50,000 into 18%, 1,17,000. In that, whichever is higher, 1,26,000 is the amount we need to reverse. This is the point ma. Apart from that, you need to read on your own. 2 theory topics will be there. What is that rule? 86A and 86B ma. Pure theory topics. And apart from this, last I think it will be there in the material. Those 2 theory topics you need to read. Rule 86A, okay, that is you can study 100% theory. Rule 86B, what is the logic? When rule 86B is applicable? Say, I will tell you simple in 1 minute that rule 86B. Let us take the example that output tax payable is 100 rupees. ITC is of 105 rupees is there with you. In that case, how much amount you need to pay in cash? 0 generally. Generally 0 because you are having the output tax of 100 rupees and ITC of 105. Therefore, there is nothing is there to pay in cash. But to whom this rule 86B is applicable? Those people needs to pay 1% of the output tax in cash. Only 99% can be used. Of ITC can be used. So in that case, even though you are having 105 rupees as ITC, in that only 99 rupees can be used and remaining 1 rupee must be paid in cash. Sir, to whom this rule 86B is applicable? The taxable supplies value in a particular month exceeds 50 lakhs. For them, this rule 86B is applicable. In a particular month, when your taxable supplies value is more than 50 lakhs in that particular month, this rule is applicable. This is overall concept. In this chapter, you need to keep focus on 16 subsection 2, 3, 4, 17.5, 18.4 and 18.6, 18.1. So these are rest of the areas. I just ignored it. 100% coverage can be there from these areas only. Rest of the things you can ignore. On rule 86B, that 1%. These are the areas you need to keep focus. The major focus will be 18.4, 18.6, 17.5. Major focus will be 18 subsection 4, 18 subsection 6 and 17 subsection 5 blocked credits. I just prepared a list of the blocked credits. Just wait. And this is the maximum points that can be asked. See this? Just will have a, once this point is over, I will close the ITC. These are the maximum possible circumstances that can be asked in the exam. What is the first one? Purchase of the car for employees' official use. Allowed or not allowed? Not allowed, because it is car. Second one, purchase of the bus. Seating capacity consists of 13 passengers and 1 driver for employees for official use. Allowed or not allowed? Yes, bus. Seating capacity more than 13. Next one, purchase of the bus. Seating capacity consisting of 12 passengers and 1 driver for the employees for official use. Here the seating capacity is less than or equal to 13. Equal to 13 also ITC, not allowed. Next one. In the above case, 13 plus 1, 14. That's why ITC is allowed. Second point. Here. 13 and 1 driver. Total 14. That's why ITC is allowed. Here 12 plus 1, only 13. Less than or equal to 13. Therefore ITC not allowed. Next one. Purchase of the bus. Seating capacity 10 plus 1. 11. Less than 13 or not? Allowed or not allowed? Blocked. Purchase of the truck. Truck means transportation of the goods. Allowed or not allowed? Allowed. Purchase of the car by driving school. Allowed. Exception. Purchased buses of 10-seater meant for transportation of passengers. Your main business is transportation of passenger. Allowed or not allowed? Allowed. Purchased a car for providing car renting service. Allowed. Purchased aircraft by airline providing transportation of passenger. Allowed. Procure repairs and maintenance by the company for its truck. On truck ITC is allowed. Therefore on the services also ITC allowed. Next one. Procure general insurance service taken on the car. Purchased by the car manufacturing company. Yes, allowed. It is a part of composite or mixed supply. Next one. Outdoor catering availed by the company as per company policy. No. Outdoor catering or food is allowed when inward supply, outward supply is the same, or it is a statutory obligation, not the company's policy. Therefore, allowed or not allowed? Not allowed. Outdoor catering service availed by the company as per Factories Act. See, statutory obligation, allowed. Demarked, purchased food and beverages to supply to its customers. Inward supply, outward supply is the same. Therefore, IDC, allowed. And Vistara Airlines purchased food and beverages and supplied to its customers, bundled it with the transportation of passenger service. Composite supply, allowed. You cannot stop the flight in the middle of the journey to have the food. Once stopped, there is no need to again start it. So that's why it is a composite supply. Allowed or not allowed, ma'am? Allowed. So Mukesh Ambani took catering service from Balaji Caterer for a daughter marriage. Because personal use. Therefore, IDC not allowed. Zoom car procure renting of car service for providing renting of car. Allowed or not allowed? Allowed. Mr. Case procured the renting of car service in Goa pilgrimage with his friends for tourism. Is it allowed or not allowed, Mark? For tourism purpose, not allowed. Tourism is in the exception list, Mark. Keep focus on this word. Exclusive tourism, IDC is not allowed. But general transportation of passenger, IDC is allowed. Next one, Max Life procured life insurance service from Bajaj Allianz to provide the same to RIL. Inward supply, outward supply is the same. I think in your accounts you will call it as reinsurance. Insurance company again insure that particular policy with another one. This type of concept is known as reinsurance. Reinsurance IDC is allowed or not allowed? Allowed. That is the point. Mr. Modi procured life insurance services from LIC. Personal use, IDC, not allowed. Tata Limited procured health insurance services from Reliance Insurance for its employees as per labor law. Statutory obligation, allowed. Tata Limited procured health insurance services from Reliance for its employees as per company law. Company law, company means not Tata's company's law. The Companies Act. Company law means, okay. In that case, allowed or not allowed? Allowed. Zomato procured fitness services from a gym for its employees as per the company policy. Not allowed. Swiggy procured fitness service from a gym for its employees as per the statutory obligation. Allowed. And HUL purchased travel package for its employees from Club Mahindra Holiday as per the company policy. Not allowed. Colgate purchased a travel package for its employees as per the statutory obligation. Allowed. DMart procured the works contract service from Oberoi Builders to construct its warehouse. Self-construction, ITC, not allowed, even though it is used for business purpose. I told you the example of Balaji campus and Paunputra campus. Tata Motors procured works contract services for the construction of the foundation on which the machinery is mounted permanently. If immovable property is planted machinery, allowed or not allowed? Allowed. Next one. Mahindra procured works contract service for construction of pipeline right inside the factory. Allowed. Outside the factory, not allowed. Next one. See, Mahindra procured works contract service for the construction of the pipeline outside the factory. Blocked, not allowed. Next one. A consulting firm has availed the works contract services for repairing its office building and such expense was debited to its P&L account. Revenue nature, allowed or not allowed? Allowed. A consulting firm has availed the works contract service for repairing its office building. Such amount is capitalized. IDC not allowed. A telecom company avails the works contract services for construction of cell phone tower. Cell phone tower removable property. IDC not allowed. A company purchased cement, tile, architect services for the construction of their own factory shed. Self-construction not allowed. A company purchased cement, tiles and architect services for plant and machinery. IDC allowed or not allowed? Allowed. Even though it is immovable, plant and machinery IDC is allowed. I told you. Next one. NRDP imported diamonds from Dubai and paid BCD and IGST. Yes, IGST can be claimed as IDC. I told you NRDP imported goods, IDC allowed. Local purchases, IDC not allowed. NRDP has imported services from USA. Blocked only on the goods, IDC is allowed. On imported services, IDC is not allowed. NRDP imported goods, IDC allowed. Imported services, IDC not allowed. NRDP purchased a laptop from Chroma, a retail outlet in Mumbai. Local purchases, not allowed. A dealer registered under normal scheme has purchased goods from a composition taxable person. Not allowed, because composition taxable person has to pay out of his own pocket. Marico purchased goods for distributing it as a free samples. Free samples, not allowed. Lexipen purchased pencils and offer a bundle for its customers with offer to buy the pen, get one pencil free. Will it get the IDC on the pencil? Yes, it will buy one, get one offer. It comes under a single supply. Therefore, IDC is allowed on that pencil also. Steady on your own, my last one. Okay, ma'am. So the next point, next topic we need to see is here, registration. So with respect to registration, so the most important points are 22, 24 and 29, ma'am. Those are the important areas, and those areas are only covered. 27 also I just covered here. These are the section numbers I told you. So these are the important sections you need to remember. Fine. So the first point is here, ma. GST registration needs to be taken state-wise and PAN-based. That means in how many number of states you are having the place of business, that many number of RCs you are required to take. How many number of states you are having the place of business, that many number of RCs you are required to take. That is the point. Second one, single registration for all the taxes. There is no concept of CGST registration, SGST registration, IGST registration like that. There is only one registration, that is GST registration. There is only one registration, that is known as GST registration. Next one. Normally, one state, one registration is required, even two place of businesses are there in one state. Take example of Masterminds. In AP, it is there in 7 states. Therefore, 7 places. In AP, is in future it can be. Na? So for example, in AP, it was there in 7 places. Okay. For all these 7 places, only one RC is required. But however, the taxable person can take separate registration if he wants, even though it is within the same state. But once separate RC was taken, they are deemed to be distinct persons, and it is not a stock transfer, it will become a deemed supply there. And these are the registration limits, ma. I think you know, that means special category small ones, that is MMTN in your material, that is Manipur, Mizoram, Nagaland, Tripura. With respect to these 4 states, whether it is a supply of the good or a supply of service, the limit will be 10 lakhs. Okay. But whereas with respect to T-shirt of Sampu, that is Sampurnesh Babu, actually, who is the brother of Mahesh Babu, and his one movie was nominated for Oscar, and it is named as Hriday Kalayam. Okay. For that sake, actually was nominated to Oscar also. T-shirt of Sampu. T denotes Telangana, S denotes Sikkim, and A denotes Arunachal Pradesh, M denotes Meghalaya, and what is it? Sampu. P for Puducherry, U for Uttarakhand. This is T-shirt of Sampu. With respect to these 6 special categories, these 6 states, what is the limit that will be applicable, ma? Whether it is a supply of the good or a supply of service, what is the limit that will be applicable? 20 lakhs. And except these 10, 4 plus 6, these 10 states, rest of the states are covered under general category. In that case, if at all you are a supplier of pan masala, tobacco, ice cream, building bricks, fly ash bricks, roofing tiles, like that, what is the limit, ma? 20 lakhs. So, what is the second one, ma? With respect to other goods, what is the registration limit, ma? 40 lakhs, ma. With respect to other goods, what is the limit that will be there, ma? 40 lakhs. If at all in other states, your exclusive supplier of notified goods, what is the limit that is applicable, ma? 20. If at all other than notified goods, your exclusive supplier of the goods, what is the limit that will be applicable? 40 lakhs. And if at all you are a supplier of service, 20 lakhs, or goods plus service, 20 lakhs. These are the registration limits as per section 22 you need to remember. Okay. So, sir, we are having 2 places of businesses, sir. One is making a taxable supply and second one is making a exempted supply. In that case, from which place we are required to take the registration? The place from where we are making a taxable supply, we are required to take the registration. the place from where we are making the exempted supply, we are not required to take any registration. Okay. Sir, if the business is sold to somebody else, the transferee is required to take the fresh registration, or he can continue the business under the name of old RC. When the business is sold to somebody else, in that case, that new person, that is the transferee, is required to take the fresh registration, or is required to is able to continue the business in the old name. He is required to take the new RC. Why, sir? Because PAN is different from person to person. Transferor PAN number and transferee PAN number will be different. That's why the transferee is required to apply for fresh RC. Sir, what is the time limit to make the application? 30 days. From which date this 30 days shall be counted from? From the date of such transfer. From the date of such transfer, within 30 days, you are required to, what is the thing you need to do, ma? Apply for registration. Same point will be applicable to amalgamation or demerger also. What is meant by the word amalgamation, ma? It can be of two types, na? Amalgamation by merger, amalgamation by purchase. What is the example we discussed in the class? I think you remember that. With respect to purchase, with respect to merger, what is the example we discussed, ma? So milk decoction. Merging these two, coffee will come. It is example for amalgamation by merger. And what is example for amalgamation by purchase? Milk and water mixes, only it will be a milk. It will comes under amalgamation by purchase. From the milk, curd and actually butter comes, it will comes under demerger. So this is a point what we have discussed in the class, ma. So with respect to amalgamation, two companies will be there. One is amalgamating company. Second one is amalgamated company. In the case of demerger also, two companies will be there. One is a demerged company. Second one is resulting company. In those cases, this amalgamated company or resulting company needs to apply for fresh RC. From which date, sir, what is the time limit? 30 days. So for that 30 days shall be counted from date of certificate of incorporation. Okay, ma. That is the point. Next one. This is section 24. So what does section 24 here deals with? Compulsory registration. In these cases, even though, so with respect to section 24, what is the position, ma'am? Compulsory registration means, what is the point here? Even though your aggregate turnover does not exceed the specified limit, but still, if the person was notified under section 24, he is required to take the fresh registration, is required to take the compulsory registration. So what are the cases that are covered under this, ma? First one is, what is the first one? Person making interstate taxable supply of goods only. Remember that point. Not every interstate supplier is required to take the registration. What is the point here, ma? Only the interstate supplier of the goods is required to take the compulsory registration. Interstate supplier of service is not required to take any registration. As per 24, is required to take the registration is turnover crossed 20 or 10. So who is covered under compulsory registration, ma? Only interstate supplier of the goods is covered under section 24. Next one. Person required to pay tax under RCM. That means the people, the recipients who are notified under 9.3 or 9.4, those recipients will be there, na? Those recipients are required to take the compulsory registration. Next one. CTP or NRTP. Casual taxable person and non-resident taxable persons, these peoples are also required to take the compulsory registration. Next one, ECO. Every ECO is liable for TCS under section 52. That means Amazon, Flipkart, all these ECOs are required to take the compulsory registration. In the same way, person who is supplying the goods or service through ECO liable for TCS other than 9.5. But there is an amendment in this particular point, ma. There is a That means even though you are supplying the goods through ECO, even though you are supplying the goods through ECO, if few conditions are satisfied, then compulsory registration is not required. Anybody remembers what are those points, ma'am? It is there in the material. What are those points? First one, that particular supplier must have the PAN number. He should do the business only in one state, and he should have only one place of business. His PAN and place of business details are shared with the department. Thereby he will get the enrollment number. That enrollment number will be shared with the ECO. Then he is not required to take any compulsory registration. That point will be there. I think it will be in self-study or something else, but this point will be there. What is that? If every person who is supplying the goods through ECO, if the following conditions are not satisfied, he is not required to take compulsory registration. If those conditions are not satisfied, then he is required to take the compulsory registration. What are those conditions? First one, he should have the PAN number. He should confine his business only to one state. He should have only one place of business. Those details must be shared with the department, and department will allot you a enrollment number. That enrollment number must be communicated to the ECO. Then compulsory registration is not required. That is the point. Okay, ma'am. Otherwise, you are required to take the compulsory registration. Next one, ECO under 9 subsection 5 is required to take the compulsory registration. Who are the ECOs that are notified under 9.5? Who are the ECOs that are notified under 9.5? Transportation of passengers like Ola, Uber, hotel accommodation, housekeeping services, restaurant to food aggregators like Zomato or Swiggy. These people are required to take the compulsory registration. Next one, person liable to deduct the TDS. Who is required to deduct the TDS, ma'am? Okay, we'll have a separate discussion on that, but anybody remembers when you are required to deduct the TDS? Who is required to deduct the TDS? Government and government related persons are the recipients. Then they are required to deduct the TDS when the contract value is more than 2.5 lakhs. It will come later on, we'll have a discussion. So those persons who are required to deduct the TDS are required to take the compulsory registration. Next one, ISD. What is meant by this ISD, ma? Input Service Distributor. When the person will be treated as ISD? He is having a centralized billing system or a centralized accounting system. In those cases, the total ITC in relation to input services will be accumulated at one place. But whereas output tax is needed to be paid from multiple places, then the person will distribute the ITC that was there with him, that was accumulated ITC will be distributed to all the branches. Then the person who is distributing that is known as ISD. These ISDs are required to take the compulsory registration. Next one, person making taxable supplies on behalf of others, that is agent. Simply the agents who are covered under deemed supplies are required to take the compulsory registration. The agents who are required to take the agents who are covered under deemed supplies are required to take the compulsory registration. Next one, every person supplying OEDR service from outside India to an unregistered person in India. What is meant by OEDR service, ma? Online information and database access or retrieval services. Example, I just gave the Netflix, Amazon Prime Videos, cloud services like that. So who is the supplier? Outside India. And who is the recipient? Unregistered in India. Then those OEDR service providers are required to take the compulsory registration. That means Netflix, Amazon Prime Videos, all these suppliers and iCloud, Google Drive, these people are required to take the compulsory registration. Next one, latest amendment. Every person supplying online money gaming from a place outside India to a person in India is required to take the compulsory registration. Any game where you need to pay the money, ma? PUBG is not there at present. Any game where you need to pay the money to buy some weapons or buy some credits. Any popular game? What is that? Free Fire. Okay, Free Fire. In this, you need to pay some money to purchase any weapons or something. Yes. In that case, those supplier of the game who is there in levels. Based on levels. What is that? What will happen then? ఏంటంటే లెవెల్స్ నాకు అర్థం కాలేదు. Okay, fine. So in the game, okay. Levels, if you cross, there is no need to pay money. That is okay, whatever it is. Okay, leave the matter. So if at all you are paying some money to that particular game, then the supplier of that particular game is required to take the registration in India as a compulsory registration is required. So this is section 24. Next one is section 23. What does section 23 deals with here? Persons not required to take the registration. So regarding this, person engaged exclusively in non-taxable supplies. If at all you are making exclusive non-taxable supply or exclusive exempted supply, in those cases you are not required to take any registration. If at all you are making exclusive exempted supplies or exclusive non-taxable supplies, you are not required to take any registration. Next one, agriculturist, that is the farmer, is also not required to take any registration. In the same way, person making only RCM supplies, that is exclusive RCM suppliers, is not required to take any registration. Why, ma? Because RCM recipient is covered under section 24 and is required to take the compulsory registration. In those cases, what is the position, ma'am? In those cases, exclusive RCM suppliers is not required to take any registration. Next one, interstate supplier of service. I told you, up to 20 or 10, they are not required to take any registration. In the same way, I told you, CTP is required to take the compulsory registration. But if the CTP is dealing in handicraft goods, in those cases, he is not required to take the compulsory registration. He can take the registration when the threshold limit exceeds. Last but not the least, any person who is supplying services through ECO, then until the limit exceeds, they are required to take the registration only as per 22, not as per 24. What is the difference between 22 and 24? 24 compulsory registration, 22 when your turnover exceeds. So interstate supplier of service, CTP of handicraft goods, interstate supplier of service, last 3, 4, 5, 6, they are required to take the registration when the limit exceeds. 1, 2, 3. Exclusive exempted supplies, exclusive non-taxable supplies, agriculturist, exclusive RCM supplier. First 3 cases, they are not required to take any registration. Total 6 points are there. In that first 3 points, you are not required at all. Last 3 points, you are required when the registration limit exceeds. Got the point, ma? Next one. So with respect to procedure for registration, I am not discussing about the chart, because you can study on your own, except that what are the important points, we'll have a discussion. Sir, PAN is mandatory for GST registration? Yes, except NRTP. For NRTP, based on passport, you will get the GST registration. PAN is mandatory for registration, except NRTP can be generated registration on the basis of passport. Sir, a voluntary registered person is also required to pay the GST? Yes, just like a normal registered person, a voluntary registered person is also required to pay the GST. Next one. Sir, we are having one place of business in special economic zone another place of business in non-special economic zone within the same state. In that case, separate RC is required or separate RC is not required? Separate RC is required. Because once an area has been notified as special economic zone, it will be treated as outside India for all taxation purposes. Therefore, one unit is there in non-special economic zone area and another unit was there in special economic zone. Then what is the position, ma? Separate RC is required even though we are having it in the same state. If any unit in special economic zone area and another unit in non-special economic zone area in the same state, separate registrations is required for both. Okay, ma? This is another point you need to remember. This is Shumoto registration. That means when you are liable for registration either as per 22 or as per 24, but still you did not apply for registration. And if the department knows about that particular thing, then on a temporary basis, it will grant you a RC. On a temporary basis, it will grant you a number. See, person who is liable but fails to obtain the registration, the department may register such person Shumoto himself on a temporary basis. When a temporary registration was granted to you, from that particular date, you are having two options. Within 90 days, submit the application for registration, or if you don't accept that, you can go to the appeal. Once the temporary number is allotted to you from that particular date, within 90 days, if at all you are accepting that, you need to submit the application for registration. You did not actually accepted that. In those cases, what is the position, ma? File an appeal. And if the appeal comes in favor of you, no registration is required. If the appeal is against you, then from the date of court judgment, within 30 days, you need to apply for RC. This is Shumoto registration by the department. Okay, ma? Within 90 days, you are having two options. One is submit the application for registration. Second one is filing the appeal. If you want to go for appeal, then if the appeal is in your favor, no registration is required. If the appeal is against you, then apply within 30 days. This is a total story you need to remember. Next one is effective date of registration. What is meant by this effective date of registration, ma? From the date when you are liable for registration. From the date when you are liable for registration. From that particular date, if you apply for RC within 30 days, then even though RC was granted to you subsequently, the effective date will be the date when you are liable for registration. For example, on October 1st, our turnover crossed the specified limit. Our turnover crossed the specified limit. But we applied for RC on October 20th and RC was granted to us on October 31st. Then what is the effective date of RC then? October 1st. Why, ma? The date when you become liable is October 1st. When you applied for it is October 20th, that is within 30 days. Then in that case, even though RC was granted to you on October 31st, what is the effective date, ma? October 1st will be the effective date. Another point. Sir, if we applies for RC after 30 days, then what is the position? The date of grant of RC will be the effective date. That means our turnover crossed on October 1st. We applied on November 9th. RC was granted to us on November 12th. In that case, what is the effective date of registration? November 12th. Why, ma'am? What is the turnover crossed date? October 1st. When you applied November 9th, within 30 days or after 30 days? After 30 days. In that case, what is the position, ma? In that case, definitely the date of grant of RC will be the effective date, that is November 12th. That is the point you need to remember under 25. Next one is section 26, deemed registration. What is this deemed registration? Registration under SGST is deemed to be the registration under CGST. Cancellation under SGST is deemed to be the cancellation under CGST. These are the two lines that will be there under section 26. Your application is approved. That means registration under SGST. Registration under SGST is deemed to be the registration under CGST. Cancellation under SGST is deemed to be the cancellation under CGST. Okay, ma'am. This is 26. This is 27. What is 27 deals with? Special procedures regarding the CTP and NRTP. What is meant by CTP, ma'am? That is a full form. What is the meaning? What is the meaning, ma'am? The person who is having a fixed place of business in one state but making occasional supplies in some other state is called as CTP. The person who is having a fixed place of business in one state, but the person now making the supply in a state where he does not have any fixed place of business. Then the state where he does not have a fixed place of business, in that state he will be called as CTP. For example, in Gujarat he is having a fixed place of business. In AP actually he is making temporary supplies. I told you in the class regarding Rudraksha sale. So in those cases, what is the position, ma? He is making an occasional supply in Andhra Pradesh. Then with respect to AP, he will be called as CTP. And what is meant by NRTP? The foreigner who is making an occasional supply in India, that person will be called as NRTP. What is example I told you, ma? Nepali people selling the sweaters in the winter season. Those people will come under NRTP. And what is the difference between this CTP and NRTP, ma'am? Both are actually compulsorily required to take the registration. And interestingly, they are required to take even before commencement of business, 5 days before. Even before commencement of business, 5 days before, they are required to take the registration. Remaining people, once they started the business, the turnover crossed that 10, 20 or 40, then only they are required to take the registration. But whereas with respect to CTP and NRTP, they are required to take the registration 5 days before the commencement of business. And what is the form number? CTP REC01 and NRTP REC09. Form number changes. And CTP PAN is required. And for NRTP, passport is required. And both the people are not eligible for composition scheme, CTP and NRTP. In the same way, but the difference is the CTP can claim the ITC on inputs, input services and capital goods. Simply on all items, CTP can claim the ITC. But whereas with respect to this NRTP, can claim ITC only on the imported goods, not even services. That is the difference. Next one, he is required to pay the advance tax, both the people. In order to get the registration, so CTP and NRTP are required to pay the advance tax. In our Telugu, simply, advance tax kattu or C-pattu. That is the concept what they will say. Once you paid the advance tax, then only you will get the registration. Sir, what is the validity period of RC that was granted to the CTP and NRTP? 90 days, ma. Minimum 1 day, maximum 90 days. Sir, is it possible to extend it? Yes, for another period of 90 days. In total 90 plus 90, 180 days, you can continue under CTP and NRTP. Sir, what about the cases where that you want to run the business for more than 180 days? Then you need to cancel your RC as a CTP and you need to apply for registration as per section 22. Once your business is over, again you can surrender the RC. So that means you can continue under section 27 only up to 180 days. After 180 days, you cannot continue in the capacity of CTP or NRTP as per 27. You need to cancel your RC and you need to apply for normal taxable person as per section 22. This is 27 story, ma. And 28, I did not make it. You can study on your own. Amendments to RC. Non-core areas, ourselves we can modify that. Core areas, we need to get the permission from the department. What are the core areas, ma? Legal name of the business and head office address, branch address, key managerial person data changes. It is key core areas. With respect to core areas, we need to seek the permission from the department. Non-core areas like that means your mail ID, phone number changes. In those cases, definitely what is the position, ma? In those cases, what is the position? You can modify it yourself. This is a point you can study on your own. 28. Now you are seeing 29. So what does 29 deals with? Cancellation of RC, ma. Section 29 here will have 2 points. One is 29.1, second one is 29.2. What does 29.1 deals with? When applied by the registered person, that is voluntary cancellation by the registered person himself. Maname cancel cheskune pani aithe, those are the cases that are covered under 29.1. I think 5 cases will be covered under 29.1, ma. That is when the business is discontinued or sold, that is transferred. When your business is discontinued, that is closed, or when the business is transferred, that is when the business is sold. In the same way, change in the constitution means partnership form converted to LLP, LLP to company, sole trading to partnership form. Like that, any conversion happens in those cases. For example, company to LLP. Now, LLP will apply for a fresh RC. Na? In those cases, company can cancel its RC. No longer liable to be registered. That means previously it is a taxable supply. Now it was converted to exempted supply. As per section 23, if at all you are making exclusive exempted supplies, you are not required to take any registration. So in those cases also the person can cancel the RC. In those cases also the person cancel the RC. Next one is intends to opt out of voluntary registration. Intends to opt out of voluntary registration. That means you are a voluntary registered person. You are a voluntary registered person. But now you want to cancel your RC. Why, ma? We started the business. Even though our turnover does not cross the limit, we applied for registration. Later on, no business is there. That's why you are just trying to sleep. In that case, what is the thing that will happen, ma? Definitely, we can cancel our registration. That is a point one need to remember. These are the cases where when we applied, RC will be cancelled by the registered person. First one, when the business is closed. Second one, when the business is sold. Third one, change in the constitution. Fourth one, your taxable supplies becomes either exempted supplies or non-taxable supplies. Intends to opt out of voluntary registration. In all these cases, when you apply, department will cancel your RC. Next cases are sumoto cancellation by the department. That means there is no application by the registered person, but still your RC can be cancelled. In that, the first point is RC obtained by fraud. That means when you submitted the false bank details, false PAN number, false Aadhaar card, something in the process, you made some fraud. In those cases, what is the position, ma? Definitely department knows about that particular thing. Your RC can be cancelled. A voluntary registered person does not commence the business within a period of 6 months. Why, sir? If the voluntary registered person does not commence the business within a period of 6 months, why the department will cancel the RC? because in future they may become dormant companies or bogus companies. Prevention is better than cure. That's why their RC will be cancelled. And not filing of return by the composition dealer. What is the return the composition dealer is required to make? So regarding this point here, with not filing of return by the composition taxable means, what is the return the composition supplier is required to file? GSTR 4. Statement is CMP 08 but whereas the return is GSTR 4. What is the due date of this GSTR 4? Next financial year, April 30th. From that particular due date, within 2 months also, it was not filed. That means May, June. In those cases, your RC can be cancelled by the department. Your RCs can be cancelled by the department. Next one. Does not provide the bank details. That means, are you able to recollect your childhood days when rule number 10A was discussed in regular batches? What does rule 10A deals with in registration chapter? Submission of bank details. What is the time limit to submit the bank details? 30 days from the date of RC or the first GSTR1, whichever is earlier, that is the cutoff date to submit the bank details. Within the time limit, bank details are not submitted, then also your RC can be cancelled by the department. Next one. Wallet, so first one is, this one. Violates anti-profiteering means in against to Competition Act, any unfair advantage you are getting. In those cases also department can cancel your RC. Next one, monthly return filer fails to file the return for continuous period of 6 months. What is the return these people need to file? GSTR 3B. GSTR 3B was not filed for continuous 6 months and department cancel your RC. సుప్రీంకోర్టు ఒప్పుకుంది కానీ సమాజం ఒప్పుకుంటుందా? వినండి, గ్యాప్ ఇచ్చి కూర్చోండి. ఫైన్. సో generally regarding this yes ma'am, that means what I am saying is in CA exams you cannot write in a chart format now. Even though Supreme Court says that you can do that, but CA Institute will accept that. That is my question. I think you understood in a better way now. Fine. Okay. So with respect to GSTR 3B, what is the position, For continuous 6 months, GSTR 3B was not filed. And if at all you are there in QRMP scheme, then you will file the returns on a quarterly basis. That's why for 2 quarters, the return is not filed. Then also department can cancel your RC and issues invoices without supply. These are called fake invoices or dummy invoices. If issues any fake invoice or dummy invoice, then also our RC can be cancelled by the department and avails IDC in violation of the Act. That means 16(2) conditions are there now. Even though 16(2) conditions are not satisfied, in those cases, what is the position, Department can cancel your RC if you still claimed the ITC. This one is not required, ignore that. And with respect to this one, when your RC is suspended on a temporary basis, once the suspension was done, that means when you applied for cancellation, in those cases, while the cancellation proceedings are pending, on a temporary basis, your RC will be suspended. When your RC is suspended, you cannot make any taxable supplies. You cannot issue any tax invoice. Therefore, you are not required to issue any you are not required to file any GSTR 1, GSTR 3B also. Suspension shall be revoked upon the completion of cancellation proceedings. Once cancellation proceedings are completed, then whatever the suspension stands revoked and it will be replaced by cancellation order. And procedure, I think you know the cancellation procedure, Nama. What is the time limit to make the application? If at all you are applying for that, 30 days. Okay, when the event happens from that particular date, 30 days. What is the time period to cancel the RC? Another 30. When your RC was cancelled, what is the thing you need to do? You need to reverse the ITC on the closing stock of the goods as well as capital goods. When RC was cancelled, you need to reverse the ITC. Okay, but whereas with respect to 29.2, what does 29.2 deals with? What does 29.2 deals with? Shumoto cancellation by the department. In those cases, department will give you a show cause notice. For that show cause notice, you must give a reply within 7 days. Then from that particular date, within 30 days, department will say yes or no. Next one is, taxpayer is not allowed to file the returns post cancellation. Once your RC is cancelled, you cannot file the returns. And registration can be cancelled by retrospective effect. Not only prospective, RC can be cancelled for your mistakes that was done, even retrospectively also. Next one is, cancellation will not affect the liability of the registered person prior to cancellation. That means even though your RC was cancelled, whatever the liabilities that are there before the RC cancellation, all those liabilities will be continued. And this is the last point in registration chapter, that is revocation. Revocation, there is a change in the time limit. This is 90 days, now it is 180 days. What is meant by the word revocation? What is meant by the word revocation? Restoring back. Revocation means revoking the cancellation here happens. That means once RC is cancelled, you apply for revocation, your RC will be restored. That is section 30. Your RC will be restored. That is section 30. What is the time limit to make the application for revocation? Previously 30 days, now it is 90 days. Is it possible to extend that? Yes, for another period of another 180 days. In total, 90 plus 180, 270 days. Once you applied for it, department feels that it is justified to restore your RC. Within 30 days, your RC will be restored again. Otherwise, if the application is rejected, okay, then what they will do, then they will issue the reasons for rejection. Why your revocation application was rejected, they will specify the reasons for that. There ends registration chapter, Okay, so the next chapter we need to see is tax invoice, debit notes and credit notes is the topic we need to see. So regarding that, the first point is here we need to see tax invoice essentials. That means with respect to tax invoice, so the first point is here, what is the time limit to issue the tax invoice? What is the time limit to issue the tax invoice? Those points already we discussed in time of supply chapter. With respect to goods, physical movement was there, then honor before removal, no physical movement, honor before date of delivery, continuous supply of the goods, date of periodic statement or date of payment, whichever is earlier, like that. And with respect to services, continuous supply of service, honor before due date, section 31 is there, na? All those time limits will be discussed in time of supply chapter. The next point is here, what is the mandatory content that should be there in the invoice? So what is the mandatory content that should be there in the invoice? That means what are the details that must be there in the invoice? Supplier name, address, GST number, and supplier details means supplier name, address and supplier GST number. Invoice specific ones like serial number of the invoice, date of issue, and third one, recipient information like name, address, GST number if registered. Sir, if at all the recipient is unregistered person, then what is the position? Then we need to check the value. The value of the supply is more than 50,000, then name and address compulsory. If the value is less than 50,000, then the name and address is optional. Okay, next one. Product details like what is the HSN code, description, quantity. HSN code, how many digits will be there, ma? 8 digits. With respect to goods and with respect to services, 6 digits will be there. With respect to goods, 8 digits. With respect to services, 6 digits will be there. Sir, how many number of HSN codes must be there on the invoice? It will be decided by your previous financial year turnover. If your previous financial year turnover is less than or equal to 5 crores, then B2B 4 digits are mandatory and B2C optional. If your aggregate turnover is more than 5 crores, then whether it is B2B or B2C, 6 digits are mandatory. And after that, financial information like what is the total value, what is the taxable value, what is the tax rate, what is the tax amount, and additional details like place of supply, whether RCM is applicable or not, authentication, signature, and QR code if at all it is a e-invoice. All these details must be there in the invoice. Then only it is called as tax invoice. All these details must be there in the invoice. Then only it will be called as a tax invoice. Next one. Sir, issue format. That means how many number of copies are required to be issued. How many number of copies are to be issued, ma? With respect to goods, 3 copies, ma, triplicate. With respect to services, 2 copies are required to be issued. With respect to triplicate, 3 copies, ma. Original for the recipient, duplicate for the transporter, 3rd copy for the supplier to upload the GSTR1 data. Sir, why only 2 documents are there with respect to services? Because there is no need for transportation with respect to services, ma. Therefore, original for the recipient, duplicate for the transporter. Okay. And what is the purpose of this invoicing? Ensures proper documentation and record keeping for all parties involved. This one is not required for the exam, just ignore that. So with respect to goods, how many copies will be there, ma? 3 copies. With respect to services, how many copies will be there, ma? 2 copies. Okay. The next point is here. Special cases, ma, with respect to invoicing. Here, 2 types of invoices can be there. One is consolidated invoice. Second one is revised tax invoice. Generally, what is the rule, ma? How many number of taxable supplies are there? That many number of tax invoices we need to issue. How many number of taxable supplies are there? That many number of tax invoices we need to issue. But if the 3 conditions are satisfied, in those cases, instead of a separate tax invoice, a consolidated tax invoice can be issued. What are those 3 conditions that are required to be satisfied, ma'am? First one, value should be less than 200. Recipient must be a unregistered person and he does not require an invoice. If all these 3 conditions are satisfied, there is no need for the separate tax invoice, ma. Instead of that, a consolidated tax invoice can be issued at the end of the day. So what are the 3 conditions that are required to be satisfied, ma? Value should be less than 200. Recipient is a unregistered person and recipient does not require the invoice. If all these 3 points are satisfied, in those cases, instead of issuing a separate tax invoice, a consolidated tax invoice at the end of the day can be issued. This is consolidated invoice, ma. What is example I told you for this consolidated invoice, ma, at that time? School children, stationery example is there, na? Pen, pencil, crayons, like that. The value will be less than 200. And school children are unregistered and they does not require the invoice. All the 3 conditions are satisfied. Therefore, what is the position, ma? At the end of the day, or for all these petty supplies, a consolidated invoice can be issued. Second one is revised tax invoice. What is meant by this revised tax invoice, ma? For this, the link is there with respect to effective date of registration. What is the effective date of registration, ma? What is the effective date of registration? From the date when we become liable for registration, from that particular date, if we applies for RC within 30 days, then even though RC was not granted, what is the effective date? Sorry, even though RC was granted on much later date, what can be the effective date? What can be the effective date? The date when we become liable for registration. I told you the example of in the morning session, October 1st, liable for registration. October 20th, we applied for it. And October 25th, I think RC was granted to us. In this case, even though RC was granted to us on October 25th, what is the effective date, ma'am? October 1st. Therefore, the supplies that happened between effective date, October 1st to actual date, October 25th, whatever the supplies that happens, again we need to issue an invoice for that. That particular invoice is known as revised tax invoice, ma'am. See, every registered person granted registration from the earlier date shall issue the revised tax invoice within 1 month from the date of issue of registration certificate. What does this mean, ma? What is in the previous example? What is the effective date? October 1st. What is the actual date of RC? October 25th. Therefore, the supplies that happened between 1st October to October 23rd, again we need to issue a revised tax invoice. What is the time period to issue the revised tax invoice, ma'am? What is the time period to issue the revised tax invoice? Within 1 month means in our example, October 25th. From that particular date, within 1 month, we need to issue the revised tax invoice. Sir, is it possible to issue consolidated revised tax invoice? Let's say, for example, from October 1st to October 25th to a single person, we made 4 supplies. From October 1st to October 25th in the above example, to the same person, we made 4 supplies. In that case, for these 4 supplies, a consolidated revised tax invoice can be issued or a separate revised tax invoice is needed to be issued. For these 4, consolidated can be issued or separate or needed to be issued. It depends upon whether it is B2B or B2C. If at all it is B2B, always separate revised tax invoice is needed to be issued. If at all it is B2C, it depends upon intrastate and interstate. If at all it is intrastate, consolidated can be issued. If at all it is interstate, depends upon value. Value less than or equal to 2.5 lakhs, consolidated. Value more than 2.5 lakhs, separate revised tax invoice is needed to be issued. Based on this, when a consolidated invoice can be issued? Based on the above data, when a consolidated revised tax invoice can be issued, B2B not possible. B2C, intrastate possible. Interstate, value is less than or equal to 2.5 lakhs possible. That is the thing I wrote there. Consolidated revised tax invoice can be issued only if it is an intrastate supply. If at all it is an interstate supply, value is less than or equal to 2.5 lakhs made to C, unregistered person, that is B2C. See, consolidated revised tax invoice never be issued in case of registered person, whether intra or inter. That means B2B, consolidated revised tax invoice is not possible. B2C, whether it is intrastate supply or interstate supply, value is less than 2.5 lakhs. In those cases, a consolidated revised tax invoice can be issued. Okay, ma? So this is the point. Now we need to see alternative billing documents. What is this, ma? Alternative billing documents. That means other than tax invoice. What is the other documents that can be issued? In that, the first one is here, bill of supply. What is the first one here, ma? Bill of supply. So with respect to bill of supply, when a bill of supply will be issued, ma? In two circumstances, a bill of supply will be issued. One, it is a composite supply. Second one, it is an exempted supply. In those two cases, generally tax is not collected, na? That's why instead of tax invoice, what is the document we will issue, ma? Bill of supply. That's why what is the point I wrote there? Issued for supplies on which tax is not collected. Either it can be used by the composition supplier or by the exempted supplier. Because in case of composition supply as well as exempted supply, supplier cannot collect the tax from the recipient. Na? In those cases, instead of tax invoice, what is the document that will be issued, ma? Bill of supply. And sir, just now you said that for composite supply also, bill of supply. Exempted supplies also, bill of supply. Then how can we differentiate that? It will be mentioned on the bill of supply. See, if at all it is a composition taxable person related one, must include specific wording for composition taxable person. If nothing is mentioned, exempted supply. If at all it is a composite supply, the words composition supply will be mentioned on the document itself. The next question is here, sir, if at all we are making taxable supplies as well as exempted supplies to a single person, in that case, two separate documents are needed to be issued or a single document can be issued. That means generally for taxable supplies, tax invoice will be issued. For exempted supplies, bill of supply will be issued. My question is here, last one, second one from the girl side. So what is the document we need to issue, ma'am? What is the document, ma, we need to issue? In those cases, separate documents or a single document can be issued. So the point is here, if at all it is a B2B supply, if at all it is a B2B supply, then for taxable supplies, tax invoice, exempted supplies, bill of supply must be separately issued. If at all it is a B2C supply, in those cases, a single invoice cum bill of supply can be issued. That is the point. See, invoice cum bill of supply used when supplying both taxable as well as exempted goods. It will combine the elements of tax invoice as well as bill of supply, and definitely it is a mixed supply, simplified documentation for mixed supply, but it can be issued only in case of B2C. It can be issued only in the case of B2C. If at all it is a B2B supply, then always separate documents must be issued. Always separate documents must be issued. That means for tax invoice, for taxable supplies, tax invoice. For exempted supplies, bill of supply must be issued. Okay. So these are the 2 points that are important from the examination point of view. And in bill of supply, especially this invoice cum bill of supply. When invoice cum bill of supply will be issued, ma? In the case of B2C, when they are making supplies taxable as well as exempted to a single person, in those cases, a single document that is known as invoice cum bill of supply will be issued. This is the point, ma? And the next one will be, what is the next one we need to discuss here? Credit and debit notes. From Amma being a marathon session, what are the points that are important from the examination? Only those points will be discussed, not everything there in the material. Okay, so with respect to credit and debit notes, ma, first one, credit note we will see. So what are the circumstances where a credit note can be issued, ma? These are the circumstances where a credit note will be issued. What are the circumstances where the credit note will be issued? Supplier declared value is more than actual value. Simply, invoice value is more than actual value. What is the first point, ma? Invoice value is more than actual value. Second one, supplier declares higher tax rate than the applicable rate. That means tax indicated in the invoice is more than actual tax payable. Tax indicated in the invoice is more than actual tax payable. Third one, goods received in lesser quantity. Fourth one, sales returns. These are the four circumstances where the credit note can be issued. What is the first one? Invoice value is more than actual value. What is the example we discussed for this? Let's say, for example, yes, ma. What is the example? Wasram biryani. At that time, we discussed at that point. Biryani is for debit note, na? Okay, we'll change it here. Let's say, for example, okay, I just want to just the break, everything was changed. Na? For example, 5:30, there can be a break, for example, at 5:30. So, sorry, fine. Yes, ma, please. దయచేసి దీన్ని ఎడిట్ చేయాల్సిందిగా ప్రేక్షకు కోరుతున్నాను. ఫైన్. Okay, so the point is here, ma. So let's take the example. The break is at 5:30. So that's why I just want to order you a snack. Okay, for example, let's say brinjal bhaji. I just want to order you. Let's take the example. I just want to order you 250 brinjal bhajis, ma. But later on, I just ordered for it initially 250. But whereas when actually they just came, few people don't like that particular bhaji. Only 150 people actually wants it. So I just actually called that particular fellow and said that instead of sending 250, please send us 150. What is the invoice value now? If it all you generated the invoice, 250. What is the actual supplied value now? 150. What is the difference that is there? 100. For that 100, what is the document that will be issued? A credit note. Second one, tax indicated in the invoice is more than actual tax payable. For example, let's say, okay, my Sisha actually, is running a hardware company, ma. I just went to that particular shop hardware shop means paintings, all these things will be sold. I just went to that particular shop to purchase few items. He charged me actually 18%. Sorry, he charged me 28%, but the actual tax rate is only 18%. I asked him, why are you charging 28 instead of 18? Sorry, sir, I am habituated to do that. But I asked, but don't actually charge higher rate for me. Actually, please actually put the same rate what is applicable as per the law. Now, what is the rate that is indicated in the invoice, ma? 28%. What is the actual tax payable? 18. What is the difference? 10%. For this 10%, what is the document we need to issue now? A credit note. Third one, goods received in lesser quantity. Say, for example, I just ordered some 100 idlis for breakfast. But sometimes we need it. No? Okay. So in that particular case, the seller sent me lesser quantity. He sent me only 99. I just ordered 100 idlis, but whereas he actually sent me only 99, there was one lesser quantity was there. For that one, what is the document we need to issue? A credit note. And last but not the least, sales returns. Already you know now when sales returns happens, a credit note will be issued. These are the four circumstances where a credit note will be issued. First one, what is the first one? Invoice value is more than actual value. Second one, tax indicated in the invoice is more than actual tax payable. Third one, lesser quantity. Fourth one, sales returns. In these four cases, a credit note will be issued. Sir, a credit note is issued. What will happen? That means the buyer ITC will be increased or decreased. Once a credit note is issued, buyer ITC will be reduced or increased. Reduced. It will reduce the supplier's output tax liability. When the supplier output tax liability was reduced, buyer ITC will also be reduced. When seller output tax liability was reduced, automatically the buyer's ITC will also be reduced. That is the point. Sir, is there any time limit that is there to issue the credit note? Yes, my first one, second one. What is the time limit? What is the time limit actually? I think by expressions you are saying that. By shaking your head so hardly actually. Okay, fine. So what is the time limit? The time limit that will be there is 16.4 time limit. What is the time limit that is there in 16.4? What is 16.4? The time limit to claim the ITC. What is the time limit to claim the ITC? This is the time limit. Next financial year, November 30th, or date of annual return, whichever is earlier, that is the cutoff date to issue the credit note. What is the cutoff date to issue the credit note, ma? Next financial year, November 30th, or date of annual return, whichever is earlier. That is the point. Okay. Next one, debit note. When a debit note will be issued, ma? Three circumstances. Supplier declared value is less than actual value. Supplier declares lower tax rate than applicable rate. Third one, goods received in more quantity by the buyer. First one, invoice value is less than actual value. For example, I think the session will be almost today. It will be closed in between 8:30 to 9 approximately, because it was your delay. I am on time. So whosoever is late, we need to pay the price, ma. So we means I also need to pay the price. So I'm on time actually. So but still you're late by some 45 minutes to 1 hour. We need to compensate that 45 minutes. So 8:30 approximately, plus or minus 15 minutes extension. I don't know for how much time. I am excluding MTPs already. Time will not be sufficient. So I will try to do that, but everything was changed just now. Actually, I'm having it with me, including amendments. If time permits, whatever I promised, everything I will do. But up to 8:30, it is 100% you should be here. And up to 9, whether it depends upon you. If you can be up to 9, then MTPs and amendments can be discussed. Not in full, at least a glance can be given. So we'll see later on. So once at 7:30, we'll have once at the time the discussion. So for the time being, let's come to this point, debit note. Let us take the example that the students need to stay, for example, up to 9. But actually, girls actually have their lunch at 3. So they don't feel hungry. But what about the boys? They feel a little bit hungry, na? That's why for them, I just want bring biryanis from AK Biryani Paradise, for example. Okay. But for that, I just said one condition. I just conduct a quiz. Who wins in the quiz, they will get a biryani frabby. So in that case, automatically majority of the people does not believe me. Only few people actually raised their hand for the biryanis. Ah, that fellow. Yes, yes, like that. So I ordered for 100 biryanis initially. But later on, when that particular time comes, everybody feels that, okay, there is a possibility, sir. Sir, can I also join the quiz now? Why you don't want to participate now? No, sir, I am hungry. Okay, now understood the problem. It is not about the GST, it's about the hungry. So that's why I just changed my mind and want to give all these people biryanis. So initially invoice was generated for 100. Now I ordered for 250. In that case, what is the invoice value? 100. What is the actual supplied value? 250. What is the difference? 150. For that 150, what is the document we need to issue? A debit note we need to issue. Second one. Tax indicated in the invoice is less than actual tax payable. For example, I went to the same shop and instead of charging 18%, he charged me 10% only. I asked Vaira, it's okay, sir, he said. I said, no, ma, rule is rule, rule for all, but don't expect from me. I will expect that 10 to become 0. But as per the theory, I am saying, what is the tax that is indicated? 10%. What is the actual tax payable? 18%. That means the tax indicated in the invoice is less than actual tax payable. What is the difference? 8%. For that 8%, what is the document we need to issue? A debit note. And these things do not happen frequently. More quantity by the buyer. It happened with me in Zomato, even though a debit note will not be issued in practical sense, but in a humorous way, I can tell you, when I just went to Tirumala, actually previously, or not on this particular occasion, I stayed at a service apartment. That means apartment will be given to us on rent, fridge, stove, everything will be there. We can make our own food. So those apartments will be given on a rental basis. I just stayed there. So, but actually I put a order from Zomato. I can't remember some Tamilian restaurant which is famous in Tirupati. Shervan Bhavan. Apart from that, some idli like item is there. I can't remember the name. That means Tamil item, just like idli like item. What is that? Somebody said? Idiyappam, something. It was something. Yes. Actually, I ordered all these items. First, actually, they delivered me the parcel. Within 20 minutes, another parcel with the same quantity came to me. So I ate both. So God gifted. So food is Bhagavan. Yes, na? So that's why I don't want to waste that food. I ate both. Okay, in this case, what is the invoice value? Only one item. But they sent me 2. That means in rare occasions, we will receive more quantity. If we receive more quantity, in that case, what is the document we need to issue? Debit note. Because of debit note, the seller liability will increase or decrease? Increase. When seller liability increases, buyer ITC will also be increased. But there is no time limit for this debit note. A credit note, there is a time limit, but with respect to debit note, there is no such time limit. That is the point you need to remember. Okay. The next points will be once the debit note, credit note, whatever the points I am discussing in this chart, 100% sufficient for the exam. But those things should be read it in depth. This is the summary now, but this is more than sufficient for the exam. For 30. For exemption, 50 into 60%. Exemption is 60%. Now, to get a minimum of 30, this is more than sufficient. But if you want 45, 50, you need to study everything. Even not board material is also not sufficient. Others books, CMA board material, CS board material, if possible MBA board material, everything you need to study. Then you will get 50 out of 55. Okay, fine. Let's come to the point. What is the next point there, E-invoicing. So what is meant by this E-invoicing? We will see now. Yes. E-invoicing, applicability and the scope. To whom this invoicing is applicable? To whom this invoicing is applicable? Mandatory for the suppliers with the aggregate turnover more than 5 crores in the preceding financial year starting from 17-18 onwards. That means the year in which GST came into being. From that particular year, in any financial year, your aggregate turnover is more than 5 crores, then the concept of invoicing will be applicable. That is the first point. Sir, to whom this invoicing is applicable, B2B or B2C? E-invoicing is applicable to B2B and exports. Invoicing concept is applicable to B2B transactions and exports. Sir, is there any negative list for this invoicing? Yes, it excludes B2C invoices, ISD invoices and import of the goods. B2C it is not required. And ISD invoice is an internal document. Import of the goods, supplier will be there in overseas. It is not possible. That's why with respect to B2C invoices, ISD invoices and import of the goods, invoicing concept will not be applicable. Okay, ma'am. Next one. Sir, what is the invoice registration process with respect to invoicing? That is the next point. So what is the invoice registration process? Ma? First one, for generally rule is ma, with respect to tax invoice, there is no prescribed format. Unless it is a invoicing concept, there is no prescribed format for tax invoice. Whatever the particulars, I told you na, in the starting of this session, those particulars are there, then it is a tax invoice. There is no prescribed format. That means supplier name should be only above the header and footer, header, and recipient name should be like this. There is no such format. In which way you likes, you want to put the supplier name in the up, you can do that. In the bottom, you can do that. In the middle, you can do that. It is up to you. But all these details must be there on the document. But once the concept of invoicing is applicable, there is a prescribed format that is known as INV01. To whom this invoicing is applicable, all those people need to upload the information in a prescribed format. That particular format is known as INV01. There is a prescribed format. Last bench, 2 girls. Generally, for playing Ludo or playing any game also, there will be a prescribed format. Na? But sometimes we can do that on the white page book also. We can play that generally. But for invoicing, that is not applicable. Ma. There will be a prescribed format for that. Okay, got my point? Oh, yes. The question, ma. Okay, fine. So regarding this, what is the point here? With respect to invoicing, there is a prescribed format for that. That prescribed format is INV01. So in order to upload the data in INV01, there will be some websites. What are those websites are called as? IRPs. What is meant by the word IRP? Invoice Registration Portal. All these invoices are reported to Invoice Registration Portal. That means the invoice details are uploaded on Invoice Registration Portal in the format INV01. Once the details are uploaded successfully, these IRPs will generate a unique invoice reference number IRN. And that IRN along with the QR code will be sent back to the seller, and now the seller will share it with the buyer. Invoice is valid only with the IRN. Without IRN, e-invoice is not valid. Without IRN, e-invoice is not valid. You cannot claim the ITC. That means if you want to claim the ITC based on e-invoicing, then that invoice must have the IRN number. What is meant by the word IRN? Invoice reference number. If invoice is having this IRN, then only this invoice is valid. Based on that invoice, we can claim the ITC. Sir, what about the invoice in case of RCM? That means under FCM, supplier will issue the invoice. Na? So that's why invoicing is applicable. What are the cases with respect to this RCM? In case of RCM also, invoicing is required. In case of FCM, invoice is required. But in case of RCM also, invoice is required, ma? Yes. When? Supplies under 9.3, invoicing is applicable. Supplies under 9.4, invoicing is not applicable. Why, sir? With respect to 9.3, invoicing is applicable. Why not 9.4? Why not 175 just like that? Why not 9.4? So why not 9.4 here, ma? Yes, ma, last bench fourth one. Why not 9.4? The reason is, ma, with respect to 9.3, what is the position, ma? With respect to 9.3, what is the position? Supplier is registered or unregistered. But generally under 9.3, if the supplier is registered, he will issue the invoice. But under 9.4, supplier is always unregistered. Under 9.4, the supplier is always unregistered. That's why with respect to 9.4, invoicing is not applicable. With respect to 9.3 RCM, invoicing concept is applicable. Okay, ma. So the next point is here, exemption from invoicing. What are the cases where invoice is not required even though your aggregate turnover is more than 5 crores? First one, says units. But for says developers, invoicing is applicable. Sir, what is the difference between says unit and says developer? In order generally where the says will be established in the backward areas, hilly areas. First, you need to develop the infrastructure there. The people who will develop the infrastructure there are known as says developers. Once says was developed, then the person who will start the company there is known as says unit. The exemption is applicable to says units, but not to the says developers. Second one, insurance, bank, financial institutions, NBFCs, because they will have huge number of transactions. That's why generally for them, invoicing is not applicable. GTA, transportation of the goods by road. Sometimes in the exam they may confuse you that GTA transportation by air, something like that. The exemption is there only to the GTA by road. Why, sir? Lorry business, most unorganized business. That's why invoicing will not be applicable. Next one, passenger transportation. Huge number of transactions will be there. Practically, it is not possible to upload the every data in the website. It will be a very time-consuming process. Next one, multiplex movie theaters. Huge number of transactions will be there. Next one, government departments, because government can make the law, can break the law. For them, no rule is applicable. That's why if those people are the government departments and local authorities, in those cases also invoicing concept will not be applicable. These are the exemptions from invoicing. Okay, ma. And the next one is the thing that can be asked. What is the next one? Dynamic QR code. Sir, what is this dynamic QR code? What is the difference between QR code and dynamic QR code, ma? If you scan the QR code, you need to enter the amount manually. But if you scan the dynamic QR code, along with amount it will display. Just like Apollo Medical Shop, I think DMart also. Once you scan, along with amount it will display that. Those things are known as dynamic QR code. Those things are known as dynamic QR codes. So now we will see with respect to dynamic QR code. Applicability. When this dynamic QR code is applicable? Mandatory for B2C supplies, because B2B is already covered under invoicing. Therefore, if at all it is a B2C supply, and the aggregate turnover is more than 500 crores in any financial year starting from 17-18, starting from any financial year 2017-18, if your aggregate turnover is more than 500 crores, then for them dynamic QR code will be applicable. Whereas with respect to invoicing, what is the eligibility criteria ma? 5 crores. With respect to dynamic QR code ma? 500 crores. What is the purpose of this dynamic QR code? It aims to encourage the digital payments. It aims to encourage the digital payments. And after that, non-applicability of this dynamic QR code. To whom this dynamic QR code concept is not applicable? First one, insurance, bank, financial institutions and NBFCs. Why ma? Huge number of transactions. GTA by road, unorganized business, passenger transportation, huge number of transactions, multiplex movie theaters, huge number of transactions. Fifth point, new one in dynamic QR code, supply of OIDR services. What is meant by OIDR service, ma'am? Online information database access or retrieval services. Example for that, OTT platforms and cloud services. Here also huge number of transactions will be there. How many subscribers of Amazon, Netflix, Hotstar will be there? In crores. So it is very difficult task to display them. Next one, exports. Because exports are already covered under invoicing. And supply to UIN. What is meant by this UIN? Unique Identification Number. To whom this is issued? Embassies, consulates, international organizations like UNESCO, UNICEF, WTO, WHO, IMF, Red Cross Society, like that. Service motive organizations. Instead of granting them a registration number, what is the number that will be allotted to them? UIN, Unique Identification Number. For those people, if you make any supply, then also dynamic QR code is not required. Next one, invoice to the recipient outside India. For supply of service, simply it is a export of service. It covers export of goods. So, invoice to the recipient outside India for supply of service for the which the amount to be received in forex. Simply export of service. In all these cases, what is not required, ma? A dynamic QR code is not required. These are the important points, ma, we need to remember, and another ones are there. That is, what is this, ma? Some specialized documentations we need to see in that. What is the first document here? Vouchers. What is the document, ma? Vouchers. See, with respect to vouchers, actually 3 types of vouchers are there. One is receipt voucher, second one is refund voucher, third one is payment voucher. Like the 3 points will be there. One is receipt voucher, second one is refund voucher. What is the third one? Payment voucher. Like the 3 vouchers will be there. When receipt voucher is issued, ma? Receipt voucher for advance payments. Whenever any advance payment is received, what is the document that will be issued, ma? Receipt voucher. And when the advance is refunded, what is the document that will be issued, ma? Refund voucher. When advance is received, receipt voucher will be issued. When that advance is refunded, the refund voucher will be issued. Next one, payment voucher. When payment voucher will be issued, ma? For reverse charge supplies. That means under reverse charge, whenever recipient is making payment to the supplier, as a evidence of making the payment, the document that is issued by the recipient is known as payment voucher. At the time of making payment by the recipient to the supplier, the document that is issued is known as payment voucher. These are the 3 types of vouchers. They can be asked in MCQs, not in general descriptive. Okay. Next one is DC. What is meant by the word DC? Delivery challan. When this particular DC delivery challan is issued, ma? When this particular DC is issued, so used when the quantity is not determinable at the time of removal. Simply the reasons other than supply. The reasons other than supply. That means whenever there is a physical movement of the goods, the physical movement reason can be supply or other than supply. If at all the physical movement reason is supply, what is the document that will be issued, ma? Tax invoice. But whereas the reason is other than supply, just like sales returns, stock transfer, principal is sending the goods to the job worker, in those cases it is not a supply, na? In all these cases, instead of tax invoice, what is the document that will be issued, ma? DC, a delivery challan. That is, and even see, applicable to the liquid gas supply, job work transactions, principal agent transactions, sale or return basis. In all these cases, there will be a physical movement of the goods. But what is the position, ma? With respect, the reason is other than supply. In those cases, what is the document we need to issue, ma? DC, delivery challan. And sir, if the goods are sent on a CKD or SKD form, CKD అంటే సీకేసిందని కదా జనాలు వెరైటీగా చూస్తున్నారు మళ్ళీ ఇక్కడ ఫైన్. సో CKD మీన్స్ కంప్లీట్ నాక్ డౌన్, SKD మీన్స్ సెమీ నాక్ డౌన్. ఓకే, I can study the inner feelings. Okay, fine. So here with respect to this one, CKD means complete knockdown condition, ma, whereas SKD means semi knockdown condition. What is CKD? That means my favorite movie, one of my favorite movies, 7/G Brundan Colony is there, ma. Okay, in that movie, the hero is having a special talent. That means not singing here. So heroine actually take him to the Honda company, I think. In that, what is the special talent that is there to that person? That means if at all that parts was given, by using that particular parts, he actually make a bike. That is the speciality of that fellow, na? That one comes under CKD. Complete knockdown. That means a part ka part separate ga unnappudu, but still you are able to assemble that. Then that form that was previously there was CKD. Complete knockdown. Second one is SKD, semi knockdown. Generally, if you purchase any treadmill or bicycle, they will does not send you in CKD because we are unable to fit it. They will send you in SKD, semi knockdown. The bicycle, okay, without wheels, but the frame is there with a handle, and what is that? Tires and this body, that means frame. These three will be sent separately. This one comes under this SKD, semi knockdown condition. That means simply the goods are sending in installments sometimes. In that case, what is the document we need to issue? That is the story. Goods sent on CKD or SKD or in lots or installments, what is the document we need to issue, ma? First one, supplier shall issue complete invoice before the dispatch of the goods. That means before dispatching the goods itself, invoice is needed to be generated, not dispatched. Invoice is needed to be generated before the first lot or first installment. After that, delivery challan for every consignment along with the Xerox copy of the original invoice. Suppose goods are sending in 4 installments. In that case, what is the position, ma? First 3 installments along with DC, delivery challan, Xerox copy of the original invoice must be sent. And at the time of the last installment, original copy of the invoice will be sent. This is the process. So 4 installments if the goods are actually sending. In that case, first 3 installments, DC plus Xerox copy of the invoice. Last installment, original invoice will be sent. So these are the points you should remember with respect to this one. Everything I covered now. Yes, everything I covered except e-waybill. It was there in some other chart. Okay, this is e-waybill. We will see now. So these are the important points, ma, from except that e-waybill concept. This is the e-waybill concept, what we are discussing now. The next concept we need to discuss is, ma, e-waybill. So what is the purpose of e-waybill, ma? E-waybill is an electronic document for the goods movement. Whenever there is a physical movement of the goods, whenever there is a physical movement of the goods, what is required, ma? E-way bill is required. Where it is generated on the GST portal, there is a separate website for that. In fact, on that particular website, prior to the goods movement, that means before commencement of physical movement of the goods, e-way bill is required to be generated. Sir, what is the form number for this e-way bill? GST EWB 01. What is the prescribed format for this, ma? GST EWB 01 is the prescribed format for this e-way bill. Okay. Next one. So, in which way e-way bill is generated? When e-way bill is required to be generated? When it is optional one? Now we will see them. What is the first one? Mandatory generation. When e-way bill is required to be generated mandatorily. When e-way bill is required to be generated mandatorily. When, ma? Whenever there is a physical movement of the goods plus consignment value is more than 50,000, e-way bill is compulsory. That means if two conditions are satisfied, e-way bill is compulsory. What are those two conditions? First one, there must be physical movement of the goods. Second one, involved goods consignment value is more than 50,000. If these two conditions are satisfied, then e-way bill is required. So just now you said that consignment value is more than 50,000. Is it inclusive of GST or exclusive of GST? Say 48,000 is the value, 3,000 is the GST. E-way bill is required or not required? 48,000 is the value, 3,000 is the GST amount on that. E-way bill is required or e-way bill is not required? Required. Inclusive of GST, we shall consider that value. That value is called consignment value. Therefore, 48 plus 3, 51, which is more than 50. In that case, e-way bill is required or not required, ma? Required. For computing this consignment value, inclusive of GST, we shall consider. Okay, next one. Other cases. Sir, if the consignment value is less than or equal to 50,000, then also e-way bill is required? Answer, it is optional. Law does not prohibit you from generating the e-way bill. Even though the consignment value is less than 50, it is optional for the person to generate it, but it is not mandatory. If the consignment value is more than 50, e-way bill is compulsory. If the consignment value is less than or equal to 50,000, e-way bill is optional. But even though the consignment value is less than or equal to 50, in two cases, e-way bill is compulsory. One is job work, second one is handicraft goods. One is job work, second one is handicraft goods. In these two cases, even though the consignment value is less than 50,000, but still e-way bill is required. What are the two cases, ma, where e-way bill is required even though consignment value is less than 50? One is job work, second one is handicraft goods. In these two cases, even though the consignment value is less than 50, e-way bill is required. That is other cases, ma'am. Okay, next one. Who can generate the e-way bill? Or who is required to generate the e-way bill? Who is required to generate the e-way bill, ma? Every registered person who is causing the goods movement is required to generate the e-way bill. Who is causing the physical movement means? Who is arranging the transport? If the seller is arranging the transport, seller is the person who is causing the movement of the goods. If the buyer is arranging the transport, buyer is the person who is causing the movement of the goods. The person who is arranging the transport is known as person causing the movement of the goods. If the seller is arranging the transport, Seller is the person who is causing the movement. If the buyer is arranging the transport, buyer is the person who is causing the movement of the goods. That person is required to generate the e-way bill. Second one. And generally, with respect to e-way bill, two parts will be there. Part A and Part B. Generally, what are the details that will be there in Part A? Anybody remembers? Invoice details. What are the details that will be there in Part A, ma? Invoice details. What are the details that will be there in Part B, ma? Vehicle details or transport details. Generally, who will fill Part A? Consignor or consignee will fill Part A, and Part B will be filled by the transporter. But if authorized by the consignor or consignee, even ECOs, courier agencies, transporters also can fill Part A. With respect to EWB 01, how many parts will be there, ma? Two parts will be there. One is Part A, second one is Part B. What are the details that will be there in Part A? Invoice details. What are the details that will be there in Part B? Vehicle details or transport details. Generally, who will fill Part A? Consignor or consignee? That means generally supplier is consignor, recipient is consignee. Okay. And once Part A was filled, a slip is generated and a temporary number will be there. Who will fill the Part B? Transporter or sometimes the supplier. If the supplier's own vehicle, then supplier will fill that. In the rest of the cases, transporter will fill that. And it contains the transport related details. Okay. So the next point is here. So just now we discussed that consignment value. So how to compute this consignment value? That is the point. Based on section 15, includes GST but excludes value of exempted supplies. That means, example, transaction value of 48,000 plus 18% GST, that is 8,650. In total, it will become 56,640, which is more than 50,000. In that case, it requires e-way bill. Consignment value means transaction value plus GST. Transaction value plus GST. That is the point. Okay. Next point. Some special circumstances with respect to e-way bill generation. My next point will be. So what are those special scenarios or circumstances in e-way bill? We will see that. One is with respect to rail transportation, air transportation or vessel. Vessel means ship. With respect to rail transport, railways, airways, waterways. Part B can be filled before or after the movement commencement. That means by road, when e-way bill is required to be generated, before commencement of physical movement. That is the first point we discussed in the e-way bill. Before physical movement commenced, e-way bill is required to be generated. If at all it was by road, by railways, by airways, by waterways, e-way bill can be generated before the physical movement or after the physical movement also. That is the point. Second one. Sir, if at all, and these goods will not be delivered until e-way bill is produced. Goods not to be delivered without e-way bill production. In which case, railways, airways, waterways. Because it can be generated even after the commencement of physical movement. That's why only after submission of that particular e-way bill, goods will be delivered to the consignee. Second one. Sir, if at all it is a own conveyance or a hired conveyance, in that case, who will fill Part B also? The registered person will fill both Part A and Part B. Why, If at all it is a own vehicle, who is the transporter? Ourselves. In those cases, part B details are also needed to be filled by this registered person, that is consignor or consignee. If at all it is either the own vehicle or a rented vehicle, then part A as well as part B details both are needed to be filled by the consignor or consignee. Next one. Sir, if the consignment value is more than 50,000, neither the consignor nor the consignee generated the e-way bill, then what is the position? Then it is the transporter responsibility to generate the e-way bill. Generate e-way bill if value exceeds 50,000 and not generated by consignor or consignee. Consignment value is more than 50,000. Neither the consignor nor the consignee has generated the e-way bill. Then it is the responsibility of the transporter to generate the e-way bill. These are the three special circumstances you should remember, ma. And yes, okay. Now we need to proceed to this side. What is the next point, ma? E-way bill validity period. What is this e-way bill validity, ma? What is the validity period of e-way bill? For regular cargo, 1 day up to 200 kilometers, additional day for every 200 kilometers or part thereof. For over-dimensional cargo, 1 day up to 20 kilometers, additional day for every 20 kilometers or part thereof. Simply, it is a normal cargo, that is for regular cargo. What is the time period, ma, for the e-way bill? For every 200 kilometers or part thereof, 1 day validity period will be given. For over-dimensional cargo, for every 20 kilometers or part thereof, 1 day validity period will be there. For example, Guntur to Vijayawada 30 kilometers distance was there. If at all it is a regular cargo, what is the validity period of e-way bill? 1 day, because up to 200 kilometers, 1 day, 30 kilometers, therefore 1 day. If at all it is a over-dimensional cargo, Guntur to Vijayawada, what is the validity period of e-way bill? 2 days. For every 20 kilometers or part thereof, 1 day validity period will be there. For the first 20, 1 day, another 10 kilometers also 1 day, 1 plus 1, 2 days validity period will be there. Sir, is it possible to extend the validity period of e-way bill? Yes, within 8 hours from the expiry time. If the commissioner feels it really necessary to extend that, on the application by the transporter, he can extend that. Okay. Sir, is it possible to cancel the e-way bill? Yes, definitely it is possible to cancel the e-way bill within 24 hours of its generation. But once the physical movement started, not possible if verified in transit. Already physical movement was commenced. In those cases, it is not possible to cancel the e-way bill. So before commencement of physical movement, we can cancel the e-way bill. Okay, what is the time period to cancel it? 24 hours. Next point. Compliance and enforcement. That means who can inspect this e-way bill? All these things comes under compliance and enforcement. So documentation required during transportation. That means what are the documents that must be with the transporter while he is transporting the goods? If at all it is a sale, invoice must be there. If at all it is a exempted supply or a composite supply, bill of supply must be there. If at all it is a sale or return basis, something like that, DC must be there. If at all it is an imported good, bill of entry must be there. Along with that, e-way bill, if the consignment value is more than 50. These are the documents that must be there with the transporter while transporting the goods. And commissioner is having every right to intercept the conveyance and verify the e-way bills. Who is having the authority to verify the e-way bills, ma? Commissioner or his authorized persons. Once it was verified, inspection and verification was done, within 24 hours, summary report must be uploaded on the website. Within 3 days, final report will be uploaded. Okay, ma? Once verification was done, department will publish a report, ma, on the GST website. This particular vehicle number with 420 was actually stopped by that so-and-so officer at so-and-so toll gate. So these are the things that was found, and these are the irregularities. Initially, summary report will be uploaded within 24 hours and final report will be uploaded within 3 days. Sir, if the above details or above documents are not maintained by the transporter, then what are the penalties for non-compliance? 10,000 rupees or tax amount involved, whichever is higher. Along with that, goods and conveyance can be seized. What are the penalties for not maintaining the documents, ma? 10,000 rupees or tax amount involved, whichever is higher, and goods and conveyance can also be seized. These are the points you should remember. Okay. And next one is, last but not the least, when the situations not requiring the e-way bill. That is when e-way bill is not required. Transportation of specified goods like LPG, kerosene, what is that? Packers and movers, and mail vans, and currency, transportation of currency, precious items, jewelry. For them, e-way bill is not required. And if at all the goods are either non-taxable or exempted, if at all it is a non-taxable good or exempted good, then there is no need to pay any GST. If there is no need to pay any GST, e-way bill is also not required. And goods are transported by the non-motorized vehicles like bullock cart, donkeys, elephants. Those are the cases. What is the position, ma? Where e-way bill is not required even though consignment value is more than 50. So these are the points, important points from the examination point of view with respect to e-way bill. The next chapter we need to see is payment. Okay, ma? So now we are going to start the next chapter, payment of tax. So with respect to payment of tax, I think there are 3 types of ledgers, ma. In the exam, okay, I will tell you later on once the chapter is over, which topics you need to keep focus. Only 2 topics. In electronic, in this payment of tax, only 2 topics will be asked and we'll have a discussion on them later on. With respect to payment of tax, how many ledgers are there, ma? 3. Electronic cash ledger, electronic credit ledger, and electronic liability register. First, we need to start from electronic cash ledger. So, with us, what are the components of electronic cash ledger, ma? How many major heads are there, ma, in this? How many major heads are there in this? 4 major heads will be there. 4 major heads, ma: IGST, CGST, SGST or UTGST, and cess. Every major head is again divided into 5 minor heads, ma: tax, interest, penalty, late fee, and others. In electronic cash ledger, 4 major heads will be there. That is IGST, CGST or SGST or UTGST, and cess. Every major head is again subdivided into 5 minor heads, ma: tax, interest, penalty, late fee, and others. Okay. Answer, the question is here, is it possible to shift the money from one major head to another major head? Yes. Is it possible to shift the money from one minor head to another minor head? Yes. Cross utilization of the funds across major or minor heads is possible. And what is the form number that is used to transfer those amounts? PMB 05. PMD05 is the challan that will be used for transferring the amount from one major head to another major head or from one minor head to another minor head. Okay. Next one is, sir, how to deposit the money in the electronic cash ledger? What are the various methods of deposit with respect to this electronic cash ledger? The first one is online mode, that is debit cards, credit cards, UPI, internet banking, IMPS. This can be termed as online modes. And offline mode will be NEFT, RTGS, over the counter, OTC. Why this NEFT and RTGS are there in offline? Without banker involvement, we cannot do that. They will be processed in batches. Without banker involvement, it will not be processed. So that's why NEFT and RTGS will come under offline mode. Along with that, OTC. What is meant by the word OTC? Over the counter. Over the counter means cash, check or DD. All the three will come under OTC over the counter. But to deposit the money over the counter in the cash ledger, so what is the limit that is there? The limit that is there will be 10,000 rupees per tax period. If at all you are paying tax on a monthly basis, then 10,000 rupees per month. If at all you are paying tax on a quarterly basis, 10,000 rupees per quarter. So after that, any amount is needed to be deposited. Other modes of deposits are there. By using other modes, you can deposit. So offline mode, NEFT or RTGS, over the counter, max 10,000 per tax period. But for this, there are few exceptions also. I think 3 exceptions are there. One is during the recovery proceedings, whatever the assets that are sold by the department, they can be deposited over the counter even though it is more than 10,000. Second one, any ad hoc deposits that are going to be made with the court or tribunal, in those cases also more than 10,000 rupees is allowed. Third one, GST to be paid by the government department itself. In these 3 cases, even though it is over the counter, what is the position? More than 10,000 rupees is allowed. What is the first one? During the recovery proceedings. What is meant by the word recovery proceedings? When the tax is not paid, then the department forcefully will collect the tax from you. What is the procedure they will follow? First, they will sell your business assets. First one, stock in trade. Not sufficient, business fixed assets will be sold. Then also it is not sufficient, then your personal assets. First, movable property, except wife and children. Wife is a permanent liability and children are future assets. Therefore, except wife and children, remaining movable property will be sold. Sir, after that, immovable property will be sold. Sir, it is also not sufficient, then definitely you will be put in a place where Lord Krishna was born. Where Lord Krishna was born? Jail, imprisonment. So this is a thing they will follow there. So in those cases, during the recovery proceedings, whatever the assets we sold, we will receive the amount in lakhs, sometimes crores also. Those amounts can be deposited over the counter even though it is more than 10,000. Second one, when you need to make any ad hoc means temporary deposits. You need to make any ad hoc means temporary deposits with the court or tribunal. You can deposit in OTC more than 10,000. Third one, GST to be paid by the one government department to another department. Take the example of AP Tourism, which is having resorts, let's say for Kartik Masam. In this particular thing, we can go to near Surlanka Beach. Near Bapatla, Surlanka Beach was there. So in those cases, there are resorts that belongs to AP Tourism. The people who is having the mood to see the moon in the full moonlight, for doing prayers here. Let me complete the sentence. In the middle of this sentence, gap was there, in fact. Right? So those are the cases, So AP2, let's seriously, you can stay in the resorts, ma. Definitely, but అరే సీరియస్గా వెళ్ళారు, అది ఓన్లీ మన వరకే అలౌడ్. అంటే ప్రస్తుతం ఫ్యామిలీతో వెళ్ళేంతగా డెవలప్ అవ్వలేదు ఆ ఏరియా. సో కాబట్టి మనం అంటే అక్కడ యాంటీ సోషల్ ఎలిమెంట్స్ ఉంటాయి, మనకన్నా పెద్ద యాంటీ సోషల్ ఎలిమెంట్ ఉండదు కాబట్టి పెద్దగా మనకి ఇబ్బంది కూడా ఉండదు, వచ్చిన వాళ్ళకి ఇబ్బందిగా. బట్ ఫ్యామిలీస్ వెళ్ళడానికి అయితే అది పెద్దగా సేఫ్ కాదు. మళ్ళీ నేను చెప్పాను కదా పొరపాటున ఏమన్నా వెళ్ళారు, ఓన్లీ జెంట్స్ వరకు వెళ్ళడానికి ప్రస్తుతానికి. ఫైన్. సో లెట్స్ కమ్ టు ద పాయింట్. So those AP tourism generally resorts are given on rental basis, na. Therefore in those cases what is the position, ma? Those rents related GST will be paid by AP tourism to the GST department. In these three cases, even though it is more than 10,000, is it allowed or not allowed, ma? Allowed. Next one. What is the challan that will be used to deposit the money in electronic cash ledger, ma? PMD 06. They can be asked in MCQs, ma. What is PMD 05? PMD 05. Transferring money from one major or minor head, one major head to another major head, one minor head to another minor head. For transferring the money, what is the challan that will be used, ma? PMD 05. For depositing the money in electronic cash ledger, what is the form that will be used, ma? PMD 06. Once this challan was generated, what is the validity period of that? 15 days. Within 15 days, by using that particular challan, you can deposit the money in electronic cash ledger. And the next one is, what are the key features of electronic cash ledger? This is nothing but a cash balance we will maintain with the GST department. So what is meant by electronic cash ledger, ma? It is the cash balance we will maintain with the GST department. And the amount created in electronic cash ledger can be used to pay any tax in relation to GST. It can be used to pay tax, it can be used to pay interest, penalty, late fee. Okay. Next one. Funds in one major or minor head cannot be used for other without transfer. For transferring between them, what is the chalana that will be used, ma? Distinct persons, PMD 09. That means first, in order to utilize the money, what is the point is, ma? We are having surplus balance in CGST. SGST we need to pay. Directly you cannot utilize from CGST surplus balance for SGST. First you need to transfer CGST surplus balance to SGST major head. Then you can utilize it for payment. Without transfer, direct set off is not possible. First you need to send the money from CGST major head to SGST major head. Then once the amount is transferred to the SGST major head, it can be used to set off. It can be used for payment. Unless it is transferred, direct CGST amount cannot be used for SGST. This is a point you should remember. Amma confuse avaddu. Ad ITC set off chesukodam not possible. CGST IDC cannot be used to pay SGST, and SGST IDC cannot be used to pay CGST. That is ITC. I am talking about cash ledger. Surplus cash in CGST can be used to pay SGST also. Both are different. Both are not the same. So that point is with respect to ITC. We are talking about electronic cash ledger balance. Okay. Next one. After this one, what is the next one, ma? Electronic credit ledger. What is meant by this electronic credit ledger, ma? First one is purpose. So with respect to purpose, it represents credit balance with GST department, that is the ITC balance. Electronic credit ledger will reflect your ITC balance. Form number PMD 02. Electronic credit ledger format is PMD 02. And this is important line. This ITC balance can be used to pay output tax liability only. What about the cash balance? Electronic cash ledger balance can be used to make any payment It may be used to pay tax, interest, penalty, late fee, others. Whatever the amount it is, definitely we can use it. We can use it. And what is with respect to the second case, ma'am? With respect to ITC, it can be used to pay. It can be used to pay output tax liability only. It can be used to pay output tax liability only. Cash balance can be used to make any payment. It can be used to pay tax, interest, penalty, late fee, any amount. But ITC balance can be used to pay tax only. That is the point. Next one. This is with respect to electronic credit ledger. See. And what are the restrictions on usage of ITC? That means in which cases ITC balance set off is not possible, cannot be used for the payment of tax under RCM. Whenever you are liable to pay the GST under RCM, always pay by cash only. Whenever you are liable to pay the GST under RCM, always pay by cash only. You cannot utilize your ITC balance. That is the line. And TDS, TCS, composition scheme, in all these cases, all these amounts are needed to be paid in cash. Whenever you are liable to pay the GST under RCM, when you are liable to pay the TDS, when you are liable to pay the TCS, when you are a composition dealer, you cannot utilize the ITC for that. Always you need to pay those amounts in cash. Next one. And in the same way, commissioner can impose the restrictions for fraudulent or ineligible ITC. That means this one is naam ke vaste, you can ignore it for the exam's purpose. Commissioner is having the right to block your ITC. That is the sentence. Next one, I think you remember Rule 86B na? What does Rule 86B? Limits the use to 99% of the output tax liability for certain taxpayer. Who are those certain taxpayers? In a particular month, their taxable surplus value is more than 50 lakhs. Next one, refund. Sir, is it possible to get the refund of ITC? Refund of excess ITC is allowed in specified cases which are there in CA final. It is not for you. Okay? And recredit is possible. Erroneous refunds, these refunds is out of your syllabus. For CMA Inter, sometimes it may be needed, but for CA Inter, it is not required. Okay. This is with respect to electronic credit ledger, ma. Now the next thing is, what is the next thing, ma? Electronic liability register. What is this electronic liability register? We will see. So this is what is the purpose of this electronic liability register? It records all the liabilities of the taxpayer. Whatever the GST amounts you need to pay, it may be tax, or it may be interest, or it may be penalty, or it may be late fee. Every payment that is needed to be made, all those liabilities will be recorded in this electronic liability register, and form number for that is PMD01. Okay, form numbers, if at all, they can be asked in MCQs, that's it. In descriptive pattern, it is not that much important. And self-assessed tax, and what is the order of discharge? With respect to electronic liability register, what is the order of discharge, ma? What is the order of discharge for this? First one, you need to use the electronic cash ledger balance or ITC balance first for previous tax period amounts. Let's say we are in the month of November. So with respect to November month, first, if at all any October month outstanding amounts are there, whatever the ITC balance, whatever the cash balance you are having, those amounts must be utilized first for which purpose, ma? The previous tax period, that is October month. If October month dues are fully cleared, then current month, November month tax amounts, we can use it for the current tax period. Sir, after the current tax period also still surplus is there. In that case, department demanded amounts under 73-74. This is order of discharge. First, we can utilize the ITC balance or cash balance for the previous tax period amounts. Still surplus cash or ITC balance is there. We can utilize them for current tax period amounts. Still surplus balance is there. Department demanded amounts under 73 or 74. For them, these cash balances and credit balances can be used. This is order of discharging electronic liability register. And next one is some important terms. Those ones are important only from MCQ's point of view. These ones. What is meant by the word CPIN? They can be asked in full forms. What is meant by the word CPIN? Common Portal Identification Number. When chalana is generated for the payment of tax, the chalana will have a number, 14-digit number. That 14-digit number is known as CPIN. That is Common Portal Identification Number. MCQs only it is relevant. Once this chalana is generated, what is the validity period? 15 days. And I think this is 3 now. It will be 17, I think. 17 now, this one. By mistake, it was, I just wrote there 18. So once the chalana was generated and the payment was done successfully, for those 14 digits, 3 digits bank code will be added. Total 17-digit number is called SIN. That is Challan Identification Number, CIN. CPIN means when chalana is generated, what is the number that is there? It is known as CPIN, Common Portal Identification Number. Once the payment is successful, for that CPIN, 3 digits bank code will be added. Now that 17 digits are known as CIN, that is Challan Identification Number. Once the payment is made, transaction ID will be given to you generally. That is known as BRN. What is meant by this BRN? Bank Reference Number. And FPB. What is meant by the word FPB? Focal Point Branch. It is nominated branch of authorized banks for tax collection. That means for collecting the GST, one branch of the bank will be authorized for that. For collecting the GST, entire bank, one branch is authorized for that. The branch which is authorized to collect the GST is known as focal point branch. The branch which is authorized to collect the tax is known as focal point branch. That is FPB. And with respect to NEFT, RTGS, IMPS, which is FPB focal point branch, RBI. These are the points that can be asked in MCQs from payment of tax chapter. So not for descriptive, but MCQs, these points are important. Okay. The next one and the last one is interest. With respect to interest, with respect to payment of tax, we need to pay the interest. So with respect to interest, we need to see the points here. So what is the rate of interest we need? When is generally when interest is needed to be paid? When there is delay in payment of the tax. Whenever there is delay in payment of the tax, what is the rate of interest you need to pay? 18% per annum. From the due date up to the actual date of payment. From the due date means after the due date until the amount is paid, you are required to pay the interest at the rate of 18% per annum. Okay. How to calculate that? Sir, applicable on the gross amount or on the net amount? What is meant by the word gross amount and what is meant by the word net amount? Yes, last bench, fifth one, girl side. What is meant by the word gross amount and what is meant by the word net amount, ma'am? So gross amount means before deducting the ITC, what is the liability that is there? So what is the position here? Ma? Inkoka 15 minutes అయితే బ్రేక్ ఇస్తాను అప్పుడు ఇంకో రెండోసారి తిందు కానీ ఒకసారి కాపు గ్రైండర్ ఫైన్. So the point is here, ma, gross liability or net liability. What is meant by the word gross liability, ma? before deducting the ITC, what is the liability that is there? It is known as gross liability. What is meant by the word net liability? After deducting the ITC, what is the amount that is there? It is known as net liability. For example, output tax payable 10,000, 2,500 is the ITC. In that case, what is the gross amount? 10,000. What is the net amount? 10,000 minus 2,500, 7,500 is the net amount. Sir, interest at the rate of 18% is needed to be paid on 10,000 gross amount or net amount 7,500. What is your answer? Generally, if written, that means return was filed belatedly, but before issue of show cause notice. Before issue of show cause notice, but return was filed. In those cases, on the net amount. Return was filed belatedly, but before issue of show cause notice. In those cases, on which amount we are liable to pay the interest, net amount. Before filing the return itself, show cause notice is issued. After that return was filed, in that case, on which amount you are required to pay the interest? Gross amount. Before issuing the show cause notice itself, return was filed, GSTR 3B was filed. In that case, you are required to pay the interest on gross amount. Net amount. But when the GSTR 3B was filed after the issue of show cause notice, then you are liable to pay the interest on gross amount. Before issue of show cause notice, GSTR 3B was filed, net amount. After the issue of show cause notice, GSTR 3B was filed, gross amount. When GSTR 3B is filed, before net, after gross. That is the point. Next one, special cases, that is with respect to interest on wrongly availed ITC. In case of not only delayed payment of tax, when there is a wrong availment of ITC is also there, you are required to pay the interest. But keep it in mind, you are liable to pay the interest only when the wrongly availed ITC was utilized. Until that wrongly availed ITC was utilized, you cannot claim the ITC. Sorry, you are not liable to pay any interest. So until that wrongly availed ITC was utilized, you are not required to pay any interest. So, and how to compute that? For that, this is the entire chart for this. So this is the last point. After that, we can take the break. Interest on delayed payment. What is the rate of interest? 18%. See, every person who is liable to pay but fails to pay his tax. Net basis. What is meant by the word net basis, Output tax minus ITC. When there is a delay in payment of tax due to delay in filing the return under 39, that is GSTR 3B, but show cause notice is not issued. In that case, net amount. Gross amount. When there is a delay in payment of tax, mistake in self-assessed in earlier return, and that is noticed either suo motu or demanded by PO, that means proper officer, under 73 or 74. Simply, what is the story? Show cause notice is issued. Before issue of show cause notice, GSTR 3B was filed, net amount. After issue of show cause notice, GSTR 3B was filed, gross amount. Next one. ITC wrongly availed and utilized. When the balance in electronic credit ledger falls below the ITC wrongly availed, to that extent, ITC was utilized, and on that amount, we are liable to pay the interest. That is called as date of utilization of ITC. Sir, what does this mean? Simply, let's write here. Where? Yes, we'll write here. Let's take the example. Wrongly availed ITC was 50,000. Wrongly availed ITC was 50,000. We need to check every month closing balance of ITC. For example, we have taken in the month of January 31st, the closing balance of ITC 90,000. Feb, the closing balance is 75,000. March, 65,000. April, 45,000. And May, 30,000. June, 0. Here, from which month we are liable to pay the interest? The month in which wrongly availed ITC was utilized, from that month onwards, we are liable to pay the interest. We are liable to pay the interest. Sir, when it is deemed that it was utilized, when the month closing balance of ITC falls below the wrongly availed ITC amount, in that month, it is deemed that ITC was wrongly utilized. January 31st, what is the closing balance? 90, less than 50? No, therefore no interest is required. Feb, less than 50 or more than 50? More than 50, no interest is required. March month, less than 50 or more than 50? More than, no interest is required to be paid. No utilization was done. With respect to April, more than 50, less than 50? Less than 50, how much? On the 5, it is deemed that 5,000 was wrongly utilized in the month of April. It is deemed that 5,000 was wrongly utilized in the month of April. On the 5,000, we are required to pay the interest from which month? April month. April month GSTR 3B, when it will be filed? April month GSTR 3B, May 20th. If you files before that particular date, if a return was not filed, then May 20th, up to the date of payment, you are required to pay the interest on 5,000. Okay, now come to the May month. More than 50 or less than 50? Less than 50. How much? 15. Because already you are paying on 5,000 now from May onwards. That means April month. Therefore, now what is the extra amount on which you are required to pay the interest? 15,000. 15,000. Because already on 5,000 we are paying cumulatively now. That's why on 15,000 only we are required to pay the interest. From which date onwards? May month means June 20th. June 20th until the amount is paid. Now come to the June month. 100% was utilized now. So what is the shortfall now? I think 20. 30. Now 30. 30 na? Sorry, ఇందాక తప్పు చెప్పాను 25 కదా. ఓకే ఇందా 15 అనుకున్నాను కదా అమ్మా. ఫస్ట్ 5,000 కన్నా ఎంత తగ్గింది ఇప్పుడు? ఇంకా టోటల్ తగ్గింది 30,000. 30,000 minus 5,000. We are required to pay the interest on 25,000, not 15. I just thought that it is 15. So it is now 25,000. Okay. Yadi ఏ month lo? May month lo. May month lo you are required to pay on 25,000. Here you are required to pay on 5,000. From June month related onwards, you are required to pay on another 20,000. This is the way how the computation will be done. But till now, these computations are not asked in CA final also. So you are not expected to do the computation, but sometimes, who knows, if they want to give the paper as a little bit tough, then it can be asked. Generally, these computations will not be asked. Okay. So this is the way how the computation will be done. That is the point I told you. When the balance in electronic credit ledger balance falls below the wrongly availed ITC, in that month, it is deemed that it was wrongly utilized. From which date you are required to pay the interest? See, due date of, what is this ma? Due date of this amount? Actual date of filing. That is the point I told you now. With respect to April month, what is the due date? May 20th. If the return was filed on May 16th, then from which date you are required to pay the interest? May 16th until the amount is paid. This is the only point you should remember, ma. In the in the payment of tax, only 2 points are going to be asked. One is electronic cash ledger. Second one is order of discharge of liability. And third one is interest computation, gross or net amount. These are the points. That's it. The next chapter we need to discuss is GST returns. So whereas with respect to GST returns, what is the first return we need to see? GSTR 1. What is GSTR 1 deals with? Statement of outward supplies. Statement of outward supplies. With respect to GSTR1, so what are the filing requirements and exceptions of this GSTR1? First question is here, who is required to file this GSTR1? Who is required to file this GSTR1 ma? Must be filed by every registered person including the CTP. Including the CTP, casual taxable person, including the CTP, every registered person is required to file the GSTR1. And who are the people that are not required to file the GSTR1? That means exceptions, ISD, NRTP, composition taxpayer, TDS deductor, TCS collectors, OIDR suppliers. These people are not required to file the GSTR1. Why these people are not required to file the GSTR1 ma? Because they are having the special returns ma. With respect to ISD, GSTR6, NRDP, GSTR5, composition taxpayer, GSTR4, TDS deductor, GSTR7, TCS collector, GSTR8, OIDR service provider, GSTR5A. They are already having the special returns. That's why these people are not required to file GSTR1. Okay, ma. So the next one is, sir, what is the due date for filing of this GSTR1? What is the due date, ma? Next month, 11th. If at all you are a QRMP participant, what is meant by QRMP scheme? Quarterly return, monthly payment scheme. Instead of 11th, it will be 13th. Let's say with respect to November month, what is the due date of GSTR1, ma? November, December 11th. With respect to March, April 11th. If at all you are following QRMP scheme, then what is the due date, ma, with respect to first quarter? What is the first quarter? April to June. In that case, what is the due date? July 13th. Second quarter. October 13th. Third quarter. Jan 13th. Last quarter. April 13th. Those are the due dates for filing GSTR 1. Next one. Sir, what are the contents and restrictions of this particular GSTR 1? What are the contents of GSTR 1, ma? Details of outward supplies to be furnished. That means GSTR 1 contains the sales data. Sir, in which way we need to submit that sales data, sir? As a consolidated data or as a separate one? It depends, ma. We need to check what are those supplies, whether they are B2B or B2C. If at all they are B2B supplies, B2B means business to business, always separate details are uploaded. If at all it is a B2B supply, always separate details are uploaded. If at all it is a B2C supply, we need to check whether it is intra or inter. If at all it is an intrastate supply, consolidated details will be uploaded. If at all it is an interstate supply, we need to check the value. Value less than or equal to 2.5 lakhs, consolidated details can be uploaded. And value is more than 2.5 lakhs, separate invoice-wise details are needed to be uploaded. This is with respect to GSTR 1, in which way the details are needed to be uploaded. If at all it is a B2B supply, then always separate invoice-wise details are needed to be uploaded. If at all it is a B2C supply, intrastate supplies, consolidated details will be uploaded, and interstate supplies depends upon value. Value less than or equal to 2.5 lakhs, consolidated invoice details can be uploaded. Value is more than 2.5 lakhs, separate invoice-wise details are required to be uploaded. Sir, scanned copy of the invoices are required to be uploaded or only invoice details are required to be uploaded? Only invoice details are required to be uploaded, ma, not the scanned copy of invoices. Okay. This is the point. And the restriction is here. This GSTR1 cannot be filed if the GSTR3B for the preceding month or tax period is not filed. Let's say with respect to November month, in order to file the GSTR1 for November month, October month GSTR3B must have been filed. If October month GSTR3B was filed, then only you are able to file the November month GSTR1. That is the point. Next one. Can only be filed after the end of the current tax period with exceptions for business closure or GST cancellation. That means, let's say for example, with respect to November month, November month GSTR1 can be filed from 1st December to December 11th, but it can't be filed on November 30th. In the same tax period, we cannot file. See, can only be filed after the end of current tax period. That means until November month completes, you cannot file the GSTR1. You can file the GSTR1 from December 1st to December 11th at any time. But you cannot file the GSTR1 with respect to November on November 30th itself. But for that, there are two exceptions. One is CTP, that means business closure means CTP generally. And second one is GST cancelled. That means RC cancelled person and CTP, these two people can file the GSTR1 in the same month itself. For example, on November 10th, CTP business was closed. In that case, he will not do any business now further. That's why on November 10th itself, he can file the GSTR1. In the same way, RC cancelled person, your RC was cancelled on November 12th. In that case, after November 12th, you are not a registered person anymore. Therefore, with up to November 12th, whatever the supplies you made, definitely for them, in the month of November itself, you can file the GSTR1. Except in those two cases. In rest of the cases, GSTR1 for the current period can be filed only after the closure of the current month, that is from next month 1st to 11th. Next one, errors and rectifications and late fee. Sir, what is the time period to rectify the mistakes that are there in GSTR1? What is the maximum time period to rectify the mistake? What is the maximum time period that is there to rectify the mistake 16/4 time limit. What is this 16/4 time limit Next financial year, November 30th. Or date of annual return, whichever is earlier. That is the story. So, what is the late fee for filing this GSTR1? The late fee will be based on the turnovers. So, we can say these are the late fees. So, these are the late fees in case of delayed payment. First one is series GSTR1, and I just gave you the entire, not only with respect to GSTR1, entire late fee was given here, GSTR1 and GSTR3B. What is outward supplies Nil. That means outward supplies in GSTR1 is 0 as well as GSTR3B is also 0. Sir, that means even though there are no outward supplies, but still we are required to file the return? Yes, that return is known as nil return. That return is known as nil return. If at all that nil return was filed belatedly, in that case, what is the late fee we need to pay? 10 rupees per day or 250, whichever is lower. If at all it is a nil return, nil GSTR1 or nil GSTR3B, what is the late fee you need to pay per day? 10 rupees or 250, whichever is lower. And with respect to GSTR9, what is this GSTR9 Annual return. With respect to annual return, how much late fee you need to pay depends upon your previous financial year turnover. If the aggregate turnover is up to 5 crores, what is the late fee, ma? Per day, 25 rupees or 0.02% of turnover, whichever is lower. If at all, your aggregate turnover is more than 5 crores but up to 20 crores, what is the late fee you need to pay, ma? Per day, 50 rupees or 0.02% of turnover, whichever is lower. If your aggregate turnover in the preceding financial year is more than 20 crores, per day 100 rupees or 0.25% of turnover, whichever is lower. These rates are only for CGST. Similar amounts will be there for SGST also. If we add them, the amount will double. That means it will become 50 or 0.04% of the turnover. And in the second case, it will become 100 or 0.04% of the turnover. With respect to third case, 200 or 0.50% of turnover, whichever is lower. Similar amount SGST will also be there, na? So based on that, we need to compute them. Okay. Sir, if at all, this GSTR 1 and 3B, there is a liability for that. In that case, what is the position, ma? In case there is a liability, what is the position? That means if at all it is not a nil return, if it is not a nil return, in that case, how much is the late fee will depends upon your previous year turnover. In the preceding financial year, if your aggregate turnover is up to 1.5 crore, per day 25 rupees or 1000, whichever is lower. If in the preceding financial year, your aggregate turnover is more than 1.5 but less than or equal to 5 crores, it will be per day 25 fixed or 2500, whichever is lower. If your aggregate turnover is more than 5 crores, then 25 rupees per day or 5000, whichever is lower. That means per day 25 rupees is constant. What is the thing that is changing there, ma'am? Maximum amounts. If your aggregate turnover is less than or equal to 1.5 crore, maximum 1000. Okay. If your aggregate turnover is more than 1.5, less than or equal to 5 crores, then 2500. If at all your aggregate turnover is more than 5 crores, it will be 5000. Only these are fixed, see. Only these amounts will change. This is with respect to GSTR 1 as well as GSTR 3B. And if it all is a composition taxable person, then what is the late fee? If it all is a composition taxable person, what is the late fee, ma? The total, it is a nil return. What is the return the composition supplier is required to file? GSTR 4. If it all it is a nil return, per day 10 or 250, whichever is lower. Normal return, per day 25 or 1000, whichever is lower. With respect to NRDP, GSTR 5, nil return, per day 10 rupees or 5000, whichever is lower. With respect to normal returns, per day 25 or 5000, whichever is lower. These are the late fees, ma. These late fees can be asked in the exam. From the returns chapter, the one and only, two topics that can be asked in the exam is, one is due dates for the returns and second one is late fee. These are the most important ones, ma. Once these topics are not asked, then there is a possibility that they can ask the theory like write about GSTR 1 outward supply, something like that. But 80 to 90% probability that in the returns chapter, only two things can be asked generally. One are the due dates of the returns. Second one is late fee. These are the things you need to keep focus more. Okay, ma? Can I move to the next point then? These are the late fee. I covered entire late fees there, ma. Not only with respect to GSTR 1, I covered every late fee there in that particular point. Next one. What is the next one? After GSTR 1. What is the next one, ma, we need to see? GSTR 2A. What is this GSTR 2A? Auto-populated inward supplies details. Auto-populated inward supplies details means once the supplier uploads the data in his GSTR1, it will be auto-populated in recipient account GSTR2A as purchases. Once the supplier uploads the data in his GSTR1 as the sales or outward supplies, that particular data will be auto-populated in recipient account as GSTR2A as purchases. Okay, see. It reflects the details furnished by the supplier in GSTR1 and invoice furnishing facility in case of QRMP scheme. Generally, the sellers will file GSTR1. If at all those people are there in QRMP scheme, what is the facility they will use to upload the invoices? IFF. IFF means invoice furnishing facility is used by QRMP scheme persons. Quarterly return, monthly payment scheme. Once the data is uploaded in GSTR1 and IFF facility, it will be auto-populated in recipient GSTR2A. This GSTR2A will serve as a basis for ITC clients. And GSTR2A is a dynamic document. GSTR2A is a dynamic document. Sir, what is meant by dynamic document, sir? It will be updated or changed on a real-time basis. If the supplier changes his GSTR1, immediately GSTR2A data also changes. That's why it is called as dynamic document. What is meant by this dynamic document, ma'am? When the supplier GSTR1 data changes in a real-time basis, recipient GSTR2A also changes. That is called dynamic document. Now, what is GSTR2B? It is a static monthly ITC statement. GSTR2B will reflect your ITC. It contains the details of ITC available to the recipient. It is a read-only document generated once in a month on November 14th. On 14th. This month, November 14th. So that means once it was generated on November 14th, once again it will be generated on December 14th. Meanwhile, how many number of times the data changes, GSTR2B will not change. Whereas GSTR2A, it is a dynamic document. When supplier changes the data, immediately 2A data also changes, but 2B changes only once in a month, that is on 14th. That's why GSTR2B ITC statement is a static document. Okay, ma'am. So it includes only the details that are furnished by the supplier up to the due date of filing. This line is important. If the examiner want to twist in this particular 2B something, this line is a fishy one. That means, with respect to GSTR1, what is the due date? Next month, 11th. When this statement is generated, GSTR2B, 14th. Up to 11, supplier filed 10 invoices. On 12 and 13, he filed another 5 invoices. Up to next month 11th, the supplier filed 10 invoices relating to this buyer. On 12th and 13th, before this ITC statement is generated, they filed another 5 invoices. Now my question is, on November 14th, how many invoices will be reflected in GSTR2B? How many invoices? 10 or 15? Only 10. Up to the due date, how many invoice details are uploaded by the supplier in his GSTR1? Only those are reflected in 14th statement. How many invoices are uploaded up to 11? 10. Therefore, this that month GSTR2B will reflect only 10 invoices. Even though it was filed before 14th, but after the due date, that is the line you need to keep focus. includes only the details furnished by the supplier up to the due date of filing. That means in our example, up to November 11th, whatever the details that are uploaded by the supplier, up to that extent only GSTR 2B will reflect. Once the due date of GSTR 1 is over, even though supplier uploads them or changes subsequently, it will not change. That's why it is a static document. What is the data that is there on due date, that is 11th, will be reflected in recipient GSTR 2B as ITC statement up on 14th. Okay, ma'am. Next one. This one is not notified yet. Section 38 is naam ke vaste ma. Those points was not notified. You can ignore it for your attempt for the time being. Okay, after this, any other points? No, here, this side. We'll move to this side now. What is the next one now? GSTR 3B. Return and payment. When this GSTR 3B is required to be filed, we need to see. Okay. So filing requirement and due dates regarding them to be filed by every registered person including the CTP with exceptions similar to GSTR 1. That means GSTR 3B is required to be filed by every registered person including the CTP except the people who are not required to file GSTR 1. Who are the people that are not required to file GSTR 1 ma'am? ISD, NRDP, what is that? Composition taxpayer, TDS deductor, DCS collector, OIDR service provider. These peoples are not required to file GSTR 1. Same people are not required to file GSTR 3B also. Next one. What is the due date of this GSTR 3B ma? Monthly filers next month 20th. If at all they are quarterly filers who opted for QRMP scheme, due date will be 22nd or 24th depending upon the state. This is the due date with respect to this GSTR 3B. And what is the next point ma? Quarterly return and monthly payment scheme. What is this quarterly return and monthly payment scheme? In this particular QRMP scheme, the return will be filed on a quarterly basis, but the payment will be done on a monthly basis. So what is the eligibility for this QRMP scheme? What is the eligibility? Registered person with aggregate turnover up to 5 crores in the preceding financial year is eligible for this QRMP scheme in the current year. Is eligible for this QRMP scheme in the current year. So who are eligible for this QRMP scheme ma? In the preceding financial year, if the aggregate turnover is less than or equal to 5 crores, then in the current year we are eligible for this QRMP scheme. Okay. What is the benefit these QRMP scheme holders will get? Allows quarterly filing of GSTR 1 and GSTR 3B with monthly tax payments. Even though tax is paid on a monthly basis, but GSTR 1 and GSTR 3B can be filed on a quarterly basis. Next one. IFF, invoice furnishing facility available for monthly invoice submission up to 50 lakhs aggregate amount with respect to B2B supplies. Sir, why invoice furnishing facility is there for QRMP scheme holders? What is the general rule with respect to ITC? If the supplier files GSTR 1, then only it will be reflected in GSTR 2A and 2B of the recipient. If at all you are following this QRMP scheme, when this GSTR 1 will be filed on a quarterly basis. For example, if you made the purchase in the month of April, then when this particular purchase will be reflected in GSTR 1 ma? April, May, June, July 13th. That means if you purchase any goods in the month of April, it will be filed on July 13th. In the month of July only you can claim the ITC. Almost you need to wait for 4 months. In that case, nobody is interested in buying the things from you. That's why the government come up with a solution to the QRMP scheme holders. For that sake, they created a concept of IFF, Invoice Furnishing Facility. By using this IFF, every month the supplier can upload the invoices, just like the GSTR one. But there is a value cap. What is the value cap that was there, ma? 50 lakhs. Up to 50 lakhs, we can upload the invoices in IFF, Invoice Furnishing Facility. Immediately they will be reflected in 2A and 2B of the recipient. Thereby, there is no delay in taking the ITC. Okay, ma? Every month, by using the Invoice Furnishing Facility, with respect to B2B supplies, the supplier can upload the details on the portal. That data will be auto-populated in recipient GSTR 2A and 2B without any delay. Next one. What are the options that are there in this QRMP schema? There are monthly payment options. Is two options. One is fixed sum method. Second one is self-assessment method. What is meant by this fixed sum method? Based on the previous month payments, auto-populated chalana will be there. And self-assessment method based on actual liability. This is the way how the tax is calculated in fixed sum method. Self-assessment method is normal method. Based on actual purchases and actual sales, it will be computed. But whereas with respect to this fixed sum method, on the notional value, you are liable to pay the taxes. See, for this fixed sum method, if the GSTR 3B was filed quarterly for the last quarter, let's say we just want to pay the tax in the month of July. With respect to July, what is the previous quarter? April to June. In April to June, you paid the tax on a quarterly basis. In that case, how much amount you paid in cash in that quarter? In that, 35% you need to pay on a monthly basis. In our example, with respect to April to June quarter, how much amount you paid in cash in the last quarter? CGST 100 and SGST 100. Now, how much amount you need to pay on a monthly basis now? With respect to what is the due dates, ma? With respect to, let's say, July 25th, next month 25th, ma. So, based on that, July 25th, August 25th. This one is based on the return, GSTR 3B. So, on July 25th, how much you need to pay? How much amount you paid in cash in the previous quarter, in that 35%. How much amount you paid in cash with respect to the previous quarter, ma? 100. 100 into 35%. How much amount you need to pay in cash now? CGST 35 and SGST 35 with respect to July month. And same amount is needed to be paid in the month of August also on August 25th, 35 CGST and 35 SGST. And the balance amount is needed to be paid on or before the due date of GSTR 3B. With respect to GSTR 3B, under QRMP scheme, what is the due date, ma? 22nd or 24th, based on the state. So, if at all previously you paid tax on a quarterly basis, how much you paid in cash in that 35%. Sir, ఒకవేళ previous గా మనం monthly pay చేసి ఉంటే, if at all we just paid the amount in the previous month, that means monthly మనం pay చేసి ఉంటే, then what is the amount we need to pay? How much amount you paid in cash in the last month? 100% of that amount is needed to be paid here. See, with respect to July 25th, CGST 50 and SGST 50. With respect to August, also 50 and 50. Balance is needed to be paid when the return is filed. Simple amma, fixed sum method lo in our Telugu మనం చెక్ చేసుకోవాల్సిన 2 points. ఒకటి, previous గా నువ్వు quarterly tax pay చేస్తున్నావా? ప్రీవియస్ క్వార్టర్లో నువ్వు ఎంత పే చేసావో క్యాష్లో, దానిలో 35% ఫస్ట్ 2 months కట్టు. ఇక థర్డ్ మంత్ రిటర్న్ ఫైల్ చేసేటప్పుడు బ్యాలెన్స్ కట్టి. సార్ ప్రీవియస్గా రిటర్న్ నువ్వు మంత్లీ ఫైల్ చేసి ఉంటావా, ప్రీవియస్ మంత్లో క్యాష్లో నువ్వు ఎంత కట్టావో చూసుకో, దానిలో 100% ఎవ్రీ మంత్ ఫస్ట్ 2 months కట్టు, బ్యాలెన్స్ రిటర్న్ ఫైల్ చేసినప్పుడు పే చేయి. దట్ ఈస్ ద స్టోరీ. You can check it once. Now, if you paid previously on a quarterly basis, in that case, what is the position, ma? How much amount you paid in cash in the previous quarter? In that 35%. In our example, in the previous quarter, how much you paid in cash, ma? 100 rupees. In that 35%, 35 rupees will be paid on a monthly basis. Whereas, if you paid the tax in the previous month on a monthly basis, then how much amount you paid in cash? 100% of that amount is needed to be paid on monthly basis. For example, with regarding this amount, how much amount you paid in cash in the last month? CGST 50 and SGST 50. Therefore, 100% on July 25th, CGST 50, and in the same August 25th, another 50 you need to pay. Any balance you need to pay on or before July 22nd or 24th of September, when the return is going to be filed. So this is the way how the things will be operated in fixed sum method. Okay, ma. This is the story what we have discussed right now. So once this point is over, what is the next one, ma? Special returns generally we are required to see now. With respect to this one, with respect to composition scheme, there is one statement that is required to be filed on a quarterly basis. What is the statement that is required to be filed on a quarterly basis, ma? CMP 08. And what is the due date for that? Quarter ending next month, 18th. With respect to first quarter, what is this QRMP scheme? Sorry, what is this due date for this? First quarter composition scheme due date. That means April, May, June. It will be July 18th. And what about the second quarter? October 18th. What about the third quarter? January 18th. What about the last quarter? April 18th is the due date for the CMP 08. And what is the return that is required to be filed by this composition scheme person? GSTR 4. What is the due date for that? Next financial year, April 30th. And with respect to GSTR 5, who is required to file this GSTR 5, ma? NRDP. And anybody remembers what is the due date of filing this GSTR 5? Next month, 13th, or from the date of RC expiry 7 days, whichever is earlier. Say for example, with respect to April 1st, with 15 days validity, RC was given to him. In that case, what is the due date of filing this GSTR 5? With respect to April month, next month, that is May 13th, or when RC will expire, April 15th. From that particular day, 7 days means April 22nd or May 13th, whichever is earlier. April 22nd is the due date of filing this GSTR 5. Next one, 5A for OADR service providers, I think it will be 20th. ISD next month 13th. TDS directors GSTR 7 next month 10th. GSTR 8 TCS next month 10th. GSTR 9 annual return. The due date will be next financial year December 31st, and late fee already we discussed. So these are the important points, ma, with respect to returns chapter. So only the major focus will be the return due dates and late fee. The next topic we need to see is place of supply. So I think 8, it will not go beyond, I think so at least. So, place of supply is the next topic. With respect to place of supply, actually, with respect to place of supply, there are 4 sections: 10, 11, 12, 13. 10 deals with domestic supply of the goods, 11 deals with international supply of the goods, 12 deals with domestic supply of service, 13 deals with international supply of services. But in our syllabus, only domestic ones are there. That means only 10 and 12. Which are there, ma? Only 10 and 12. So, regarding this, so what is the section we need to see now? Section 10. Place of supply of the goods in domestic transactions. Okay, ma. So, what is the first point we need to discuss now? Supply involving physical movement of the goods. Anybody remembers what is this section number? 10(1)(a). What does 10(1)(a) deals with, ma? Whenever there is a physical movement of the goods involved. Whenever there is a physical movement of the goods involved, in that case, what is the place of supply, ma? Place of supply is the location where the movement terminates for the delivery. Simply where the goods are delivered, that place will be the POS. Simply take the example of door delivery facility. So with respect to door delivery facility, what is the place of supply, ma? Door? Akka? Chunchilika Mohandana. Okay. So, with respect to this point, ma, supply involves physical movement of the goods. Then what is the position, ma? Where the transit ends. What is the destination? That place will be the POS. For example, goods are moving from Guntur to Goa. In that case, no, ma, Kartik Mas, only Samudra Snanam. Fine. So regarding this year, ma, Guntur to Goa, what is the destination there? Goa will be the destination. Where the transit ends, that place will be the POS. In our example, where the transit ends, ma? Goa will be the destination. Okay, fine. It applies even in case of ex-factory delivery cases also. What is meant by ex-factory delivery? Buyer will go to the seller place and purchase the goods, and the goods are transported from this Guntur to Goa. So it means the person from Goa just came to Guntur. He's having a restaurant in Goa, ma. Actually, Guntur Mirchi is famous, na? That's why he just came here and purchased those goods. The Guntur Mirchi purchased. It is called ex-factory. He purchased them at Guntur Mirchi Art. That means he come to us and making a purchase. It will comes under ex-factory. In those cases also, physical movement was involved or not? Yes. Where the transit ends now, Goa, that place will be the POS, and it is a interstate supply. Because LOS is there in Guntur, POS is there in Goa, LOS in one state and POS in another state. It is an interstate supply, and what is needed to be paid? IGST. Next one. Here the focus is on the movement of the goods rather than transfer of property. అంటే ఎక్కడ ఓనర్షిప్ ట్రాన్స్ఫర్ అయింది అనే దాన్ని బట్టి కాదు. ఓన్లీ బేస్డ్ ఆన్ ఫిజికల్ మూమెంట్ we will decide whether that means intrastate supply or interstate supply. So as per 10(1)(a), what is the place of supply, ma? Where the transit ends or where the goods are delivered, that place will be the POS. This is the first point. And second one, what is the second one, ma'am? Bill to ship to model. This is 10(1)(b). As per 10(1)(b), what is meant by bill to ship to model? Here order will be given by one person, but whereas goods are going to be delivered to another person. This model is known as bill to ship to model. In this bill to ship to model, if the problem is given, always there will be two supplies. If any problem is given on bill to ship to model, in this model, always there will be two supplies. One is between, let's say, A actually has put an order on B to supply the goods to C. Because actually A and B are going to enter into a contract, some 100 kgs of some units. A actually want to purchase it from B. At the same time, A received an order from C for the same 100 kgs. A had a thought that once he received the goods, again he is sending the goods to C. It is a time consuming process. Therefore, instead of that, Mr. A asked Mr. B to supply the goods directly to C. This model is known as bill to ship to model. Let's say this fellow is there in AP, this fellow is there in Telangana, this fellow is there in Tamil Nadu. Okay, in this case, so Mr. A is there in AP and Mr. B is there in Telangana, Mr. C is there in Tamil Nadu. Here, how many supplies are there in this particular example? Two supplies are there. What are they, ma'am? One is between B to A. B is the seller, A is the buyer. A ordered some goods to be delivered. Okay. Who is the buyer there? Who is the buyer there, ma? Mr. A. So B to A is one supply. What is the second supply, ma? A to C. A is indirectly delivering it to C. In this bill to ship to model, A ordered some goods on B. Now, before receiving the goods from B, A received an order from C. In those cases, Mr. A asked Mr. B to deliver the goods to Mr. C. In this case, how many supplies are there, ma? Two supplies. One is between B to A and second one is between A to C. So with respect to first case, it will comes under pen 1B, because even though the goods are received by C, who is deemed to be receiving those goods, ma? Mr. A. Where Mr. A resides? AP. Therefore, AP will be the place of supply. And where is Mr. B place? Telangana. So Telangana to AP, it is the interstate supply. IGST is needed to be paid. Now what is the second transaction? It will be between A to C. Here A to C, there is a physical movement of the goods. Even though the physical movement reason is not A, but the goods are moving towards C. In that case, where the physical movement ends, C destination. Where is the destination? Tamil Nadu is the POS. And where is the LOS? AP is the LOS. So LOS is there in AP. POS is there in Tamil Nadu. In that case, it is also interstate supply. And what is needed to be paid, ma? IGST is needed to be paid. See, it involves two supplies between supplier to the third person. In our example, who is the supplier? Mr. B. Who is the third person? Mr. A. Third person is Mr. A. Who is the recipient? Mr. C. Okay. Involves two supplies. Supplier to the third person and third person to the recipient. Supplier to the third person means Mr. B to Mr. A. Third person to the recipient means Mr. A to Mr. C. POS for the first transaction is principal place of business of third person. Who is the third person here? Mr. A. What is the A location in our example? AP. AP will be the POS for the first transaction. For the second transaction is governed by other POS rules. That is, pen 1A. Whenever there is a physical movement of the goods, the POS will be the place where the physical movement ends. Where the physical movement ends in our second example, ma? Tamil Nadu. Therefore, Tamil Nadu will be the POS. That is the point. This is 10.1b. Next one is 10.1c. Supply without physical movement of the goods. Place of supply is the location of the goods at the time of delivery. Generally, it applies to the scenarios like sale of the assets in finance lease or sale or return basis. For example, what is the example we discussed for 10-1 CMA? Say for example, let us assume that this Balaji campus was taken on rent by management from me. So when this building was given on rent, along with generator, it was given on rent. Later on, this Balaji campus was purchased from me by the management. When the building is sold, along with generator, it will be sold. Na? Is there any physical movement of the generator at the time of transaction? No. The generator was already at Balaji campus. In that case, supply without movement of the goods, it will be. There is no physical movement. In that case, what is the place of supply? Location of the goods. Where is the location of the generator? Balaji campus. Now, what is the place of supply? Balaji campus will be the place of supply. Next one. Any installation or assembly is required at site, then place of supply will be the place of installation. Say for example, Masterminds purchased 5 ACs, invoices in the name of main campus, but the ACs are installed in Balaji campus. Invoice is in the name of main campus, but they are installed at Balaji campus. Now what is the place of supply? Is it any installation required for AC? Yes. Where they are installed, ma? Balaji campus. Balaji campus will be the place of supply. Next one. If the goods are supplied on the board of a conveyance, then what is the position? POS, that means, let's say, coffee vendor selling the coffee, and in the same way, Vande Bharat train, some snacks and all these things are served to you now, those food items. What is the place of supply with respect to goods? Not where the coffee is sold, not where the coffee is consumed, the place where the coffee can is loaded onto the train. That place will be the place of supply. What is the place of supply? Coffee word ammina place kaadu, manam tagina place kaadu. Coffee can ni train lo load chestaruga. ఏ స్టేషన్లో అయితే కాఫీ క్యాన్ లోడ్ చేస్తారో ద ప్లేస్ విల్ బి ద POS. POS is the location where the goods are taken on board. When that coffee can was loaded onto the train, in which station, that station will be the place of supply. Same rule is applicable to vessels, aircrafts, trains, buses, whatever the means you are traveling. Definitely the answer remains the same. When the goods are taken on board, that means when the goods are loaded onto the train, those places. Same points will be applicable to food packets supplied in flight. With respect to food packets, if where they are loaded onto that particular flight, that place will be the POS. Okay, next one. What about this is 10-1 EMA. 10-1E is there. And next one is, sir, what about the services? Because these two are important. We are talking about the goods. Services on the board of conveyance, it will be there under section 12, but I write it here. What about the services on the board of the conveyance? What is the place of supply? Location of the first scheduled point of departure of that conveyance for the journey. What is the difference between these 2 points, ma? One is supply of the goods on the board of a conveyance. Second one is supply of service on the board of a conveyance. With respect, say for example, let us assume that it is first example is with respect to a train, normal train where we are traveling. In that case, coffee can, where it was loaded, it is a good. That place will be the POS. With respect to flight, food packets, where they are loaded, that place will be the POS. What about the flight? Air hostess services or movie on demand services on the flight? And with respect to that, some blankets or some other facilities that are provided by the airlines to the passengers. Or the services or not? Yes. With respect to service, what is the place of supply? For example, బాగా చలేస్తుంది బ్లాంకెట్ కప్పారు అనుకోండి మీరు ఇప్పుడు. సో బ్లాంకెట్ కప్పిన place of supply అవుతుందా? So what is the place of supply then? Journey starting point. Let's say, for example, Guntur to Singapore, the flight is going. In that case, what is the position, ma? The journey starting point. Where is the journey starting point, ma? Guntur. That place will be the POS. Any movie on demand, whatever the other amenities or facilities that are provided with respect to goods when they are loaded. With respect to services, journey starting point. With respect to goods, when they are loaded, in which station they are loaded, that place will be the POS. With respect to services, journey starting point will be the POS. That is the difference, ma. That's why andukane rendu pakka rasan. One is with respect to goods, second one is with respect to services. There ends section 10. Now we need to move to place of supply of services. With respect to this one, this is with respect to services, ma. With respect to services, what is the position, ma? This is 12.2. What does 12.2 deals with? A residual method or residual rule or residual section. When all other rules fails, all other sections are not applicable. In those cases, its POS can be found out by 12.2. Because in section 12, there are almost 14 subsections. From 12.3 to 12.14, almost some 11 or 12 subsections are there. If place of supply cannot be determined, as per 12.3 to 12.14, in those cases, as per 12.2, its time of supply, its place of supply will be decided. What is 12.2? This POS rules are. We need to see whether it is B2B or B2C. What is meant by B2B? Business to business. What is meant by B2C? Business to customer. Whatever the place of supply rules, please remember this sentence. If at all it is a B2B supply, always registered place of recipient will be the place of supply. If it not only with respect to 12.2, whenever B2B supplies happens in the place of supply sections, if at all it is a B2B supply, except in few cases, in all the remaining cases, that registered place of recipient will be the place of supply. Registered place of recipient will be the place of supply. Okay, ma. If at all it is a B2B supply, then what is the position, ma? That registered place of the recipient will be the place of supply. Sir, if at all it is a B2C supply, sir, then what is the position? If address on record is available, that means any Aadhaar proof, address proof was submitted by the recipient, that address will be the place of supply. Sir, address proof is not submitted by the recipient, sir, then location of the supplier will be the POS. Let's say any service was, we just went to any restaurant or any hotel to stay there, and they asked for address proof. If at all Aadhaar or address proof is available, we'll submit it. Then that address proof will be the place of supply. If let's say we just went to Hyderabad, so in that particular Hyderabad, for example, no, I just went to Vizag. I like Vizag. So I just went to Vizag. Let's say, for example, in Vizag, actually I stayed at Novotel, which is opposite to RK Beach. In that case, what is the position? If they asked for me the address proof, I just gave him my Aadhaar. In that case, what is the LOS? Vizag. What is the POS? Guntur. Because in my Aadhaar, Guntur address was there. And they asked for me my address proof. But I said that, how much you want without address? Actually, he told me, okay, if you give me some 10,000, definitely I can manage. I just gave him that 10,000 and stayed in that particular room. In that case, any address proof is available? No. In that case, what is the POS? Vizag. LOS Vizag as well as POS also Vizag. In that case, it is intrastate supply. If address proof is submitted, address on record is available, That place will be the POS. If address on record is not available, then location of supplier will be the POS. This is 12.2 residual 1. Next one. Immovable property related, it can be 12.3. Major focus will be in this. With respect to immovable property related, the place of supply will be the place, that is location of immovable property. They may be the services of architect services, interior decorator services, surveyors, engineers, real estate agents. The people who deal with that particular immovable property directly. Those people's place of supply will be decided as per 12.3. If the service providing person and the immovable property will have a direct nexus, then it will be called as 12.3 case. There is no direct nexus, it is an indirect one. In that case, it comes under 12.2. Best example, bank is giving loan for the construction of immovable property. Bank does not have any direct relation with the immovable property there. It is having indirect relation. In those cases, 12.3 cannot be applied. Any other specific sections are there, that will be covered. No specific section is there, it will be covered under 12.2. So, the services which are directly linked to the immovable property are covered under 12.3. In those cases, what is the place of supply? Location of immovable property will be the place of supply. Sir, if the immovable property was located outside India, in that case, what is the place of supply? Location of recipient will be the place of supply. If immovable property was situated outside India, in that case, what is the position, ma'am? Location of recipient. Say, for example, Mukesh Ambani had a small house, that means Antilla, which is there in, I think, Navi Mumbai. Navi Mumbai is having a small house that is called as Antilla. And the construction cost is already, just 7,500 crores. Its market value is just 15,000 crores. For the construction of that particular house, Mukesh Ambani may have received some architect services, interior designer services. Where is the location of immovable property? Within India or outside India? Within India. In that case, what is the POS? Navi Mumbai will be the POS. But recently, Mukesh Ambani had actually got married, Anand Ambani. It's not Mukesh Ambani, it's Anand Ambani, recently got married. Okay, actually, sorry Neetu ma'am. Fine. So, by mistake, I just told those things. Okay. So, Anand Ambani recently got married, Nama. So, their family is expanding. And the small house is actually not suitable for them. That's why, seriously, Mukesh Ambani is constructing a new house, purchasing an English queen. I think Elizabeth is there now. Those palace was purchased by Mukesh Ambani along with the golf court, and he is constructing a new house there. So that's why, that is issue. So now, what is the location of immovable property? UK, England. In that case, where is immovable property location? Outside India. What is the place of supply? Location of recipient, that is location of Mukesh Ambani will be the place of supply. That is the point. Next one. Performance based services, with respect to restaurant, catering, personal grooming, fitness, beauty treatment, health services, where the service is actually performed, that place will be the POS. Take the example of, let's say, beauty treatment, say catering. Let's say, for example, nowadays destination marriages are very much popular. That's why my Sisha actually wants to do the destination marriage in the Nallamala forest. That is also one kind of new thing, innovativeness. Okay. So I just want to innovate those things, and in Nallamala forest actually he just want to have the dinner. But in fact, he can be a dinner also to the lions and tigers which are there. But at that particular place, this fellow gave the catering order to somebody else. And those people are now supplying the food in the Nallamala forest to the people who are there. It can be their last meal also. So the question is here, this particular service, what is the place of supply? Even though, what is your native place? Where are you from? Odisha. Wow, okay. So he's from Odisha. Even though the location of recipient is Odisha, but where that particular service was performed, Nalamala Forest, that place will be the POS. Where it is not the location of the recipient we will consider. Where the service is actually performed, that place will be the POS. Next one is training and performance appraisal. With respect to training and performance appraisal, we need to check whether it is B2B or B2C. Training services means, take the example of Infosys. Infosys wants to give training to its employees on recent GST developments. That's why it approached Tally Academy to give the training for them. Now Tally Academy is providing services to Infosys employees. Is it B2B or B2C? B2B. Then what is the place of supply? If at all it is B2B, registered place of Infosys will be the POS. Registered place of Infosys will be the POS. And one of the Infosys employee in his personal capacity wants to get some training from Tally Academy. In that case, what is the position, ma? In that case, what is the position, ma? Definitely, yes, ma. It comes under B2B or B2C, ma? B2C. Then where the service is actually performed, that place will be the POS. Where the service is actually performed, ma? The Tally Academy. That place will be the POS. And some special cases here regarding them. Here we need to see the next service is transportation of the goods. With respect to transportation of the goods, again we need to check whether it is B2B or B2C. If at all it is B2B, then what is the position, ma? Registered place of recipient will be the place of supply. B2C, where the goods are handed over for transportation to the courier, that place will be the place of supply. Take the example of Masterminds. Masterminds is giving online coaching. The books will be couriered to the student. Let us assume that Masterminds is making those things through DTDC. Is it a B2B or a B2C supply? B2B. Supplier is DTDC, recipient is In that case, it is a B2B supply. If at all it is a B2B supply, then what is the place of supply, ma? Registered place of that is Gayatri Nilayam, main campus. Main campus will be the place of supply. Sir, we are sending one book to our friend in personal capacity. One of our students actually sending the book to his friend through DTDC. In that case, is it B2B or B2C? B2C. Then where you handed over it for courier or transportation, that place will be the POS. Next one, passenger transportation. Again, we need to check whether it is B2B or B2C, ma. If at all it is B2B, then register place of recipient. B2C, continuous journey starting point. Let's say asked me to go to Hyderabad and teach GST because one of the faculty's health was not good. Let's take example like that. They just asked me to go to Hyderabad. Ticket was booked in the name of Is it B2B or B2C? B2B. Then what is the place of supply? Main campus will be the place of supply. Asked me to book the ticket in my name. Later on they reimbursed me. In that case, the ticket was in my personal name. Is it B2B or B2C? B2C. In that case, what is the place of supply? Journey starting point, Guntur to Hyderabad. What is the journey starting point? Guntur. Guntur will be the place of supply. With respect to telecommunication services, fixed line, leased circuits, location of installation. Best example for that is Tata Sky. Tata Sky, where the dish antenna was installed, that place will be the POS. And postpaid, mobile postpaid connection, what is the place of supply? Address on record will be there, na? Mobile postpaid, they will send every month bill, na? what is the address that is there on the bill, that place will be the place of supply. Sir, if it all is a prepaid, then vouchers are there. Prepaid. In olden days, vouchers are there now. You will purchase it and you will actually scratch them and tikku you will enter those things, and again one message will come, successfully recharged. Then you will be very proud of yourself. I have done something. Those were the days. In those cases, what is the position, ma? Where the recharge voucher is sold, that place will be the POS. Nowadays, PhonePe, Paytm, recharges are there. Now, what is the POS regarding them? PhonePe or Paytm recharge? Location of, at the time of taking the SIM, some address proof will be submitted now, that place. Otherwise, location of the supplier will be the POS. What about banking and financial services, ma? If the location of the recipient, that means address is available in the supplier record, recipient location will be the place of supply. Otherwise, location of the supplier will be the place of supply. That means, okay, ma, with respect to bank and financial services, let's take the example that I'm having the Axis Bank account in Guntur. Let us assume that I just went to Hyderabad on Saturday night to visit the temples which are there in Hyderabad. In order to visit one temple, there is a VIP darshan break. For that, you need to pay 20,000. Then you can go for that. But in order to go to that particular temple VIP darshan, I withdraw the money from the ICICI Bank ATM, which is there near to that in Amirpet, as far as I remember. In that case, I withdraw the money from ICICI Bank ATM, but my card is Axis Bank. Where I withdraw the money? ICICI. ICICI will have the record of me. Any address proof or something will be there with ICICI? No. In that case, what is the POS? Location of supplier, where that ATM was situated, that is Amirpet, will be the place of supply. But I withdraw the money from Axis Bank ATM in Hyderabad, then what is the place of supply? Guntur. Why, ma? Axis Bank will have my data, na? That's why. With respect to banks, if the address on record is available, that recipient location will be the place of supply. Address on record is not available, then the location of the supplier will be the place of supply. Same point is applicable to insurance also. B2B, registered place. B2C, location of recipient in supplier's records. Let's say Masterminds has taken an insurance policy on me because I am saying marathons. And next week also CMA final marathon was there. It's going to be conducted. So that's why I thought that insurance is mandatory. So if MM has taken insurance policy on me, it comes under B2B. It comes under B2B. If at all it is a B2B supply, then MM address will be the place of supply. Now, MM is actually not taking care of that. Now I had a fear that after the next marathon, it will be something different for me. So I took insurance on myself. It comes under B2C then. In that case, while taking the policy, some address proof will be submitted. Now, that place will be the POS. These are the major points you should remember regarding this. This one is not. No, ma, this one is not for you. It is for the rankers actually. And rankers can read it. That means advertisement services, ma. That means I told you with regarding these things in the regular batch a little bit. Let's say government has given advertisement in a newspaper. Then what is the place of supply? If Modi ji gives any advertisement throughout the country, it will be there, na? In that case, let's say you just gave that in DC, Deccan Chronicle. Then in which ratio we need to divide that? How many number of subscribers are there in that state? In that ratio, let's say in Telangana, some 1 lakh subscribers, in UP, some 2 lakh subscribers will be, in that ratio, we need to divide that. So practically, without giving the data, nobody, not only the student, even after qualifying CA also, you cannot do these things. So that's why the data will be given in the problem. Therefore, there is no need to read it, even though it is there in the material. Even rankers also not required, but they will have some self-satisfaction. For that sake, you need to read it, ma. Rest of the cases, the people can ignore it. It is a place of supply topic with respect to this. The next thing is we need to see TDS, ma. Okay, ma. So the next concept is TDS. Section 51. Okay, ma'am. To whom this particular TDS is applicable, ma'am? Applicability of TDS is the thing first we need to see, ma'am. Sorry, before fine. So the first point is here. What is the first point here, ma'am? Who are the persons that are liable for TDS deduction, or who are required to deduct the TDS? Actually, simply, who are the persons that are required to deduct the TDS, ma'am? 6 category of the peoples will be there, ma. The story will be in simple government and government related organizations. You can observe that these are the persons: central government, state government, local authority, government agencies, boards that are established by the government, where the government is having more than or equal to 51% of share capital, and societies that are established by the government, PSUs. If these people are the recipients, then you are required to deduct the TDS. If these people are the recipients, simply government and government related organizations and PSUs are the recipients, then they are required to deduct the TDS. Okay. Next question. Sir, when this TDS is applicable? Okay, if the recipient is those notified persons, then if the recipient is that notified persons, automatically TDS is applicable? Answer is no. Then we need to check what is the contract value, ma. We need to check what are the contract values there. Yes, ma. So regarding this, so the first question is here, TDS is applicable to goods or services also? TDS is applicable to goods or services, ma. TDS is applicable to both goods and services. If the recipient is a notified recipient, then whether it is a supply of the good or a supply of service, in both cases it is applicable. When, sir, if the contract value is more than 2.5 lakhs, then this TDS provisions will be applicable. If the recipient is a notified recipient and the contract value is more than 2.5 lakhs, in those cases, what will be applicable, ma'am? TDS provisions will be applicable. See, the total value of supplies under the contract must exceed 2.5 lakhs. Then TDS provisions will be applicable. It applies regardless of the supplier type except unregistered supplier. That means unless the supplier is an unregistered supplier, it does not care about who is the supplier. Supplier can be individual, partnership firm, company, AOP, whosoever is the supplier, it does not matter. If the recipient is a notified recipient and the contract value is more than 2.5 lakhs, then the TDS provisions are applicable unless the supplier is unregistered. If the supplier is unregistered, he is not required to pay any GST. Na? That's why there is no need to apply the TDS provisions. Next one. Exception to TDS applicability. That means in these cases, the TDS provisions are not applicable. First one, supply between PSUs. Any example for PSU? Any example for PSUs, ma'am? Very good. ONGC, NTPC, Power Grid, all these are the Coal India, all these are the Singareni is a PSU. Okay, I don't know exactly, but okay, if at all it was, it can also be. So these NTPCs, Coal India, all these things comes under PSUs. Any transaction that happens between two PSUs, then TDS provisions are not applicable. Next one, transaction between two tax deductors. That means one TDS deductor to another TDS deductor, simply between one government organization to another government organization, then also the TDS provisions are not applicable. Supplies by unregistered suppliers. Because there is no GST applicable, therefore TDS is also not applicable. Supplies under reverse charge mechanism. Why for this TDS provisions are not applicable? Under reverse charge mechanism, 100% of the tax must be paid by the recipient. Therefore, there is no logic in applying TDS 2%. Recipient is when RCM is applicable, recipient is liable to pay the GST 100%. When recipient is liable to pay the GST 100%, there is no logic in applying the TDS at the rate of 2%. TDS rate is 2%. 1% CGST and 1% SGST. When RCM is applicable, 100% of the tax is paid by the recipient. In those cases, what is the position? There is no use in applying the TDS provisions. The next point is, what are the TDS rates? Just now I told you, if at all it is intrastate supply, CGST 1% and SGST 1%. Total deduction of 2% on the invoice value, and interstate supplies 2% of IGST. Sir, this 2% is applied on inclusive of GST amount or exclusive of GST amount? Exclusive of GST. Tax on tax will not be there now. That's why calculated on the invoice value excluding the GST and cess. So exclusive of GST, what is the taxable value that will be there? On the taxable value, this 1%, 2% will be applied. Okay, ma'am. The next point is, what is the threshold limit with respect to this TDS, ma'am? What is the minimum contract value? What is the minimum contract value to apply the TDS provisions, ma'am? The TDS is applicable when the total supply value exceeds 2.5 lakhs and it will be calculated exclusive of taxes. But the point is, individual supplies may be less than 2.5 lakhs, but cumulative value matters. That means the contract value is 5 lakhs. But each invoice is 1 lakh only. In that case, TDS applicable or not applicable? Applicable. We should not go by the invoice value. Invoice value is 1 lakh only. But what is the cumulative value of all these invoices? 5 lakhs, which is more than 2.5 lakhs. In those cases, TDS provisions will be applicable. Next one. Composition scheme suppliers are also subject to TDS. That means just like the normal person, even the composition supplier also, TDS provisions will be applicable to him. Sir, what about the exempted supplies, sir? On the exempted supplies also, TDS is applicable? No, because on exempted supplies, we are not liable to pay any GST. When we are not liable to pay any GST, there is no logic in applying the TDS provisions. Next one is, sir, when TDS is needed to be deducted? What is the time of deduction of TDS, ma? When TDS must be deducted? When the payment is made or credited to the supplier. Simply date of payment is there, na? When entered in the books of accounts or credited in the bank account, whichever is earlier. On that particular date, TDS is required to be deducted. Sir, even on advances also TDS is deductible? Yes, on the advances also TDS is deductible. Sir, when to deposit the TDS? What is the due date of paying the TDS? Next month 10th. What is the due date of payment of TDS, ma? Next month 10th. Sir, if at all the TDS is not paid by the due date, then what is the position? Interest at the rate of 18% will be applicable. Sir, is it possible to pay the TDS by way of ITC? No. TDS liability must be discharged through electronic cash ledger only. ITC balance cannot be used for the payment of TDS. Next one. Sir, after the payment of the TDS, any return is required to be filed by the TDS deductor? Yes. What is the return is required to file, ma? GSTR 7. What is the due date? Next month 10th. That means payment of TDS, filing of the return, both happens on same day. TDS to be paid on next month 10th. GSTR 7 is required to be filed on next month 10th. After deducting the TDS, a certificate will be issued. What is the form number? GSTR 7A. What is the time limit for the issue? Within 5 days from the date of crediting the amount to the government account. And next one. These TDS deductors are required to take the compulsory registration as per section 24. And what is the form number they need to apply? REC 07. What is the normal registration form number? REC 01. Registration chapter, what is the normal registration form number, ma? REC 01. But TDS deductors, special form will be there, REC 07. And for them, PAN is not mandatory. Based on TAN also, they can get the registration. And once the TDS was deducted, under which account it will go? Okay. Recipient is government, supplier is contractor. For the amount that is needed to be paid to the supplier, in that account, let's say 1 lakh is needed to be paid, ma. 2% was deducted, 1 lakh into 2%, 2000 was deducted by this recipient and paid to the government. Now the question is, this 2000 will be reflected in contractor account, which ledger? Cash ledger or credit ledger? Cash ledger. It will be credited to the, ఎందుకని నువ్వు పే చేసిన క్యాష్లో కదా, ఐటీసీ కాదుగా. Automatically the amount will go to electronic cash ledger only. Okay, next one. So interstate transactions, ma, no TDS when the supplier location and place of supply is different from recipient location. What is this? Let's say LOS, POS are there in AP, but location of recipient is there in Telangana. LOS, POS is there in AP, but location of recipient is there in Telangana. In that case, what is the GST that is applicable, ma? Where is the LOS? AP. Where is the POS? AP. In that case, is it intrastate or interstate? Intrastate. If at all it is intrastate, what is applicable? CGST plus SGST. Who is required to deduct that? Recipient. Where is the location of the recipient? Telangana. Is it possible for the Telangana recipient to deduct AP SGST? అంతే కదా. ఎల్ఓఎస్ పిఓఎస్ ఒక స్టేట్లో ఉండి లొకేషన్ ఆఫ్ రిసిపియంట్ కనుక వేరే స్టేట్లో ఉంటే టీడీఎస్ డిడక్ట్ చేయడం కుదరదు. అందుకని టీడీఎస్ ప్రొవిజన్స్ ఆర్ నాట్ అప్లికబుల్. ఎందుకని ఎల్ఓఎస్ పిఓఎస్ ఒక స్టేట్లో ఉంటే, మన ఎగ్జాంపుల్ ఏపీలో ఉన్నాయి, నువ్వు ఏ ఎస్జిఎస్టీ డిడక్ట్ చేయాలి? ఏపీది. ఎవరు డిడక్ట్ చేయాలి? తెలంగాణలో ఉన్న రిసిపియంట్. ఇస్ ఇట్ పాసిబుల్ టు డూ సో? నో. దట్స్ వై ఇన్ దోస్ కేసెస్ టీడీఎస్ ప్రొవిజన్స్ విల్ నాట్ బి అప్లికబుల్. In rest of the cases, TDS are applicable. If it all it is intrastate supply, then CGST plus SGST. If it all it is interstate supply, IGST will be applied. But no TDS when the supplier and place of supply in one state, but the recipient is there in different state. This is the concept with respect to TDS, ma. Next point is, ma, TCS. So who is required to collect this TCS, ma? Applicability of this TCS. TCS applies to the taxable goods or services supplied through ECO. That means whenever any taxable supplies are made through ECO, then as per section 52, TCS is applicable. When, sir? applicable when the ECO collects payment for the supply. Simply, whenever you make the payment through the ECO, in those cases only, what is the concept that will be applicable, ma? TCS concept is applicable. That means, take the example of Amazon. With respect to Amazon, you are paying the amount to the Amazon, and in return, Amazon will pay to the seller. Here, the payment is processed through ECO. When the payment is processed through ECO, in those cases, Section 52 is applicable. Amazon is required to collect the TCS. Okay, ma'am. When the payment is processed through ECO, then only the concept of TCS will be applicable. Here, in our example, when the payment is processed through Amazon, then only the concept of TCS is applicable. Next one. ECO must collect the TCS on the net value of taxable supplies made through it. Sir, what is the rate of TCS? Anybody remembers, ma'am? 1%. This 1% is needed to be applied on net value of taxable supplies. What is meant by this net value of taxable supplies, ma'am? Sales minus sales returns. What are the sales that are there? See, net value is calculated as supplies minus returns. Simply sales minus returns. It applies to both goods and services except those taxed under 9(5). So why with respect to 9 subsection 5, TCS provisions are not applicable? Because under 9(5), ECO is liable to pay the GST 100%. When ECO is liable to pay the GST 100%, then there is no logic in applying the TCS there. That's why with respect to 9(5) ECOs, TCS provisions will not be applicable. Other than 9(5) ECOs, if the payment is processed through them, then the concept of TCS is applicable at the rate of 1%. And responsible parties for TCS collection, who is required to collect the TCS, ma? Every ECO, except 9(5). Why except 9(5), ma? Because 9(5) 100% GST will be paid by the ECO. That's why except those cases, rest of the cases, every ECO is required to collect the TCS on the net value of the supplies. This is interesting line. Calculated at the GSTN level for each supplier monthly. అంటే అందరికీ క్లబ్ చేసి ఒకటే ఉండాల్సిన ఉండకూడదు. ఏ సప్లయర్కి ఆ సప్లయర్కి ఏం చేయాలంటే we need to prepare a separate list. Okay, ma. What is the rate of TCS? 1%, ma, that is interest at 0.5% CGST and 0.5% SGST. If at all it is interstate supply, 1% IGST. Sir, when this TCS is not applicable, sir? If the recipient is unregistered, sir, if the supplier is unregistered, why no TCS is applicable, ma? Because no GST is payable. Composition scheme suppliers, for them also TCS is applicable at the rate of 1%. In olden days, composition suppliers TCS was not applicable, ma. But now after amendment, even composition dealers also, for them also TCS is required to be deducted. What about the RCM purchases? TCS applicable or not applicable, ma? Not applicable. Why TCS is not applicable? Because under RCM, 100% of the GST will be paid by the recipient. Therefore, there is no reason in applying this TCS concept there. Is there any threshold limit for TCS? No. With respect to TDS, there is a threshold limit of 2.5 lakhs. But with respect to TCS, there is no such threshold limit. So, and after that, so what are the registration requirements, ma? TCS collectors are also required to take the compulsory registration as per section 24. And they are also required to file the GSTR 9B annual return, as well as what is the monthly statement they are required to file, ma? GSTR 8. And what is the due date, ma? 10th. And if the TCS is not paid within the due date, then automatically they are liable to pay the interest at the rate of 18%. So these things. These things are actually only for the rankers, ma, who want to study. You can study them when I share with you. These are the amendments, ma. Already you know these amendments, but these are the points you need to keep focus in these areas, ma. Generally, for your attempt, see what are the amendments that are applicable, ma, up to June 30th. What are the amendments that will be there? All those amendments will be applicable to your exam also, unless meanwhile ICAI has released any statutory updates. Up to this point of time, this is the latest statutory update that was released by ICAI. So it covers whatever the amendments that are there up to, not November, June 30th. Okay, but we are conducting in the month of November. Okay, this is the statutory update for GST that is released by ICAI for January 2025 attempt, ma. Okay, unless otherwise a special one was there, in those cases, what is the position, ma? These are the amendments that will be applicable until your exam is complete, unless ICAI released another set in the month of January. Already we are there in the month of November, na? So practically it is not possible to release that. So these are the major amendments. Not every amendment is not covered here. What are the possible amendments that can be asked? I just gave here. So in this supply chapter, the amendments are the important amendments. Already you know them, but I just gave here. Exclusion of casinos, horse races, and online gaming from Schedule 3. What is meant by Schedule 3? 7 subsection 2, negative list of GST. From negative list of GST, these are excluded. Why, ma? Because now they are included in the word specified actionable claims. Now you come to know what are those specified actionable claims. Lotteries, betting, gambling, casinos, horse races, online money gaming. Okay, these 6 are treated as now specified actionable claims. Definitely we are liable to pay the GST. That is the first point. Second amendment you need to keep focus is taxability of food and beverages at the cinema halls. That means in multiplex movie theater, popcorn, coke, all these things, French fries, nachos, like that, they will be sold. Na? The question is here, what is the rate of tax that is needed to be applied on that? Is it restaurant rate applicable or movies rate is applicable? That is the point you need to remember, ma. What is the point, ma? See, supply of the food or beverages in cinema halls are taxable as a restaurant service. Conditions for independent supply and composite supply is clarified. That means the point is when it is treated as restaurant service, ma, if at all they are supplied independently. If that, what is that, ma? That food and beverages are supplied independently, not as a combo pack. When you buy the ticket along with that, then pop, coke, you need to buy, it comes under combo packs. If at all it is a combo pack, what is the rate that is applicable to movie will be applicable to this food also. But when it is not a combo pack, ticket is purchased separately, food is purchased separately, then food is supplied independently. In those cases, what is not applicable, ma? These movie theater rates are not applicable. Restaurant 5% tax rate will be applicable. So that is the point you can keep focus. And this is with respect to warranty replacements, ma. With respect to this warranty, only these 2 lines you should remember. Generally, if you observe any warranty replacements and repairs, already the price is included in the sale price itself. Na? There is no separate charge for that generally, because whatever the warranties, whatever the warranty repairs they will offer you, they will be including all these amounts at the time of its first purchase itself. అంతే కదా, ఫస్ట్ టైం మనం కొన్నప్పుడే వారంటీలు ఇవన్నీ కలిపే తీసుకొని ఉంటారు వాళ్ళు ముసుగులు, సపరేట్గా ఏం ఛార్జ్ చేయకుండా. ఎస్ ఆర్ నో? In that case, no additional GST on the replacement or repair during the warranty period without extra charge. అంటే ఏదైనా రిపేర్ వచ్చినప్పుడు నువ్వు వారంటీ కార్డు తీసుకెళ్ళి చూపించు, వాడు నీకు ఫ్రీగా చేసి ఇచ్చాడు, నో జిఎస్టీ విల్ బి దేర్. ఎందుకని? నో ఎక్స్ట్రా చార్జ్ వాజ్ దేర్. Already it was included. At that time the price was paid. On that price GST is also paid. Therefore again second time there is no need to pay any GST. But if they charged something from you, sir, this one is not covered under warranty, sir. If the phone is actually due to your negligence, any crack happens on your screen, that warranty will not be something. So they will say like this, na? They will charge something from you even in the warranty period. It is taxable. That is a warranty related clarification that is issued. No additional amount is collected, no need to pay any GST. Additional amount is collected, on that additional amount you are liable to pay the GST. That is a clarification. With respect to supply chapter, those are the things you need to remember. And with respect to this one, in the charge of GST, the important points are here. One RCM update, important update is from the examination point of view. Services by the director to the company in the personal capacity not taxable under RCM. Whatever the services that are provided by the director to the company in the capacity of director, in the capacity of director is covered under RCM. If anything that is done by the director in his personal capacity, it is not covered under RCM, it is covered under FCM. Okay, ma. I told you the example. Let's say director has given his bungalow or any building to the company on a rental basis. Here it is not in the capacity of director. Na? In that case, what about this one? In the personal capacity or director capacity has done those things? In the personal capacity, if you have done anything in the personal capacity, RCM is not applicable, only FCM is applicable. Next one. ECOs also, you know the amendment, omnibus. What is this amendment, ma? If the supplier is omnibus and he is a company, supplier will pay the GST. In all other cases, ECO will pay the GST. I think this is a important amendment. You need to keep focus in this chapter. And in place of supply, new clause was inserted, 10(1) CA. It is applicable to over the counter goods purchased over the counter and transported to another state. In those cases 10(1) CA is applicable. Simple story is here. Generally, take the example of Hyderabad example we discussed at that time. Majority people from the rural areas, still for marriages, they will go to Hyderabad for shopping, not for marriage. Okay, for marriage shopping, they will go to Hyderabad in majority cases from the rural areas. Then when they went for shopping, the shopkeeper cannot ask in all these details, why you come to Hyderabad? Okay, that means why you are purchasing in actually in Hyderabad only. So why do you come? Show me your Aadhaar card. Show me your that means address proof, ID proof. Tell me your wife phone number. All these things you can't ask now. So you will not generally the personal details you can't ask. Okay, you can't ask any personal details. Also, you will ask. You will refuse to say. షాప్కి వచ్చినప్పుడు మనం అడుగుతాం, ఏమంటే ఏం చూపించాలి, మగపిల్లల బట్టలు ఆడపిల్లల బట్టలు ఇంతవరకు అడిగేది. సో అందుతో వాడు ఎంత ప్రైస్లో చూపించమంటాడో అడుగుతావు. ఇక అంత మించి ఎక్కడి నుంచి వచ్చారు, ఎందుకు వచ్చారు, ఇవే ఎందుకు కొంటున్నారు, ఈ క్వశ్చన్లన్నీ అడగలేంగా మనం. సో ఇక్కడ మీకు జరిగే పాయింట్ ఏంటంటే, నువ్వు దాన్ని హైదరాబాద్లో పర్చేజ్ చేసి సపోజ్ గోదావరి జిల్లా నుంచి నువ్వు వెళ్ళావు, గోదావరిలో దాన్ని యూజ్ చేస్తావు. దిస్ ఈస్ కాల్డ్ గూడ్స్ పర్చేజ్డ్ ఓవర్ ద కౌంటర్ అండ్ ట్రాన్స్పోర్టెడ్ టు అనదర్ స్టేట్. ఇట్ ఈస్ ఎ B2C supply purchased in one state but whereas used in another state. In that case, what is the POS, ma? If the person is a good fellow and gave you the address, sir, we just came from Godavari district, so and so Rajamandri, then address proof is there. In that case, what is the POS? Rajamandri will be the POS. If the person is like me, then I will say definitely so Pathabasti in Hyderabad. If you want further details, I will give you. I will make a call. He will come and tell you. So, no, sir, that address is not needed. No, understood. In that case, address on record is available? No. Then location of the supplier will be the POS. That means LOS, POS, both will be Hyderabad only. This is 10.1 CA, the amendment. Next one is with respect to ITCMA. Clarification regarding the time limit for ITC availment in RCM purchases. Already you know 16.4 time limit. What is the 16.4 time limit? Next financial year, November 30th or date of annual return, whichever is earlier. Those are FCM purchases. Na? What about RCM purchases? Now there is a doubt. With respect to RCM purchases also, same time limit will be applicable. It does not make any difference between FCM purchases and RCM purchases. In both cases, the time limit that is specified in 16.4 will remain the same. Next one is clarification on ITC for warranty services. ITC is not required to be reversed for warranty replacements or repairs without extra charge. Already I told you, na, extra charge ఏది తీసుకోలేదు అనుకోండి, అసలు జిఎస్టీ కట్టక్కర్లేదుగా, అంటే ఐటీసీని రివర్స్ చేయాల్సిన అవసరం ఏదైనా ఉంటుందా? No need for any reversal. That is the point. All these points you know under registration. I told you in the morning session itself. That means physical verification of business premises without applicant presence is allowed. In olden days, in order to verify the physical place of the business of the applicant must be there. అంటే అప్లికెంట్ ఉన్నప్పుడే వెళ్ళాలి, ఫిజికల్గా వెరిఫై చేయాలి, వాడితో సెల్ఫీ దిగాలి, సీరియస్లీ ఆ సెల్ఫీని అప్లోడ్ చేయాలి వెబ్సైట్లో. Olden days it was that. But now, even though applicant was not there at that premises at that point of time, but still you can conduct the physical verification. That is the latest modification. Next one. Already I told you this point. Time limit for furnishing the bank account details reduced to 30 days. I told you na rule 10A. What is the time limit to submit the bank details to the department? From the date of RC, 30 days, or the first time filing of GSTR1, whichever is earlier. That is the cutoff date to submit the bank details to the department. Otherwise, what will happen, ma? Your RC can be cancelled as per 29 subsection 2. 29.2 చెప్పినప్పుడు చెప్పారు ఈ పాయింట్, అండ్ ఈ పాయింట్ కూడా చెప్పారు, రివోకేషన్. In olden days, what is the time limit for revocation, ma? For cancellation, RC cancel చేసినప్పుడు రివోకేషన్కి అప్లై చేయడానికి what is the time limit? 30 days. Now it was replaced by 90 days and further extension by another 180. So 90 plus 180, total 270 days is the new time limit for the revocation of cancellation. And I told you these persons, now any persons who are supplying the goods through ECO is not required to take the compulsory registration if few conditions are satisfied. He should have the PAN number, and he should restrict himself to one state. He should have only one place of business. These details must be submitted to the department, and he got an enrollment number. That enrollment number is communicated to the ECO. I told you these points in the morning session. Those points again you need to keep focus. And with respect to payment of tax, clarification on considering total ITC balance in electronic credit ledger, interest calculation for wrong availment of IGST. Ante wrong availment of IGST lo, when you are required to pay the interest, ma'am, when that wrongly availed ITC was utilized, when it is deemed that it was utilized, when the monthly closing ITC balance falls below the wrongly claimed ITC, then it is deemed that it was wrongly utilized. కాకపోతే ఐజిఎస్టీకి ఏం చెప్తాడంటే ఓన్లీ ఐజిఎస్టీ ఒక్కటే చూడద్దు, ఐజిఎస్టీ, సిజిఎస్టీ, ఎస్జిఎస్టీ అన్నీ కలపండి. ఈ మొత్తం బ్యాలెన్స్ కన్నా ఇది తక్కువ ఉంటే అప్పుడు రాంగ్లీ యూటిలైజ్డ్ అంటాడు, ఒక్క ఐజిఎస్టీకి మాత్రమే. మామూలుగా అయితే మనం ఏం చేస్తాం, సిజిఎస్టీని సిజిఎస్టీ బ్యాలెన్స్తో చెక్ చేయాలి. సిజిఎస్టీ రాంగ్లీ అవైల్ 10,000 ఉందనుకోండి అమ్మా, మనం క్లోజింగ్ బ్యాలెన్స్ ఓన్లీ దేన్ని చెక్ చేస్తావు, సిజిఎస్టీది మాత్రమే. ఐజిఎస్టీకి అలా చేయొద్దు అంటున్నాడు. ఎందుకని ఐజిఎస్టీని దేన్ని సెటప్ చేయడానికైనా వాడొచ్చుగా. అందుకని ఆ మంత్లీ క్లోజింగ్ బ్యాలెన్స్ చూడాలి కదా, ఏమేమి యాడ్ చేయమంటున్నాడు? ఐజీఎస్టీ ఐడిసి ప్లస్ సిజిఎస్టీ ఐడిసి ప్లస్ ఎస్జిఎస్టీ ఐడిసి ప్లస్ యూటీజీఎస్టీ ఐడిసి మొత్తం కలుపు. సమ్ ఇందాక ఎగ్జాంపుల్ 50,000 కదా మనం అనుకుంది, ఈ మొత్తం కలిపితే 50 కన్నా తక్కువ వచ్చింది అనుకో, అప్పుడు అది ఐడిసి రాంగ్గా యూటిలైజ్ చేసినట్టు. ఒక్కటే తీసుకోకు, మొత్తాన్ని కలిపి తీసుకో. ఐజీఎస్టీ ఐడిసి ప్లస్ సిజిఎస్టీ ఐడిసి ప్లస్ ఎస్జిఎస్టీ ఐడిసి ఇవన్నీ క్లబ్ చేసుకోమంటాం. ఆ మొత్తం ఐడిసి కలిపిన 50,000 కన్నా తగ్గలేదనుకో, అప్పుడు ఇంట్రెస్ట్ కట్టాల్సిన అవసరం లేదు. ఆ ఒక్క పాయింట్ ఎక్స్ట్రా వచ్చింది, రిమైనింగ్ అంతా మీకు తెలిసిందే. ఐజీఎస్టీలో మనం ఏం చేయాలని చెప్తాడమ్మా, మంత్లీ బ్యాలెన్స్ చూసేటప్పుడు ఓన్లీ ఐజీఎస్టీకే రిస్ట్రిక్ట్ అవ్వద్దు. ఐజీఎస్టీ, సిజిఎస్టీ, ఎస్జిఎస్టీ అన్నీ కలుపుకో. అది 50 కన్నా తగ్గిందనుకో, అప్పుడు నువ్వు రాంగ్లీ యూటిలైజ్ చేస్తున్నట్టు. These are the major amendments you need to keep focus ma. It will be shared with you later on.